from the US as it is could moderate. I think from the exporting companies' perspective, now there are 2 points. Either if the stocks get sold out too much, then obviously they'll give some buying opportunities. But as things stand, I think it's better to focus more on domestic oriented companies.
And Rahul, the similar question to you, right? I mean, so as a portfolio thesis, when you are talking to institutional investors, what is it that they are telling you? What is it that you are telling them? Go out and buy some of these domestic focused companies, or wait for dislocations in these global names and buy them at really attractive prices. And are there names within the model portfolio out there?
So, Neeraj, like I said in one of my earlier responses, I don't think our view on a sectoral allocation will change basis this, because at the end of the day, if I am an OEM and I require parts from some country or a company that I'm already doing business with, I'll have to simply realign myself on pricing. I don't think it's very possible to actually shift your supply source overnight, with that much ease. That's not possible. So to that extent, I don't think order books and things like that will be disrupted. Let's not forget that our services exports to the US will counterbalance a lot of the things that will probably happen on the manufacturing side. So to that extent, I think we'd be okay. Obviously, the commentary, Neeraj, that's coming out of the earnings season, especially from the consumer staple companies, is that the rural part of the economy in India is showing signs of revival. Now, whether that is related to the tax incentives that the government announced in the budget, or whether it's the monsoon, or some anticipation that in the Hindi heartland, when we go into elections 3 to 4 months from now, there'll be some dole-outs. But even if you heard Britannia's call yesterday, they are talking about rural having grown in double digits and urban having grown in high single digits. So to that effect, some of that commentary, not exactly in percentage terms, but is resonating across the board from a consumer staples perspective. So when you do have uncertainties globally, I think from a short-term tactical standpoint, it may make sense to enter consumer names. Not that they're going to blow out in terms of earnings, but it's a relatively safer place to hide. The other thing that I said was our services export to the US. I think, people have taken a slightly adverse, stance towards the IT sector in India. I think after the results and the reset of the prices that has happened, that may also not be such a bad place to hide, because as I was telling Tamanna at the start, if there is some pressure on the CAD and you do have rupee depreciating towards 89.90, that will have a bit of a sentimental boost for the IT companies as well. So I think consumer staples and IT as a result of this could be looked at. We'll have to wait and see the fine print on how pharma is targeted, if at all. But there are a lot of sectors like laptops, electronics that he has left out of this. So I think, if you do get some sort of a sentimental reaction in the EMS players, certainly go in and buy them. I think they have very strong order books, very strong return ratios. So no concerns there. The only thing, Neeraj, is I think they could potentially look at, tinkering with the agricultural sector in India, because that is, a pain point that has been there in the Indo-US talks for quite some time. So I'm not too sure about how that pans out. But, if we are looking at that sector, I'd probably be focused a little more on the agrochemical sector in India than the specialty chemicals and ingredients. So names like, say, Sumitomo, Dixon, on the IT side, since you asked for names, something like a Coforge or a KPIT. If you're looking at consumer staples, there's already been a bit of a run in lever, but something like an ITC or a Tata Consumer. And then consumer discretionary, which we've been discussing for a while now, is a relatively safe place to hide. But like I said, I think the major tinkering, if anything, may probably happen in agricultural, defense, and oil sectors. And in that regard, I don't think any corrections or any news flow needs to be a reason to sell these stocks. If anything, I would say the order books are so strong, you could probably look to buy the dips in some of these names like Hindustan Aeronautics, Mazgaon Docks, so on and so forth.
Oh, so that's an interesting view. Buy the dips on defense. That's coming in very clearly. Thank you so much, Rahul, for joining us this morning with your view on what it could pan out. I don't know. I think it's doubtful that India would relent on the agricultural access, but maybe a midway can be found once there is... I think at the very least, what you need is a measured and respectful conversation.
Yes.
So let's see if that happens.
That's the bottom line.
More than anything else. But let's talk about Trent. We're trying to get you all the news this morning, viewers. So we're trying to get you the macro view. We're trying to get you stock-specific inputs as well. And Trent is an important one to watch. It's reported with a resilient Q1. Profitability has met estimates thanks to lower costs. Among other things, salary costs have also gone down. Mahima, is that what's bolstered the numbers?
Yes, Tamana, that's probably something that has bolstered the margins for sure. Overall, it's a strong beat in terms of margin despite of gross margins being under pressure. Revenue came in at 20%, which was something that, is already priced in. The street is already known that since they're already given those commentary in their AGM. PAT and EBITDA has, beaten estimates. And one thing that's concerning is fashion like-for-like growth is in low single digits versus that of mid single digit growth in Q4. In terms of the store additions, that's also slightly lower this quarter, but that's the story for every Q1 for Trent. In terms of the overall numbers, revenue growth of 20 odd percent, profit growth of 24 odd percent, EBITDA growth of 37 odd percent, and margins have improved to 17.5% versus that of 15.3%. Now margins likely have improved on the back of the reversal of cost of inventory provisioning that's happening in the west side stores. There's also lower employee cost, and there's they've also benefited from the automation and technological development that they're picking up, and this is one of the reasons as to why they've stated that employee costs have overall gone up and lower ends have also driven the kind of margin uptick. So this is the overall view of how Trent has panned out.
Okay, thank you for that, Mahima. Jignanshu Gaur joining in. He's from Bernstein Société Group, an analyst who looks at the stock very closely and the space actually more than anything else. Jignanshu, very good morning to you. What did you make of Trent? There seems to be a view that the numbers this quarter are palatable because it's part of a larger strategy to decrease growth and then shift focus. How are you looking at it?
Thank you so much for having me on the call. I would subscribe to part of that view. I don't think any company, especially the one which has been growing so far, so fast, and meeting every other expectation, really decides to stop growing. I think it's a factor of them recalibrating how they want to grow, because some of the steps on store expansion, especially doubling down on the same cities and same pin codes, what we call densification of their network, which they made, may not be playing out as they expected, and top it up with both competition as well as broader economic pickup being delayed. So I think all of these combinations are sort of the part of the structural reason, you can say, why the revenue growth disappointed. And part of it is also one-time seasonal. I think what they also mentioned, geopolitical conflict, led to maybe a 4 to 7 days of lower footfalls, right? Which in the case of discretionary don't necessarily come back. In the case of staples, they will come back. So I think it's a combination of structural and seasonal factors. But we believe that 20% should not be the new normal, even given their high base of almost $1.5 billion, close to $2 billion. They should be able to do better growth in the next few quarters.
So from that perspective then, Jignanshu, are you adjusting your view on where the stock is headed, and what are your targets? What is your call on the stock?
My call has been around 6,500 crore. 6,500 rupees as the share price. It's around 5,300 odd right now. This call is more structural in nature because it is a brand which resonates a lot with a larger part of the growing population. With that population, I think additional category expansion makes them keep increasing their TAM, given that they have a very strong retail footprint already. I think the most surprising part of this quarter, of course, was the costs, right? And it was nobody expected the kind of costs that they were able to showcase. And hence, right now, I don't revise my view, because I would like to typically meet the management, which happens after the silent period is over, to understand the structural drivers behind revenue and cost, given their disclosures in the presentation and the press release are extremely limited. So for now, we stick to our price and our broader view that it is a structural winner in the apparel market in India. The next couple of quarters might see volatility. Frankly, everybody in the street is still trying to understand the business. It's been a short run up for them.
Okay, still trying to understand the business. Among their peers, what is the best pick right now, and does Trent make the cut?
In over broader retail, I would say there are more shorter term triggers possible for DMart than for Trent amongst my coverage. But On apparel business, I think there are very few players who are in the same range as Trent, right? It is clearly standing out. It is one of the few players in India who has broken the barrier of creating a revenue scale of more than 5,000 crores. Very few apparel players in India have done that. In fact, no single brand except them has done that, while Jockey comes close. So, considering that, it has all the flywheel effects and the ecosystem that it needs to become and continue to grow. Whether that growth, I think right now the debate is whether that new normal for growth is 20% or 25%. And that's what sort of is the debate between the valuation, whether it is a 5,300 crore valuation or 6,500 crore valuation. I'm 6,500 rupees valuation. I'm on the latter side.
Okay, all right. Thank you so much, Dignanshu, for joining us this morning. We have a packed morning. Your pre-open rates have settled. Quite a gash on the Nifty is what the pre-open is looking at, but not as much as 110 points at the end of it. This is an average Thursday.
0.5%.
Average Thursday. Average Thursday. We're getting Trump-proof as a market. We're talking about Trump-proof stocks, maybe as a market. Big brokerage call of the day. Let's quickly go across to that. Harsh standing by.
Well, yes, we've seen a 9% correction in Bajaj Finance, and Bernstein seems to suggest that there is another 28% yet to go. They've given this a target price of 640, and they talk about some structural downsides that they are seeing. One, they're saying that risks are more fundamental than just a few quarters. So it's not a credit cost problem only is what they're saying. They're saying profitability pressures are building up. There's deeper structural issues which will constrain EPS growth and therefore limit the multiple at which Bajaj Finance ought to trade. They're therefore breaking this up. They're saying, one, higher credit costs in the near term are a concern. Two, there's no room for improvement in loan spreads even in this environment. Three, there's limited room for OPEX optimization. All of this should likely impact EPS growth. And therefore, they believe that these growth risks is what caps the upside on a Bajaj Finance, not just caps it. In fact, they're saying sell the dip. Despite the 9% dip, sell now. There's still another 28% yet to go.
Harsh, thanks for that. Now, 2.5 minutes left. Shrikant, the pre-open rates have settled. It's a mild one. I know you mentioned that you don't want to touch the index right now, but based on the pre-open rates that have come in, either a Bajaj Finance on which people are still saying a sell, or a Trent which has come out with a admirable EBITDA performance, anything in the large cap space that looks interesting for a trade today?
See, from the large cap space, Neeraj, we like Divi's Laboratories, and today it is opening little higher. In last 3-4 days, if you see its technical pattern, then the stock entered into deep sell-off from the levels of 7,000 all the way to touch the lows of 6,050. At this level, it looks quite attractive. Maybe around this 6,100, 6,050 levels, we should look for adding this stock with a stop loss close to 6,000. I'm not expecting stock to trade below the level of 6,000 so easily. But again, the stock can bounce back to the levels of 6,500 or 6,600. So Divis looks good. For Bajaj Finance, we are bullish, but at these levels, it is very close to its resistance level of 894, 900. In case if it falls back to the levels of 850, then there I think the risk reward ratio will be much better for traders. Buying at this level is not advisable.
Shrikant, just on some of the autos, Bajaj Auto and Hero, would you have a take there and want to maybe come in basis their numbers? You've had some auto retail sales as well, and inventory levels are remaining elevated. That's what they're saying. But overall, sort of bump up ahead of festive season may be expected. What would you look at on these counters, especially the two-wheelers?
No, see, since last 2 months, both these stocks recovered very well from their lows. Bajaj Auto is falling, but it is falling gradually. It is falling to certain levels, and again, it is bouncing back. Hero Motors, in fact, it is into breakout mode today. I think because of these quarterly numbers, we may see negative reaction. But close to the levels of 4,400, 4,450, which is very close to the opening levels, I think. There we should look for taking some long bets on Hero Motors based on technicals, because it is like showing a lot of strength, and again the stock can move back to the levels of 5,000. That's my view based on technicals. We also like Bajaj Auto, but it is if I have to choose any one from both of these, then I think Hero looks much better.
And Hero has done much better in the last few days as well. So that's the interesting piece. Okay, Shrikant, stay on. We'll take in opening thoughts from you once the market opens, just to get a sense of what should the positioning or what could the positioning be. But 11 seconds left for what potentially could have turned out to be a tumultuous Thursday, but it's not showing that. 0.5% in the pre-open is almost any Thursday. In fact, less than that right now. A very mature reaction by the markets, some of which has already been baked in. Remember, post the Liberation Day tariffs, this level, 24,500, has been tested about 4 times by the Indian markets. And from all those 4 times, we've bounced back. So it's very crucial also to keep this in mind. Let's pull up the, IT space is okay. Mid caps and small caps, if we can, to just see what's happening there. 0.5% for the small cap space. Mid caps, 0.5%. It is not bad at all. The really good reaction by the Indian market. Let's pull up the heat map and show you what's moving and what's not. Naturally, there's a lot more red. Bajaj Auto, Trent, interestingly, is down 2.5%. By the way, they have done what they had mentioned in the con call, and in front of the margin front, they're a bit better. But maybe the commentary is not something that the street has liked. Bajaj Auto is down. Kotak Bank, the block deal, and Eternal, the block deal candidates, both of them are down. Reliance is down. BEL, Adani Ports, Shriram Finance, Tata Motors. So that's the list of names which are cooling off. There's a bit of a bend towards defensives, right? You can see that. Cipla, Nestle, JSW Steel pegs in out there, which is interesting. But then ITC, Reddy's. So Pharma too is not taking it on the chin right now. I mean, exempt maybe, and that's what's doing okay. Maruti and ICICI Bank plumb up the rest. So net, a very okay start. No problems whatsoever. The top 2 losers out of the top 3 are actually block deal candidates and not tariff disrupted names, but maybe those feature in a list of stocks that Tamanna might have.
In fact, that all top 3 are not tariff disruptive. You can argue that Bajaj Auto is because of its numbers more than anything else. Let's take a look at the broader markets and how they're doing this Thursday morning. Are they getting really hit by tariffs? Doesn't seem like it. I mean, this is our own pain that we've seen over the last several sessions. The small cap 250 about a percentage point down, the mid cap about 0.5% down. Let's pull up the sectoral heat map for you as well and pull up what's happening there. Yeah, the broader markets is where the pain is, about 0.75% down now. Nifty Energy, you could see that with a, the question now is that if India moves out of Russian crude, what is the impact on OMCs? And all of the experts that we've been speaking to since morning saying that yes, there will be a clear margin impact on some of these oil marketing companies. So that's perhaps some of the pain you'll see. Metals also coming off, so is Realty. Realty is second day in a row and seems to be deeper issues than anything else. But then again, these are domestic facing sectors as well. What's working? I mean, Nifty FMCG barely, Nifty Healthcare, Nifty Media. So yeah, there's no doubt that there is some pressure this morning on the markets, but not as much as would have been expected. Let's look at the India VIX for a second. That's something that we should see because that will tell us really the extent of panic. Under a 12 and just about less than 2%. Right now. In fact, the India VIX is in the negative. So it's quite the opposite of any volatility fears that we are seeing. Let's look at specific stocks and results impacts is what we're picking up. Hero and Trent is what we saw, but let's bring it back. I'm also looking at a Hutco. I'm looking at a Fortis. Hutco actually pretty decent set of numbers and seems to be doing well. Hero is racing ahead right now. Lupin is looking strong as well, and we're seeing that impact coming in. You had exits, so let's look at Anfin exit impact on Eternal. If there is, you would see some impact, but very, very barely, I would say, recovering quite nicely. Kotak Mahindra Bank, because of the stake sale, it's not such a huge discount, so less than 1% down. Okay, tariff impact. Few textile stocks in the pre-open session that were feeling some heat. Raymond could also be because of results and also because of tariffs. 3% down on it. KPR Mills about 4.5% down right now. Welspun, Vardhaman, some of the others that we should look at as well. Welspun about 2.5%, Vardhaman 2% down. Gokuldas Exports, let's look at a Prince Pipe also seeing some pressure today. JSL also under pressure. So these are some of the stocks, but look at them, between 2 to 3% down. Prince Pipes is because of results, by the way. It's nothing to do with tariffs. That's about 5.5% down. Not a great set of numbers. So it was for Sula. So maybe you'll see some of those pain points continue. Godfrey Phillips is something that I want to say. Whether it continues to buzz, well, no. Some pullback happening in Godfrey Phillips. It was up in the pre-open session, about 4% down. You know, yesterday, Neeraj, I saw a very interesting post that someone put out कि क्या ज़माना आ गया है, सिगरेट वाली कंपनी ऊपर चल रही है और फार्मा कंपनी, दवाई वाली कंपनी नीचे चल रही है. Then that's the market for you.
Yeah, and maybe सब भाव की point है, because वो दवाई वाली company last 6 महीने में कितना चली है, वो भी interesting है. But it's an interesting post for sure. But the BHEL is down 4% too, so that's the interesting one. For all the fanfare around it, the numbers continue to evade it. Shrikant, opening thoughts? It's a very measured reaction. Even the IT stocks are very, very quiet, just about 0.27%. Maybe not an index, maybe on specific names like BHEL or a Godfrey Phillips or a Bharat Forge, which are active too. Thoughts?
Yeah, Neeraj. Yeah, it was expected because the GIFT Nifty was clearly indicating us that we may see opening somewhere close to 50-60 points lower as compared to its previous close. Also, if we consider the overall news flow, then because of this news flow, the street was like quite cautious. And most of the time, whenever VIX is close to 10-12%, we see that there is a lesser interest from traders to take any specific call on any direction. So because of this VIX, because of this low put call ratio, because of highly frustration amongst traders, investors are highly cautious. That's the reason we are seeing markets are trading at almost, I'm going to say, at same level since last 4-5 days. And that is why the reaction is not there. But yes, 24,450 is equally important. In case today, by the closing time, if we see the market is closing below the same, then there we need to be careful, because then in that case, the chances of falling 300-400 points more is not ruled out. Today, in case if we recovers, then it's good. Then again, the market can move back to the levels of 25,800. That's my view. But I'm not expecting any major rally in the market. We need to be more and more stock specific. We like divis. We like BHEL. BHEL is down today based on its quarterly numbers. Yeah, technically also the stock is down. The next level to watch out for would be 210 or 15 sort of levels. But Hero Motors did well. It recovered very well from the lows of 4,400. We also like DMart. If we compare that with Trent at these levels, so relative outperformance is much better in DMart. Currently, it is around 4,250. I'm expecting this stock to move back to the levels of 4,500. But in case if we see further more activity in the overall space, then the stock may again go back to its previous size of 5,000, 5,500. Finally, I would like to state that Eternal, there also we are bullish, and today's fall will be an opportunity for traders as well as investors to take a long trade on it.
Stop loss on Eternal, Shrikant?
Yeah, for positional traders, they can keep a stop loss around 280, but I am expecting this stock move back to the levels of maybe 315, 320.
Okay, so up to 350 on an Eternal. Thank you so much for that, Shrikant, for joining in. All right, we're now speaking with Nilesh Shah, MD Kotak Mahindra Asset Management. Nilesh bhai, thank you so much for your time with us this morning. And I think this is an important morning to hear your voice, because look at what Indian markets have done in the last 7-8 minutes of trade. They have literally shrugged their shoulders and said, so what? 25%, 50%, kal aap 100% bolenge, 150% bolenge. What do you think is happening? Are markets not taking this seriously, or realizing that this is a bluff in a negotiation tactic?
So it's always difficult to predict America. As Henry Kissinger put, it may be dangerous to be America's enemy, but to be America's friend is fatal. Their pro-policy unpredictability is making market guess. And right now, market is guessing that US and India have same long-term strategic interest, and eventually better senses will prevail. These tariffs will be effective 21 days from the ordered pass date. which is about 27th of August. And on 25th of August, American team is coming to negotiate trade deal. So as of today, market seems complacent about this tariff announcements. They believe better senses will prevail and US will recognize that European Union, US itself have been trading with Russia. It's not just the Russian oil which funds Ukraine war effort. It is also the Russian gas which Europe is buying. It is also the Russian chemicals, fertilizers which America is buying. So market is hoping that better senses will prevail. The strategic interest of India and US will overcome current challenges. Whether this guess is right or wrong, time will tell. As डॉन को समझना मुश्किल ही नहीं, नामुमकिन भी है.
और डॉन की तलाश 11 मुल्कों, पुलिस तो नहीं बोल सकते हैं, बट अ लॉट ऑफ पीपल आर सर्चिंग फॉर द राइट आंसर व्हेन इट कम्स टू डॉन्स पॉलिसीज. नीलेश भाई, so well put. From cricket to movies to a lot more. But so, you know, you've seen various, so one would argue that nobody's quite seen something like this, but you've seen various such episodes, Nilesh bhai. Good morning to you. How do you wrap your head around what would you as an investor do in a time like this, which is a lot of uncertainty, but with some experience of how these uncertainties when it comes to Donald Trump tend to go away in a hurry as well?
So Neeraj bhai, first of all, we have to appreciate that we are not gods, we are human beings. There are things which are beyond our understanding. So first is to control your behavior and not react to every noise. This is partly also coming from techo trade. Trump always chickens out. Second, you also have to look at longer term picture. Undoubtedly, we have been put into crisis several times by world. For example, in the 70s, the food grain which was coming to India was stopped because we waged Bangladesh liberation. Now that pushed us to become self-sufficient through Green Revolution. In 91, because of our own folly, we had to pledge coal to raise resources. And then the whole country came together, and today we have top 5 FX holder in the world. So as an investor, I still believe that when Indians are pushed into the corner, they will bring out their best, like Mohammad Siraj did at Old Trafford.
This point that you made, Nilesh bhai, and I want you to elaborate on it a little, because you are also, of course, a member of the Prime Minister's Economic Advisory Council. And we've been hearing this for the last few days, that use this as an opportunity. And aapne bhi yahi baat abhi kahi. What do you think India needs to do right now, where we sort of pad up and get stronger ourselves, so we don't have to take this kind of bullying?
So first, we have to empower our entrepreneur and accelerate the ease of doing business. There is still Inspector Raj prevailing, where numerous rules, regulations, and compliance burden end up burdening entrepreneur. For example, we still have law which requires spittoons in factory, which prescribes fonts for wage slip and the ink in which it can be printed. We have rules which says you have to maintain health records of canteen cooks. Now, these are all unnecessary rules and regulations which empower inspector to constrain our entrepreneur. The second, as Honorable Prime Minister mentioned, vocal for local. India in some sense got independence through Swadeshi movement. But today our trade deficit with China is in excess of $100 billion. In fact, in the entire world post-US, we have run the second largest deficit on the trade side, goods side, of almost $200 billion plus. How do we encourage Swadeshi? And finally, in today's world, there's no substitute to innovation in technology. There are many instances where our global capability centers, our talent is creating innovation in the world. How do we encourage this Indian talent to do these things in India? So between vocal for local, accelerating ease of doing business, I think we will be able to create a resilient Indian economy. And today, if you read the tweet of Mr. Anand Mahindra, he also explained this very lucidly, how unintended consequences can help.
So for investors right now who are watching, Nilesh Bhai, and they could be mutual fund investors who are wondering what their SIPs are doing for them, what their returns are doing for them. It could be people who are actively trading in the market and seeing this uncertainty, wondering whether they should sit out or use opportunities. What would be your advice to them?
So the traders, I will always wish them the best. You are not interested in your money. You want to give it to government by way of STT and maybe to some smart people by way of losses. Please be my guest and follow the dharma of stop loss. Don't trade beyond what you can afford to lose. In today's world, the competition is between an inexperienced speculator vis-a-vis an institutional investor who has better connectivity through co-location, who has better algorithm, and who has better analytics. The fight is unequal. And as SEBI mentioned, 9 out of 10 people speculating in FNO loses money, but all 10 out of 10 believe that they are going to make money. To the investors, we have always said, please follow the dharma of asset allocation. This is a fairly valued market, and you must moderate your return expectation. We are unlikely to see 20-25% return, which we got in small and mid cap in last 5 years. The inflation is likely to be in single digit, low single digit. The equity returns are unlikely to be in double digit like last 5 years. So follow the dharma of asset allocation, maintain equal weight to equity as an asset class, focus on quality, and stay invested for a longer term with moderate return expectation.
And, in terms of sectors, Nilesh Bhai, a little bit of insight that if you can share with us. Clearly, those that are, companies that are dependent on exports to the US, pharma, textile, chemicals, shrimp, etc., will be hit. So if you have to look at picks or specific sectors which you should look at, what is the filter that you should apply right now?
So essentially focus on domestic economy and sectors which are not impacted by the tariff. Clearly, on the domestic side, monsoon has been good. Reservoir water levels are higher than 10-year average. The Kharif season sowing has been well ahead of last year. This will support rural economy. Rural consumption is anyway better than urban consumption for last almost a year. With tax break coming into play, potential GST rate rationalization, potential petrol diesel price cut if it happens, the rate of the burden of EMI on borrower has come down by a percentage point as interest rates have been cut. And finally, 8th pay commission coming into play. This will support consumer discretionary space as well as financial services space. Some of the savings will be spent, some of the savings will be invested. So between consumer discretionary, which is a lot domestic, and financial services, which is also domestic, we should see outperformance coming over next 18 to 24 months.
All right, so those are some of the things to keep in mind. Thank you so much, Nilesh Shah there. Meanwhile, by the way, Trump has put out that tariffs will take effect at midnight tonight. Billions of dollars, largely from countries that have taken advantage of the United States for many years, laughing all the way, will start flowing into the USA. Of course, so those tariffs come in. I mean, look at the markets right now. I'm going to go across to Manish Sonthalia in just a second. Look at what the Nifty has done and the kind of recovery that we have seen. This is the market saying that we're doing our own thing, Mr. Trump, and you can keep frothing with one thing or the other. Manish Sonthalia joining in right now is Director and Chief Investment Officer at MK Investment Managers. Manish, very good morning. I think what will be really interesting to understand is how you are looking at this? Are you looking at it as an opportunity? Are you looking at it as a time to duck and cover? What is the investment philosophy in the middle of all of this turbulence?
So Tamanna, a known uncertainty is better than an unknown uncertainty. So now it is a known uncertainty and 25% is no longer the base case, it is 50%. Having said that, I think we have to look out slightly into the future. And you can say that we are making a base case assumption that these tariffs are not going to stay at these levels, likely to come down into the future, because US has got significant investments into India, particularly in the area of electronics manufacturing, particularly in the area of specialty chemicals or let's say auto components, etc. Where these investments will be subject to these 50% tariffs. I mean, it looks unlikely. So, my base case assumption is that probably in the next 3 or 4 months, you would broadly be seeing these tariff rates come down to around what other countries would be paying. And in that backdrop, and given the fact that a lot of these uncertainties have got priced in, I would look to basically buy these markets. I don't think there's too much left on the table as far as uncertainty is concerned. Of course, you should be focusing on areas of domestic presence as opposed to exports. That's likely to be the case, but nothing moves the needle significantly in terms of swinging the pendulum from a bullish stance to an extremely bearish stance just because these numbers have come through. For the simple reasons, and you could say that there could be a second order impact because exports and manufacturing are very important for any economy. Direct impact as of now is a 0.5 percentage point on the GDP that could be mitigated through policy intervention by the central bank as well as the government of India. So this is where we are currently, and it's likely to be a pick and choose. I would be looking to buy the markets. I'm not so nervous about the markets given the fact that these sort of tariffs have come through.
Right, that's interesting, Manish. Good morning, Hiral on this side. The consensus that we're picking up also right now is that one should be looking at buying opportunities in this kind of a market. So Manish, taking that aspect into consideration, you said, yes, domestic oriented sectors is your go-to place. So anything that is insulated from Trump tariffs are the sectors. What would be your top 3 picks in terms of sectors that you would advise investors to go, taking into consideration the valuations as well, because you just have the first quarter earnings that have come in. So if you have to look at both these combinations, where would you go?
So, coming to first quarter numbers, they haven't been that bad as it's being made out to be. I would believe that Nifty 50 earnings growth for the companies that have still reporting the numbers, or companies which have reported the numbers so far, has been around 6 to 7% profit growth on a YY basis. Mid-cap companies are double-digit 13 to 14%. Small-cap companies, financial sector is in a stress because of the MFI. But if you were to exclude lending institutions in the small-cap space, even out there, the growth in net profits on a YY basis has been double-digit 15 to 16%. Given all of this, I think consumer sector looks to be placed in good stead as we progress into the second half of this year, given that there's further decrease in inflation trajectory anticipated in the second half. So 2% inflation could come down to 1%. That helps consumption at the margin. You have very solid numbers come out of capital market entities, the financial services, non-lending institutions, and they would be somewhat in the nature of platform companies, not getting too much of impacted by whatever is going on in the economy as a whole. I would look to buy NBFCs, which have been placed in good stead. I would look at CDMO companies. They won't be getting impacted that big. And even in the export side on the technology front, I think mid-tier IT companies, given the valuations and the order book position, are looking good at this point in time.
Manish, just reiterating one point very quickly, you said, I'm looking to buy. I'm not feeling nervous. When you're looking to buy, would you also be looking at what the corporate performance would be? What are the kinds of companies? You've mentioned some already, but what are the kinds of companies that you'd stay away from right now?
Very high valuation, because valuation is the only thing that you should be worried about vis-a-vis the growth. So first of all, if markets Nifty 50 is trading at, let's say, 2 times price earnings growth, you would be looking, and I would be looking to buy basically companies having earnings growth better than Nifty 50 and valuation trajectory lesser than Nifty 50 PEG. If that be the case, across market cap, there's ample margin of safety. So I think the yesteryears or last 2-3 years, high performers in railways, roads, and defense are the vulnerable ones because there could be government spending cut. Thanks to a slowing economy, that could hurt the capital goods players because valuations are extremely full. Even otherwise, in all of the companies vis-a-vis the growth, that 3 price earnings growth multiple is very, very sacrosanct, time tested. I will be looking to just evaluate all the performances of companies that are to be bought vis-a-vis that valuation benchmark and then, maintain the portfolio.
Thank you so much, Manish, for joining in today and giving us that voice of confidence as well. And I mean, these are people who look at it for what it is, not sentimental or anything like that. And they're looking at safe spots in the markets. Markets also showing some recovery. All right, let's talk about TD Power now. TD Power Systems in focus on the back of Q1 earnings, which witnessed strong double-digit growth all round. Before we speak to the management, Nikhil Kumar, next, let me get in my colleague Anushi, who's breaking down the numbers for us.
Hey, morning, Tamanna. So what we are looking at is a strong set of numbers for TD Power Systems, and this is across the key metrics that we are looking at. Revenue showing about 36% growth. You've seen margin expansion as well as net profit seeing about a 42% of a growth. Now, if we are looking at the key takeaway with this is, the company mentioning that they may expect an upward revision in terms of where the FY26 guidance is concerned. Even exports growth is to be led by the energy transition towards more renewable side of the business. In terms of how the order book positioning is looking at, order inflows were up 32%, while the order book stood at 1,468 crore, which brings the book-to-bill ratio of 1.1 times, which is what the management expects to keep the rate at. In terms of how the exports and the domestic business fared out, export about 20% of growth, while domestic saw about a 62% of growth, and the growth from the export is likely to continue. But even in domestic, wherein they were seeing marginal growth, they're expecting large tenders to come in place in the second half. So that is something that we should be watching out for, and that's the outlook that we're building for TD Power System for now.
In fact, Nikhil Kumar is with us. He's the MD of TD Power Systems. Seems like a strong quarter, Nikhil. My question is that your inflow, your order guidance seems to have been achieved, 1,600 to 1,700 crores. Are you crossing this guidance? Are you upping your guidance? What's next?
Yeah, so I have to give a revised guidance. We're certainly going to give an upward guidance. I'm going to give this exact number after the next quarter, but it's certainly going to be more than the 1,500 crores that we have already guided to the market. It could be in the region of, I would say, 1,600 plus crores for this year.
And where is that confidence coming from? If I look at your Q1 as well, what has really worked for you this quarter and what has bolstered the margins most importantly?
See, we have diversified product ranges and we also have been supplying to various markets all over the world. So we're not dependent on a single market. For us, Europe has been particularly strong. The US market has also been very strong for us with the data center and artificial intelligence server market, which requires huge amounts of power generation. And we also got a lot of orders out of India from the hydro refurbishment sector in the last quarter. So, I see these trends continuing. And I don't see a problem for us right now to hit our numbers and exceed our numbers according to the rate of order inflow and the pending order book that we have on hand today.
Nikhil, good morning. Hiral on this side. So that's with regards to the order book, the order inflow and pipeline also seems to be strong, and a revenue guidance of upwards of 1,600 odd crores, which you will revise later on, is something we need to wait and watch. But with this, if you have to look at the capacity utilization, you're operating at full capacity. So what is the status of the new manufacturing facility which is in Karnataka now, and how much will that aid in terms of the revenues?
So the new capacity will come progressively on stream from September this year and will be fully in line by about December this year, maybe January this year. And we can go up to more than 2,000 crores of this capacity, which I believe will, we will be hitting very good numbers next year also, looking at the current year, current rate of order inflow. So After that, we have already started, working on using techniques like Kaizen and Japanese methods to see how we can push the capacity to 2,500 crores within the existing facilities. So I see, at least for the next 2 more years, no further investments. We'll be flogging the assets.
And when it comes to the domestic markets as well, in the past, the domestic order inflows have been slightly muted. Strength has always come in terms of the export market. So if you could help us understand now, how are you seeing that recovery in terms of the domestic markets, and do you think it is sustainable from here on?
See, the domestic market for us is basically 2 major sectors. One is the large steam turbine business for large captive power plants for industrial applications, like a large cement plant or large steel plant, which requires, let's say, 30, 40 megawatts of power for captive use. That business is growing steadily at around 10 to 12% per year. It's not, I think it's very good that we have this kind of growth in the economy where we see steady growth year on year rather than go through boom and bust cycles. On top of that, there are large hydro refurbishment tenders for, in the market. And if we win even 1 or 2 of those really bump up our numbers to a large extent. So what's giving us actually the gravy is these hydro orders. The steady growth is coming from the captive power plant steam turbine business.
Thank you so much, sir, for speaking with us and joining us live from Germany for this conversation and speaking with us exclusively this morning. TD Power, is confident to up its guidance. It's been a strong quarter for them as well. And that was the management's view. I mean, we're talking about another company now with a very strong order book and in focus on the back of its Q1 earnings. The revenue of the company has surged up to 40% on the back of energy and oil and gas segment. Now, before we speak to the management of Azad Engineering, let me go across to Anushi, who is talking about how the street is viewing this counter and what the numbers showed.
Thanks for that, Tamanna. So, as you mentioned that it was the energy and the oil and gas segment-led growth for Azad Engineering that we are looking at. The company clocked in a revenue growth of 39%, and this is with the margin expansion also to the likes of 35.8% as compared to 33.5%. Net profit seeing a 74% of growth as well. Now, this is also an export-driven growth that we are looking at, with exports seeing a 39% of an increase as compared to domestic seeing about a 15% of an uptick. Margin expansion also led by changes in inventories that we took place, but of course focused now being on the order book as well. Order book exceeded the mark of 6,000 crore as of June 25 that we are looking at. In fact, if you look at the key con call highlights also, the company has maintained its top line growth guidance of 25 to 30% for FY26, and for EBITDA margin it is seeing margins between the likes of 33 to 35%. So that is something that is interesting to watch out for the counter. The capex plans and the new facilities coming on stream is something that we should be quizzing the management about.
Okay, Vishnu Malpani joining in. He's Executive Director of Azad Engineering Limited, now speaking with us on the numbers, and strong set of numbers. This is, can you explain to us, Mr. Malpani, is this a change in mix that has worked out? What has helped in terms of margins as well?
First of all, thank you so much for having us on the show. No, I think Azad has been delivering since the last 20 quarters. We've given our guidance and beaten our guidance, and we've been quite confident about our revenue projections and how we're going to go, be scaling up our business. So what you see this quarter is a result of meticulous planning that we've been doing for the last so many years. And this was planned, and I think in the past few interviews that we've done, we've always given a guidance of 25 to 30%, and I've always beaten the guidance from that perspective.
What is your margin guidance now sitting at 35, 36%? Is this the new normal for you, Vishnu?
No, so we've always communicated that our EBITDA margins are going to be in the range of 33 to 35%. In fact, this quarter we were able to beat the guidance from that perspective. So the kind of initiatives that we are working on, capacity expansion, operational excellence, should lead to margin expansion over the long term as well. So this is not where we're going to stop. I think Azad is going to continuously push boundaries in terms of the numbers that we're talking about.
export book right now? Because a lot of the growth has come from exports, and which regions is it in? I'm just trying to understand if there is a tariff impact here for you.
Yeah, so our business has largely been export since inception.
Yeah.
We've always had about 90% exporting to over 17 countries. Now, talking about, I understand what you're trying to, get to. So our exposure, if you're understanding from that perspective, we've exported to US in the range of about 35-40%. But I think what's important to understand from a tariff perspective is, it's important to understand how competitive we are with respect to the other players. So if you look at our closest competitor, say China, we don't compete with anyone in India. But China has a tariff of today about 30%, and India, let's say, last night, whatever came up is about 50%. Azad has been more competitive than China to the extent of 20-25%. Now, even at that level, we will still be able to compete with China, and the landed cost of our products in China in the US will still be better. Having said that, I mean, that is just one aspect where Azad is still competitive. The important part is that the products that we are manufacturing are extremely essential. And these are not products that, can be resourced, just, in a jiffy. It takes several years to qualify this product and then to start supplying. So we don't see that as a risk. Any changes from this perspective, whether it is, tariffs to the tune of, 25%, 30% doesn't impact Azad at all. Even if it goes to, let's say, 75% today, we wouldn't be surprised, but shouldn't impact our business at all from that perspective. And our competitive...
One sec, Vishnu, we just need to get a little deeper into this. You're saying 35 to 40% of your export book is from the US? Did I hear that correctly?
So we don't look at our order book from a region perspective, right?
I'm sure now you've started. Everyone's going back and seeing how much they're exporting to the United States.
No, I think, see, from our perspective, we're working with global OEMs that have factories all over the world.
Sure.
So, right. So when we work with, say, GE, Mitsubishi, Siemens, Boeing, Eaton, all of these global customers. So for them, it's about, whether we're supplying to the US or, to Europe, they would be deciding where the products are going to be shipped at. Our scope of manufacturing is always X factory or X works, FOB Hyderabad. So from that perspective, we don't get impacted. This will get absorbed from a customer's perspective. And it is important to note, Tamanna, that we manufacture essential products. Even during COVID, right? We were in a similar situation where the world was wondering whether, everything's going to get stopped. Most companies were shut for about 6 to 8 months. Azad was still working back then because we were making essential components that are producing electricity today, that are running aircrafts, etc., around the world. So we are a part of an essential industry where, these notifications should not impact our business at all.
So Vishnu, from what you're saying, from your exports currently, whatever you're sending out, nothing is going directly to the US. It's going to clients, and then a finished product is going to the US, and hence you don't get impacted. Is my understanding correct?
No, so let me correct that completely, right? So we are working with, say, global customers. Last year, we'd supplied about 40% of our products were shipped to the, 35 to 40% were shipped to US. But our customer decides where they want to pick up the products, because the scope of manufacturing for us is they leave the material here, we manufacture it, keep it at our doorstep, and the customer decides to pick it up from there, whether to US or to Europe, to any of their factories, they decide. So it is anyone's guess that if this is to get enforced tomorrow, our clients that have factories around the world could source our material from, Hyderabad to, say, Europe, and then, assemble it and then ship it to their customers from there. So we don't see that as a major impact, especially because we are a part of the essential, we make mission and life critical components. And, our competitiveness from China, that's also important. We today are 20-25% more competitive in products from China. Sure. So, and the only geography that's competing with us. So even at that in mind, we shouldn't have any impact at all.
Okay, Vishnu, so if you are at 39% in Q1, but guiding to 25% for the year, are you expecting a slowdown because of the global landscape, or are you being conservative in your guidance right now?
Conservative in our guidance.
So you reckon that you could actually do more, but you don't want to promise right now?
Yeah, I mean, that's true. I think we've always done that, right? We've spoken in the past as well. We've always been conservative in what we want to share, but we've beaten our guidance. Even this year, our internal targets are higher than the guidance that we are giving, and in all likelihood, we should be beating our guidance by the end of this year as well. We are very confident. I think we are more bullish than ever. In the business, I think good things are happening for us. Our capacity is coming up 10 times more than what we have right now. So, and we have an order book which is 8 times of our sales. So we are going stronger.
None of one more question from mine. None of your eventual customers, if whoever it is in the US, is talking of going away and trying to talk to your neighboring country competitors. None of them. You're saying they're all standing still with you right now.
I mean, see, it's important to understand that OEMs have spent so many years trying to look for credible suppliers, build them over 10, 15, 20 years. Now, it is going to be extremely difficult for them to, redo their supply chain, right? The supply chain resilience is about, if you looked at the OEMs, they were looking at supply chain consolidation. They were looking at de-risking their supply chain from any of these geographies that today have and are looking at credible suppliers. So Azad is positioned right there as, as a high growth supplier, as a supplier that has been able to manufacture critical components, at a rate that we are doing. So we don't see any risk from that perspective.
Okay. Thank you so much for speaking with us, Vishnu Malpani, Dev, Azad Engineering. And it's all about tariffs this morning, one way or the other, even in our earnings conversation. But I think it's important to point out to our viewers what Prime Minister Modi has just said. And we'll play out that soundbite for you in just a second. But let's get those lines up on screen as well, where Prime Minister said, interest of farmers are a top national priority. India will never compromise on the interest of farmers, livestock holders and fishermen. I know I'll have to pay the price for it personally, but I'm ready to do it for the farmers. This is a very, very strong statement because it's the first comment that is coming in after this tariff tirade and Trump increasing tariffs 50%. We've been talking this whole morning that what the real reason is. It's because the eye is on India's agricultural sector, which has been a very closely guarded and protected part of this economy for obvious reasons. You still have a huge, I think 50-60% of the economy, one way or the other, of the population involved in agriculture, directly or indirectly. Can you expose them just because Trump feels like it?
No, it shouldn't happen. It didn't happen even in the 3 years of a negotiation in the UK, when we signed the UK FTA. Those are the sectors that will kept adrift. And if the same thing can happen with the UK, which is also a very large economy, why can't there be reason seen by yet another economy or the country, which is the United States of America? And like we've said, some bit of this is irrational conversation as well with the US. I mean, the reasons that are pointed out, etc., Russia oil isn't quite kosher. So yes, I like the statements. I mean, India has now yesterday taken a firm stand. In today's messaging, Prime Minister Modi is taking that firm stand as well. This is all very, very welcome.
It's welcome, and to add to this, the other aspect that we need to consider is that probably India is also confident that the trade-off that they will have to do with the US is not something that they will have to give up on. So I think that little level of confidence from a trade perspective is what the country has. And that's the reason why they're able to even get to this barter. And I think this 20-day window that everyone is now talking about is going to be taken into consideration for an arbitrage opportunity over here. And that's what traders will do now. I think this does become a very positive way of looking from a market's perspective as well. And I think that's the commentary that we've been hearing, that this is an opportunity now, even for traders to come in and buy into the markets from an investment perspective. And from a trade perspective, there could be negotiations, and India does not need to worry, I think.
No, it's going to be tough. There's no doubt about it. But the fact that the red line has now been clearly drawn, we can talk about it. I mean, if I were to guesstimate on the basis of this, maybe the compromise that India will come in with, because you have to bring something to the table when you negotiate, will be, okay, we'll reduce our imports of Russian crude.
And buy US crude.
Okay, and we'll buy some US crude. It actually takes as much time. It will be more expensive to transport, and then maybe there will be some subsidies there. I mean, there are whole teams of people who are really good at these kind of negotiations. But I think it's made very clear that, your dairy, your GM foods, your crops are not going to flood our markets and do this to our farmers. I think that has been made very clear.
Yeah, and this is again a very strong message, you know, in terms of the way the government is looking to protect as well, right? So again, national security is something which is of prime importance and not wanting to trade off anything against that.
All right, we'll take a very short break. We'll come back, we'll play out that sound clip from Prime Minister Modi for you. After the break, we'll also get you the conversation with Bharat Forge in focus after his results. Action-packed day this morning on India Market Open. Don't miss it.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know?
As we spoke before the break, Prime Minister Modi has reiterated that India will never compromise in the interests of the farmers. Listen in.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है। किसानों की आय बढ़ाना, खेती पर खर्च कम करना, आय के नए स्रोत बनाना, इन लक्ष्यों पर हम लगातार काम कर रहे हैं।
Nature of the conversation that we had with Bharat Forge, while we spoke to them on the numbers, we also spoke to them on this particular issue. Listen into a slice of the conversation that I had with Amit Kalyani. Before we get into talking about all things Bharat Forge, just a word on what do you make as somebody whose capital is invested into business, who is a stakeholder in multiple things, about the way this tariff war has become as ugly as it has?
You know, I think it's very unfortunate that we are at this point, because if you see the relationships between America and India at a very personal level are extremely deep and strong. Indians, think of America as the promised land, and, we are all very happy to go there, whether to study, to work, to come, whatever, on holidays, etc. American companies have large, following and businesses in India. And, we are both democracies at the end of the day. And I'm personally quite disappointed and shocked that we have reached this level. But I also think that when you have a strong people-to-people bond, these things can be overcome through conversations and through letting things cool down for a little while. So I'm hoping that, there's a way to regain the lost ground and to rebuild this relationship.
Okay.
I'm an optimist. I'm an eternal optimist. You can't be anything else given the kind of volatility and uncertainties that we live in. So let's see.
Yeah, most certainly. Well, I think we'll know. A lot of people are hopeful that there will be some resolution in the 21-day window as well. So let's wait and watch for that. Pending that, Amit, a soft quarter one, not unexpected. In fact, I would say almost unexpected lines. Is the situation predominantly because of these tariffs and the weak global macro? And could that change, or would it be difficult to preempt that change right now, even for a large business like yours?
Yeah, so let me tell you, there are two elements to what has transpired in the quarter. One is some amount of weakness, slowdown in Europe, some amount of weakness, slowdown in the US because of this whole tariff overhang. Secondly, we have some sectoral issues which are not really, I wouldn't call them issues, let's call them sectoral behavior, such as in the aerospace business, where I would not look at quarter to quarter. I would look at annual run, what we achieve on an annual basis, and we'll continue growing our aerospace business at the 20 to 30% YOY level that we have delivered in the last 3 years. And we continue to build that business towards a triple-digit $1 million business per year. Secondly, one of the factors that has affected a couple of our businesses has been this whole defocusing of the emission norms and environmental standards in the US. So one is it has had an impact on the truck market because the pre-buy that was expected in 26 prior to the new emission norms in 27 is not going to happen. So we'll see a more balanced or a pushed out purchasing Secondly, if you look at even our casting business, some of the supplies that go into the wind energy sector are also impacted by this. Just to let you know, Neeraj, today there are suppliers of photovoltaic equipment who are sitting on equipment ready to ship, which American clients are not buying because of the whole question mark or uncertainty around the support given to the whole green initiative in the US.
Wow. Wow. What a sea change a matter of 6 months can bring to the whole business. It's seriously uncertain. So, Amit, how do you think about, I mean, one, how do you even respond to a question when I ask you that how does the rest of the year look like? Because it's seemingly very difficult to predict, right?
Yeah, Neeraj, as you can imagine, we are now, like bouncing off of walls, one day you're down, one day you're up. We never know where we're going. But as a company, we have very strong relationships with our clients. We're going to focus on, at every inflection point that has happened on a global level, we have rebuilt our company, reimagined what we do, restructured, and come out stronger. So that's the same thing we're going to do this time. We have a 3-point plan that we have internally discussed. I don't want to talk about it too much, but I think, if you know us, you know that we've worked towards a last man standing approach. And I think that this is going to give us opportunities.
So could this, I mean, just for the benefit of the shareholders right now, could it well be that this is a year of consolidation or a flat year to FY26 or 2025 as the case may be? Or maybe if clarity emerges, you could even prepone it. But until that happens, pending that, this is a flat year to a steady year, and then...
Yeah, I would agree with you, Neeraj. This is going to be a flattish year, and it's going to be a year where we consolidate a lot of things. We've talked about doing things in the past, including, right sizing, or let's say making sure that our overseas subsidiaries are not a drag on us anymore. So this is the last year where we are going to, finish whatever we have to do. If you look at our US subsidiary, it's already improved its performance. Our aluminum business is improving its performance. So I think we're heading in the right direction. The trajectory is right. So I think, notwithstanding the current challenges, I think we're heading in the right direction.
One quick follow-up, Amit. I think the last quarter that we spoke, you mentioned about how you are now asking your European businesses and acquisitions to work on very strict deadlines. Parallel to that, though, Europe is expanding its defense spend. And people that I spoke to mentioned about how aerospace could actually have a really strong up move in the next 3 to 5 years as well. Is that the green shining star or light at the end of the tunnel kind of a thing?
Yeah, so Neeraj, one of the things is that, as you know, Europe has increased its defense spending quite dramatically. And it is expected that this is going to create huge manufacturing opportunities. Unfortunately, today let's say the shovel hasn't hit the dirt yet. The European bureaucracy is so high that by the time they start actually making things that will make an impact on the economy, it will take 18 to 24 months. But I think that's where we're well positioned. We have an opportunity to supply into those industries, and we are developing our linkages to do that as well.
All right, that was Amit Kalyani on Bharat Forge, and I just want to do a quick markets check before we get to the next conversation. We've retained any losses that is to inside the range of 0.5% down on the Nifty. IT has actually recovered strangely enough, and let's just pull up TCS if we can for a second, because TCS has now put it out that they are rolling out hikes, appraisals for about 80% of the staff. So not seeing major losses there on TCS either. But the big story this morning continues to be the bullying of tariffs and the hit pact from India. So Prime Minister Modi spoke a short while ago. He was speaking at the MS Swaminathan Centenary International Conference in New Delhi and talked about how the interest of farmers will never be compromised. Listen in.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है। किसानों की आय बढ़ाना, खेती पर खर्च कम करना, आय के नए स्रोत बनाना, इन लक्ष्यों पर हम लगातार काम कर रहे हैं।
Okay, Jayant Das Gupta joining in on the conversation this morning. He's former Indian ambassador to the World Trade Organization. Mr. Das Gupta, thank you so much for joining in. And we're trying to give our viewers some perspective. Does the WTO do anything right now? I'm just wondering, this has been going on for months. It's the World Trade Organization. What is the WTO doing?
Well, there are three functions of the WTO very briefly. One of them is negotiating new treaties for improved market access and for making trade easier. The second aspect, which is very important, is about dispute settlement. And the third one is about monitoring, if anybody has violated, any country has violated its obligations or commitments. Now, the most important pillar is, of course, negotiations, but it is intertwined with this dispute settlement issue. And if the dispute settlement leg of the three, that is crippled or it is non-functional, then the whole edifice, can't stand very steadily. So that is exactly what has happened, and the US has contributed very largely to crippling the dispute settlement system by not allowing the appellate body to function, by not allowing new members to join the appellate body. So the negotiating pillar has also been progressing very, very slowly. And the monitoring, aspect has also suffered, because if there is a violation and a country wants to complain, where will it complain? It can complain to the dispute settlement system, but it's non-functional. So that is why there is this perception that the WTO has stopped functioning, but it is not quite so. It has delivered on the fisheries subsidies agreement at the last ministerial in the UAE in February 2024. And it is moving ahead, thinking about, discussing about various ways of reforming the WTO. But having said that, without the most important trading member in the world, in terms of, if you take the imports as well as exports, if that member is not contributing significantly to the discussions, and it is holding, of course, a veto in a sense, because every decision is taken by consensus in the WTO, then it becomes very difficult to move ahead.
Agreed, Mr. Das Gupta. It gets difficult to go ahead. Stay with us. Let me also get in Mr. Ajay Sahai, DG and CEO at FIO. Mr. Sahai, we've been hearing of the trade tariffs at 50%. It's been almost 12 hours now. What is the clear message that you're picking up from exporters? Because this is going to be a major concern. Though the other aspect that I'm hearing from a few of them is that probably you could start setting up companies in countries with lower tariffs and do a trade via countries with lower tariff. Is that something that could be considered as well?
Let me tell you, till the tariff was 25%, the exporter were looking into the option of absorbing it, even be approaching the government in absorbing it. Now with tariff at 50%, the differential tariff with our competitor is in the range of 30 to 35%. And therefore, in most of the product, almost in all the product, is something which cannot be absorbed. And the difference is so much that we should not expect the government also to come forward and in some way help out. The only good thing is that roughly 45% of the total trade, which is under Section 232, which includes pharma, smartphone, and the products like steel, aluminum, copper, where the tariff already is 50%, they have been exempted from 25% duty. So probably that will remain unaffected. How long is also a question, but balance 55% of the trade will be definitely hit. To what extent it will hit, only time will tell. I don't think any exporter will look into the option of trading through other countries. He has already imposed 40% tariff on transshipment, and violation will entail huge penalties. None of the exporter would like to do it. At the same time, we are expecting that since 21 days window is there, we should continue with our negotiation, of course, clarifying on the red lines, but probably if we can look into what else can be offered to the US in lieu of dairy and agriculture, that may take the negotiation forward. Let us continue to be engaged with the US, because unless the dialogue is open, you will not be able to move forward. So let us keep those channels open at this point of time.
Mr. Sahai, for the betterment of the farmers as well, there are some lines that can't be crossed, right? So I heard you say that there are some concessions that could be given. There are some things that can be purchased from the US. What are they?
I made it very clear. Dairy and agriculture are the red lines.
Right,
if we can
okay, fine.
After all, the tariff is started with the trade deficit.
Okay,
if we can look into offering something more to the US, help us in bridging the trade deficit, that can be one of the options. Because if you're not offering them agri and dairy, bring something in lieu of that so that negotiation moves forward. You cannot say that I will not give this, I will not give something else also.
Sure, hear you. Mr. Dasgupta, assuming that let's work with an assumption that some resolution comes about, but pending that, or if this lasts for a while, what does an average Indian business which is reliant on export income and particularly textiles, gems and jewelry, etc. do? Are there options around this?
I think the options are rather limited in the short term, because looking at new markets and developing contacts there and starting to export to those markets is not going to be easy. As far as our established markets are concerned, the European Union, which is one of our largest markets, China, which imports very little from us and could import a lot more. So these are some of the areas where we can focus on behalf of the government as well as the business. And in the case of China, if there were to emerge a kind of an alliance or a stronger pushback from the BRICS countries, because China, Russia, Brazil, the president has also mentioned, Lula, that he would be speaking to the other BRICS leaders. So, because Brazil has also been slapped with 50% tariffs, and for a non-trade reason, the treatment of the ex-president Bolsonaro is the reason for that. So, I think these are some of the options. As mentioned by Dr. Ajay Sahai, the issue of setting up business in another country which attracts lesser tariff and then transshipping from there, it's not an option, really speaking, because it will attract sanctions and legal action. So the options are limited. The exporters will have to suffer, unfortunately, very unfortunate, who were traditionally exporting to the US and in the areas which have come under sanction, barring mobile phones for the moment, semiconductors, electronics, and pharma.
Sir, I just want to come to Mr. Sahai exactly on that point. And, I don't think exporters will be left to suffer and languish in any case. There are already some subsidies which have been announced by the government, more to come. This is a space that we need to watch. But from the exporters' point of view, Mr. Sahai, if you can give us a sense of what's happening on the ground. What are large exporters doing? Are they looking at alternate routes, not transshipments? I'm looking at alternate buyers for some of their products. How are they sort of moving and realigning in this very uncertain time? Because look at what's happened today with Japan. They already have a trade deal and then another 15%. So considering even if 50% becomes 15%, it could become 30% again tomorrow. Doing business with the US is now risky for the next few years, isn't it?
That's why, because a business looks into clarity and stability. Unfortunately, in dealing with Mr. Trump, neither we have the clarity nor the stability. You have rightly said, tomorrow some new kind of penalty, new kind of tariff may come. Indian exporters are definitely looking into other countries also, but as told by Mr. Jayant Dasgupta, it is not something which is possible in the short term. You cannot move to a new market overnight. It takes time, and therefore in medium to long term, for de-risking also, they are looking into the other market. The FTA has offered them an opportunity. I think UK will be a good big market once the UK Parliament approves the FTA. The early harvest with UK, with the EU will also help, and so with other GCC's countries. But these are in medium to long term. I think in the short term, a lot of exporters will take a hit. I was talking to many of the exporters in the morning. Some have taken the advance where the dollar was 84. Now, if they have to refund that, dollar has moved to 87.50. That is a cost. They have placed order for the raw material. They have booked the container. All cancellation will entail a cost to them. So there are definitely challenges in export. That's why, as an organization, we feel that since the 21 days window has been given, and I'm pretty sure this is with the purpose, we should try to utilize, though of course we should be firm on non-negotiable areas also.
Got it, Mr. Sai. In fact, Mr. Dasgupta, one quick question. You know, in instances like this, I know this is the first for all, what should the WTO actually be doing? Because it seems that they are completely being ignored right now.
Well, the WTO does not have the discussion. The DG is just a functionary who has been given certain powers. But, she can't take action on an independent basis. So whatever decision has to be taken in the General Council or in the Ministerial Conference. And there, because decisions are taken by consensus, every country has virtually a veto. And the US will exercise that if it feels that the WTO is trying to move in a direction it doesn't like. So I don't think there is any recourse to the WTO at the present juncture.
So no recourse at the moment, and I think we have to just wait and watch. But thank you so much, Mr. Dasgupta. Thank you, Mr. Sahai, for joining us on the show. And this has been interesting, right? Firstly, there is concerns with the exporters, but no alternatives that they are able to find as of now. And when you talk about WTO, a body who is actually coming in to negotiate between countries, they are being ignored completely right now.
I think it's more like, where is this trade organization instead of World Trade Organization at this point, because the world has seen this bullying for a while. Nevertheless, we'll take a break on India Market Open. It's been a jam-packed show. Markets are quite steady, less than 100 points down on the Nifty. So settling in relatively pretty well for a day like this, where there's 50% tariffs. But on the other side, we get you a lot of action. You have conversations with companies that have reported results, Ask Profit, and so much more. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachajani, and we'll take you through the next 1 hour of trade. Okay, so let me start by asking you, what did you think about the additional 25% tariff?
I think markets have clearly not factored that in. Markets have, made sure that they tell Trump that, no matter what you say, we are going to remain resilient.
Yeah, there you go. So you heard that, and in fact, that's exactly what's playing out on the screen. Let's take a look at the benchmarks. Down about 0.6% right now, but that's really not something that you would say is a ludicrous reaction on any given day. It's down at the low point of the day, sure, but for the most part today we've been trading with cuts of about 0.3% for the benchmark Nifty 50. The broader market seeing a little bit more in the way of cuts, so let's pull that up as well. About 0.5%, actually not too much, right? So 0.5% for the mid-cap index as well, and just about 0.75% for the small cap 250. Let's take a look at the market breadth as well, and remember this has been a little bit weak. I would say actually for different reasons, more to do with earnings, more to do with the outlook on Indian growth, more to do with other factors rather than tariffs. But still, let's take a look at some of the stocks that might be getting impacted. Broadly, the sectors that are seen to be impacted are the frozen foods or the shrimp space. You have textiles as a pocket that are expected to be impacted, a few chemical companies, and so therefore let's pull up the likes of Apex Frozen. Yes, there you go. You have Avanti Feeds that is down about 4.6% or thereabouts. But the rest really, I'm looking down the list, something like a Gokaldas Exports down only 1% or so. Jubilant Ingravia down 1.9%. Nitin Spinners down 3%. Pearl Global down about 3.7%. And SRF and Rajesh Exports actually trading in the green right now, even as we speak. So a few stocks where you're seeing a bit of a reaction, but nothing earth-shattering at this point. I'm looking at the broader markets just to see if there are any other big movers, and I would reckon that the big movers today have to do with earnings. Godfrey Phillips, by the way, finally seeing some money being taken off the table after the stellar run-up, is the top loser on the Nifty 500 at this point. GNFC on the back of a pretty weak set of numbers, losing about 6.7% or thereabouts. You have a Reliance Power that's once again in the red. On the winning side, you have a few names that are doing particularly well. You have ITI that is up and about. You have Fortis Health, we're speaking to the management in just a bit, that is up about 3% or so. And I looked at Rain Industries. It's an interesting story, not a very large company, 5,600 crore market capitalization, but really arguably the stock of the day from the broader markets is return to profitability, return to net profit after 7 quarters of losses, and bodes well for the company and for the stock as well. We're joined today by Kush Bora of kushbora.com, as well as Prashant Tapse, Senior Vice President Research and Research Analyst of Meta Securities. Thank you so much to the both of you for taking the time. Kush, very quickly, 40-second, 50-second answer. What do you make of the reaction that you see today, and any individual stocks that you're liking? What's on your radar today?
Hi Alex, hi Prashant, and a very good morning to all the viewers. More of expiry play. We've had shorting going on for a while. In the markets, they've been slipping lower. Minor concern is that the 13th June low of a 24,473 that the markets had made, that's been broken, and that is now under test. This is a strong support zone, 24,400, 24,500. If that is broken, then I think the 200-day moving average near 24,000 might come into play. If not, then we could see a rebound. Yesterday we saw first inkling of a very small, but nevertheless a first inkling of FIIs covering a bit of short positions. So maybe if that turns around, then you could see the Nifty head higher. But for now, I would either stay out of the market or play for a rebound trade. But that's the view on the indices. On stocks, Hyrocare and JK Cement, these two look good.
Okay, we've got our first caller for the day then. Dheeraj is calling us from Hyderabad. Dheeraj, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. Good morning to the experts and everyone else in the panel. So my query is regarding Godrej Properties.
Okay.
I purchased these shares today actually, like 54 shares of Godrej Properties at 2052.
Okay.
So the stock corrected from its peak like around 30%. The order book is strong, but the stock is underperforming in the real estate space or the construction space. The entire real estate pack, the stock is underperforming. So I would like to know both the short-term and long-term view. And I have one more thing, ma'am. Like FIs are selling, and good results have been posted by multiple companies, but they are unable to make new highs or at least sustain their level.
Correct.
Can I know the reason?
Yeah, got it, Dheeraj, and your question is valid. The second question that you're talking about, I'll take both of those up with Prashant. Prashant, first I'll ask about Godrej Properties. In terms of Q1 numbers, they were not impressive, around 41% downside in terms of revenue, and that's because 31% decline in sales volume also took place. Plus, even in terms of collections, it's very less as a percentage of their total FY26 guidance. Your view with regards to where Godrej Properties stand?
I think yes, from last 2-3 months, I think the real estate stocks have been underperforming.
there is no excuse for Godrej Properties because it's the largest in terms of the coverage. But again, I think the near-term outlook looks still big, and the overall month-on-month business updates are not also impressive. So the price is correcting only because of the valuations are not matching with the price action what it has few months back. So overall, the view would be negative. The trend would be negative again in terms of industry as well as on the performance of the Godrej Properties. So I would like to be a sell in this stock.
Okay. Very quickly on the other front, where you have your shorts from foreign institutions in the system to the extent of over 90%. Kush, you want to comment on that? That seems to be just a sign of the times, right? And they've been selling for 13 sessions in a row in the cash market as well.
Alex, it's historical. I think only a couple of times in the history has it happened that FIIs have gone beyond 90, 91%. But I think even fewer times when they've stayed short by 90, 91%, for such a long time, and even if that is a few sessions, I think it is a sign of how do I put it? It is a sign of confidence that Trump might continue targeting India. Otherwise, there is no reason, despite the kind of mixed earnings seasons we've had. These kind of shorting levels not seen historically. That's why I believe that shorting from here on does not make sense because we've fallen quite a bit. Any bit of covering by even the FIIs and any bit of short covering in the market could actually spark a rally of 300 to 400 points on the upside. So yes, they have been short for some time, but I think the room for going short from the current levels remains a little limited. So you would at least expect a bounce and then perhaps maybe downside if it has to continue. So yeah, historical short positions.
Right.
Policy, but otherwise I think...
Let's move on now, and sorry Kush for cutting you off. We have to go to the management of Fortis Healthcare. Let's listen into what they have to say about their numbers.
My first question would be, you've seen a strong margin performance when it comes to Q1 FY26. What's your outlook for maintaining or further enhancing, these margins in the coming quarters, especially considering the new O&M agreement that you have signed? Because I remember you talked about, a 2% growth when it comes to EBITDA margin. So your view on that?
Yes, so our performance has continuously improved, and both the volumes as well as the realization have been good. As you pointed out, the RPOB as well as the occupancy saw growth. So these two factors have been main factors to improve our performance. But I think this performance has been consistent for last many quarters and in line with our commentary on this. So we expect this to continue. As far as the O&M of Clinical 700 beds, which we are going to be managing, is going to be accretive. That revenue we will not be taking, but there would be an O&M fee, which would be 3% of their top line. So that would be accretive to our bottom line.
Understood. So on the margin side, so the margins were at 22.6%. Now, any scope of further enhancing these margins when it comes to whole year FY26, or I would say, what is the margin outlook that you have for FY26?
Yes, so we have consistently said that every year we expect 2 to 3% of increase in our EBITDA margin till we reach a level of about 25% or so. So there is a further scope of improvement which we will get, because this year we are also adding about 900 capacity bed, which includes the newly acquired hospital in Jalandhar, which is about 283 beds. And these beds, at least 50% of them will be operationalized within this year. So that will also contribute significantly to both our top line as well as bottom line. But since some of these capacities are going to be new, so we expect that gradually over the next 1 or 2 years, we should reach the figure of 25%.
Understood. Dr. Raghuvanshi, when it comes to RPOB, it grew 10.2% and the occupancy also increased to 69%. Now, what specific initiatives or the patient mix shift contributed to most of the RPOB growth, number one? And what is the target occupancy when it comes to FY26? Because I remember you had a target of 70 to 71% of occupancy. So your outlook when it comes to occupancy and also ARPOB.
Yes. So ARPOB mainly grew because of the case mix change. And if you would look at the different segment of service lines in our hospitals, oncology has grown much faster than other specialties, though all specialties have grown. But oncology has become the the largest of the service offerings. And that has typically a higher ARPOB, and that has led to a case mix change, which is favorable towards increasing the ARPOB. So we don't expect the ARPOB to increase in the same manner in future. It will get slightly moderated. However, the occupancy numbers we are targeting, as we had said earlier, above 70%. So hopefully we should achieve that within the next 2 quarters.
Sir, any reason for moderation of ARPOB growth?
So because right now we are seeing a case mix change. And we have not done any significant pricing interventions, and we believe that in healthcare, pricing changes is the lever which should be used as a last resort. So we are only basing our ARPOB growth on the case mix change. So more complex cases, we are doing more robotic surgeries, we are doing more complex procedures in oncology and urology and bone marrow transplant, etc. So these cases typically have higher realization. So our strategy is to do more tertiary, quaternary kind of care, and that should result in a better ARPOB rather than the pricing. So that has always been our strategy, and we will maintain that. So that's why we believe that after a certain growth spur, you would see a little bit of moderation in the ARPOB, but that would get compensated by an increased occupancy.
Understood, got that point. Also, sir, so on a consolidated level, I'll come to diagnostic in a bit, but on a consolidated level, what is the revenue growth you're targeting when it comes to FY26 and of course beyond that as well?
Yeah, so we expect mid-teens growth continuing through the year. We are expecting slightly higher growth on the diagnostic side, which is currently about 7-8%. We expect that to become better as our brand is getting more established. We, as you're aware, that we had changed the brand and that had impacted the business to some extent. But now that is behind us, and we are expecting that to grow much faster. So the diagnostic business we expect to grow about 12 to 14%, and the hospital business to grow about 15 to 16%.
Okay, that's great, because I was actually on to ask you about the diagnostic business also, but great that you have an answer for that. Sir, also operating beds as of FY25 stand at around 4,000 odd beds. What is the expected addition that you're going to make this year?
So we are going to add 900 beds this year, capacity beds, but we will operationalize only about 50% of this. 900 beds also includes 283 beds in Jalandhar in Punjab, which was a recent acquisition, which we have concluded just last month. And that hospital gives us a very good positioning in Punjab with about 1,000 beds over there. But out of these 900 beds, we expect at least 50 to 60% bed getting operationalized within this financial year.
All right, so that's the management of Fortis Health. And by the way, a good set of numbers. Stock is up 3.7% or thereabouts. Quite a substantial improvement in the operating profit as well. The margins have expanded in the quarter gone by. You heard why that is. Let's go back to the queries. And by the way, if you're tuning in just now, there are two ways in which you can ask your questions. One is the number on the top of the screen where you can send us your messages. And two, on the bottom of the screen, you see the number. That's my numbers. Okay, there. you can call us. All right, the next question is on Kalyan Jewelers, and Soumyadeep Chaudhary has got this. He's writing it from Asansol in West Bengal. He's got this at levels of 366, and he's got 150 shares. By the way, the results are out today, and so you should watch out for that. We will flash it on the screen whenever it does come through. But Prashant, the question is there going to be an implication because of the tariff? I'm not sure how much of the revenue for Kalyan Jeweler comes from the US, if at all. And so therefore, would you say that it's insulated?
I think yes, it has been discounted in the price as of now. I think the export market for Kalyan would be very much under single digit, higher single digit in the overall top line. But again, the impact would be very much minimal. Again, the profit margins are very much high in the export market. So it has been discounted already in the stock. Whereas with respect to expectations of the Q1 earnings, I think I'm expecting some kind of pressure in the overall margin, considering the volatility in the gold price as well as on the non-seasonal activity for a jeweler business. So overall, the expectation is the numbers can be neutral to negative, so the stock can react negative on the basis of Q1 earnings.
Okay, so that's with regards to a Kalyan Jewellers stand. In fact, they've recently, in the last quarter, opened one store in the US, and that's the extent to which their US exposure stands. So that's with regards to where Kalyan Jewellers stands. The next question is on Tejas Networks. Okay, Ekambarai from Hyderabad is writing in, and he's holding Tejas Networks 175 odd shares, bought at 1125 a piece. Wants to know at what time can he start averaging or book losses. He's saying that he's a retired person. He wants to keep the stock for a minimum 1 year, from a minimum 1 year perspective. Prashant, I'll stick with you for this one. What's the view with regards to where Tejas Network stands?
I think we have seen the underperformance from last many quarters. Even the earnings are not able to cope up with the business model after being bought by Tata Group. But again, I think the negativity will keep on coming in the quarter-on-quarter numbers. For him, as he's a retired employee, I think he should try to keep avoid this kind of stocks for the next time when he is buying. But time being, I think he can hold it for at least for shorter term, whereas there can be some kind of better expectations in the markets, and then he can try to average out and then exit the stock.
Shankar is calling us from Chennai and asking about a stock that took a bit of a beating in trade yesterday. I wonder what Bosch is doing in trade today. Let's pull it up. It's just about flat, but yesterday it saw a bit of a downtick. Shankar, is that why you're calling? Yes, what would you like to know?
Hello sir, how are you?
Very well. Thanks so much for calling us.
Okay, thank you. I bought Bosch at 5 days before.
Yes.
At the rate of 39,700 rupees, 5 shares.
Yes.
But I am expecting the share will fly to 44 and 45,000, but unfortunately it will suddenly cross 41,200 or 300 and return back to now 38,500 around.
Yeah.
What can I do? Purely short term only.
Okay, purely short term. I got your question. So therefore, Kush, let me ask you this. I don't know if there was a trigger yesterday, but I did see that the stock was under a little bit of pressure in trade. What is the view on the upside?
I think it was the results, Alex. If I'm not mistaken, it was the results that perhaps brought the stock lower. But if you ask me, the stocks actually had a very good run. In the last about month or so, a little over than a month. If you see, starting June, the stock has seen very good accumulation. In fact, if I didn't, if I wasn't sure of the result number, I would say that the fall that the stock seen in the last 2 sessions is mainly on account of profit booking, because the stock had actually gone into overheated territories, and the markets have also seen some sort of correction. My suggestion would be to continue holding on to the share, because the medium-term structure is very much intact. However, the stocks dipped below the 20-day moving average, but the structure is still intact. So I would give a deepish kind of a stop loss. So about 36,700, 36,800 zone, that's a support zone for the stock. If he can, hold on with that kind of a stop loss, he should continue to hold. Once the dust settles, I think the stock will resume its uptrend.
Okay, so that's with regards to where Bosch stands, and in fact, the commentary also coming in from the management was weak, and management did deny the acquisition of Johnson Controls Hitachi as well. So those are the two updates with regards to where Bosch stands. The next question is on Fortis. We just spoke to the management. Mohit from Ludhiana is asking this question. He's got 350 odd shares of Fortis, bought at 270 a piece, and his time horizon is 2 years. Wants to know if he can continue to hold or not. Prashant, I'll come to you on this one. What do you think of Fortis?
I think continue to hold for a long-term investment. And the way how the stock has been performing quarter on quarter in terms of earnings, they have almost the best quarter in the last 12 months. The margins of almost 23% on average, and the management is expecting that can go towards 25% also. So overall, the trend looks very good in terms of the healthcare industries, and Fortis is the top third in terms of market cap. So continue to hold for long term with a target of at least 1,000 rupees plus from the current levels.
Okay, so that's with regards to your Fortis stance. We've got our next caller. Shweta is calling us from Hyderabad. Shweta, hi, a very good morning to you. How can we help you today?
Hi, Majma. Very good morning to you. I have Titagarh shares at 115 shares at 1752.
Okay.
And, I have two more railway stocks, which are, three of them are at 50% loss each at present.
Okay.
So what I want to know is if I want to exit and book losses from these stocks, because I've been holding them from very long time. So if I want to exit from these stocks and buy another stock which has potential to at least cover my losses, so which stocks are good at present levels?
Okay.
Or I should hold on to these stocks only.
Okay, which are the other two railway stocks? Titagarh and?
Jupiter Wagons and Irida.
Okay, Jupiter Wagons and Irida. Okay. I'll take this up with Kush quickly. Kush, what are the charts indicating for Titagarh? And then if you can try to pull up the charts for both Jupiter Wagon as well as Irida and let her know if she can recover some of her losses or maybe book losses and go to something else.
So look, even now, if you see the stocks are actually in a bit of a downturn, the volumes on the way down have shrunk, but they've already seen quite a bit of correction. So Titagarh in particular, not a very healthy structure, although the stock is attempting a rebound from 825 support zones. My suggestion would be to keep a tight stop loss near that mark. If that is broken, then the 3-month low could be tested and the stock would slip further. Irida, in fact, we had a short call some time ago. And Jupiter Wagons in the fairly similar territory. However, on a daily basis, it's seeing some sort of positive divergence. Nutshell, these stocks perhaps could see a bounce in terms of a short covering bounce or maybe from oversold territories. But has the tide turned for them? Not sure. So maybe keep stop losses near the support zones and exit if those are broken. Some of the stuff that she can consider, which was the second part of her query, and we've recommended those on the channel as well, plus to our advisory clients also, are Deep Industries, Nava, and Vijaya Diagnostics. Now, these stocks have done rather well in the kind of market that we are in currently. Even the downticks that have come about have been on fairly low volume, so the confidence in these stocks is fairly high. So maybe she could consider a switch to some of these names, if she exits the railway stocks.
Okay, we've got to slip into a very quick commercial break on that note. We'll be back on the other side to take more of your questions, so do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on the screen right now. Okay, we've got our next question from Seema, who is writing us from Jodhpur. Her question is on Anthem Bioscience. She's saying that she got an allotment in IPO and wants to know if she can hold or book profits in the near term. Prashant, not sure if you have a view on this one. Any view?
Yes, very clear view. I have visited the company management as well as the plant in Bangalore. A very optimistic view on a long term for Anthem Bioscience. I think this is the one company which has both the chemistry as well as biology as a business model serving their pharma companies. Very strong. I think valuations are also justified the way how the company is going to deliver its YOY results going forward. So my recommendation would be hold with a target of 900 for next 12 months.
Okay. All right, so that's a view on Anthem. Enviro Infra Engineers is the name of the counter that we're talking about next, and this is a question from Hemant. He's bought at levels of 281, 500 shares is what he's got, and he's asking whether he can hold for at least a year. And is it a good time to average at the current level because he's sitting on losses at this point? Kush, what's the view?
On the whole, the structure is quite bullish. If you see the stock respecting the 50-day moving average, it's seen quite a spurt in the in the recent past before dropping lower. So my suggestion would be yes, you could hold on to this one. Not sure about averaging because of the kind of environment we are in and the kind of profit booking the stock has seen. But yes, for sure you should continue to hold this one. Keep a stop loss at the 240 mark. The stock has all the potential to spurt and move towards 275, perhaps 295 levels as well. And for a 12-month perspective, which he has, the stock could well cross 300 levels also. So all in all, constructive, but keep a 6 stop loss in the 240 zone.
Okay, so that's with regards to where Enviro Infra stands. The next question is from the paint space. Megan is talking about Berger Paints. The buying price is 533. And do we have the quantity? Okay, we don't have the quantity that he's bought. Okay, 112 shares. Okay, yeah, she did. So 112 shares is what she's holding, and she wants to know as to what should be the outlook for the next 2 odd years and a possible target. Prashant, I'm not sure if you'll be able to give a target in the next 2 odd years, but what's the outlook like? Because from the entire paint space, although this quarter was muted for Berger Paints, but overall, it's been the only company that has been able to make some progress in the past few odd quarters, where the entire sector saw a downtick. What's the view?
Yes, you're saying it very right. Sector saw a lot of huge competition with the new entries of Jindals and the Birlas. So, but I think the pressure will continue to have more on the Asian paints rather than on the Berger paints. That is why Berger is doing really very well in the last 2 quarters. But again, I think with the volatility and with the near-term volume downtick in terms of month-on-month business with respect to volumes, I think the stock may underperform for a very shorter period of time. But again, yes, I think it's coming very near to its very reasonable valuations for one who can accumulate on every dip. So overall, hold on long term.
All right. Our next caller is calling from Hyderabad. Snigdha is calling. Hi, Snigdha. Very good morning to you. How can we help you today?
Hi, good morning. So,
sorry, we just lost you. Are you still able to hear me?
hello?
Yeah, go ahead, Snigdha.
Yeah. So my query is regarding, so I have 2 lakhs of corpus. So I just want to know if I would invest on Praj or Tata Motors.
One or the other. And what is the time frame that you have in mind?
So either short term or long term. That would, anything would be fine.
That's a little difficult. So if you
So I just want to ask. So I'm seeing very much downside in Tata Motors. So is the story of Tata Motors done in India, or would it be like?
Okay, so let me ask you this: are you only buying it because the price is lower, or are you buying it because you have looked at the business, you know what they do? For example, you've looked at the contribution of Jaguar Land Rover to Tata Motors' consolidated revenue, and you say at some point it's going to reverse. Is that what you've looked at?
Yes.
The latter, the second part.
Yes.
Okay.
Yes.
All right. So then let me go to Prashant. Prashant, on the fundamentals, between Praj Industries and Tata Motors on the fundamentals, which would you choose? 2 lakh rupees, and I'm guessing since this is a fundamental view, she's looking for the long term.
Yes, again, I will go with Tata Motors, despite knowing the near-term outlook would be somewhat muted or downtake because of the business which is exposed to a lot of other countries, and the tariff will have a very much heading impact on the short-term performance. But again, I think with respect to valuations, 600, 630 can be a great level to accumulate the stock for at least 2 years, because we have a demerger story very soon in this financial year. So overall, I think the numbers will be improving, but very slow. But it's an opportunity for her to buy this stock at this point of time.
Okay, we've got our next question from Subramanian, who is writing us from Chennai. He's asking if this is the right time to make an entry into transformers and rectifiers India from a 6 to 9 months perspective. Kush, I'll come to you on the charts for transformers and rectifiers. What are they indicating, and is this the right time to make an entry?
It is. We all know the kind of multi-bagger story the stock has had in the last 2 years. Right now, it's in a consolidation phase. So yes, if you ever wanted to accumulate a stock like transformers and rectifiers, it's a good idea to accumulate when the stock is in a consolidation mode. Also, if you see the broad range for the stock, has been 470 on the downside and about 540 on the upside. So right now, it's anyway closer to that lower end of the support zone. So yes, you should consider accumulating transformers at the current juncture. My stop loss would be slightly below the lower end of the range. 465 is where you keep that stop loss and hold on for the next 6 to 9.
Okay, we've got our next caller then. Murli is calling us from Bengaluru. Murli, hi, a very good morning to you. How can we help you today?
Good morning to you. Thank you very much for taking up my query, Mahima.
Our pleasure, Murli.
Yeah. See, I bought Home First Finance 200 shares at a rate of 1240 per share. And I know very well it has IP and high book value, but growth was there, so I bought it.
Correct.
Suddenly I got an opportunity in PNB Housing Finance, which has come down due to change of thing, and being a public sector owned NBFC, I don't think much will happen. A change of leadership it may affect in the short term, but long term still they'll deliver.
Right.
And it has a low price book and PE of less than 10 and price book of 1.26. Can I switch over from Home First to PNB Housing or buy PNB Housing more now at this price?
Okay.
Because it's a domestic focus, no tariff issues.
Right, that's absolutely correct. And Murli, your analysis is always spot on. So congratulations on that, and we really appreciate that. Prashant, Murli is our regular viewer, and he always analyzes the stock well and then comes to us. Briefly, his question is if he can switch from Home First Finance to PNB Housing, or keep Home First Finance in his portfolio and add some of PNB. What would you suggest?
I know Murali sir does very much lot of good research and makes my life very easy to give one an answer. So I have a very contra view. I am very much positive on the housing as a sector for next 2 years. But again, I would like to go with Bajaj Housing Finance for a better play, better growth in terms of short term as well as long term. If not, again, HDFC Bank or SBI can be a stock for who has a larger book of housing finance in their balance sheet. So I think he has to diversify in 2 or 3 companies, not to focus one as home finance or PNB. Go with the large caps. In the private space, I think Bajaj Housing Finance is doing really good. If you see their last earnings also, they have grown 25% on the AUM side as well as in the margin side. So housing as a sector, very optimistic for next 2 years, but my focus would be on Bajaj Housing or the top 2 banks which has good housing exposure in their books.
Okay. Okay, all right. So comprehensive answer there on the housing finance space. Our next question is from Prabhu from Madurai, and he's writing and asking about Godfrey Phillips. It's finally seeing some profit taking. I pointed that out at the start of the show. Would you buy at this point though, Kush, based on the action that you've seen in the past couple of days?
So the overall structure is bullish, Alex, on this one. I wouldn't buy it at this point. The only reason being that, as you rightly said, the stocks actually had a good run over the last 3 sessions. It's now seeing some profit booking. The volumes also on the way down are starting to spike today. Plus, there is a gap. Once the result impact came out, I think the gap around the 90-100 mark, was created. And the 20-day moving average support also lies, close to that zone. So yes, maybe another 500-700 points of dip. And once again, if the stock comes around that level, that should be a good entry point. For now, I wouldn't go out and buy. But yes, around the 92 to 9400 zone, that will be a good accumulation.
Okay. All right. So that's the view on Godfrey Phillips. Our next caller is Vidya from Hyderabad. Vidya, hi. Morning. How can we help you today?
Good morning, everybody.
Please go ahead.
This is Vidya from Hyderabad. I have 258 stocks of Vare Renewable Technologies. I purchased at 1,353.
Okay.
So from 8 months, I'm waiting whether it will rise or not. What will be the progress of the stock? Should I hold it for some more time or should I sell it at the loss?
Okay. So when you bought it, was it based on the fundamentals, Vidya, that you bought it? Or did you buy it? I mean, did you buy it because you looked at the business, you thought that it has good prospects and therefore... And so therefore long-term view, right?
Yes.
You're not in a hurry to sell.
I'm not in a hurry to sell, but I'm thinking whether it will rise or not.
Yeah, okay, that's a fair question. So Prashant, therefore, on the fundamentals, would you hold on if you bought at levels of 1353? And what are the prospects on the upside?
Not hurried to sell, but she is worried on the price, the action, what it has seen from last many months. See, obviously, yes, short term, you will see some kind of more pain or some kind of consolidation in the earnings. We have seen the numbers or the EBITDA margins not at all improving well from last 2-3 quarters. But yes, if he can give some time, at least 6 months to 1 year, I think the cost of buying can be recovered with the improvement in the numbers as well as the earnings. So my advice would be hold for 6 months to 12 months and then recover the loss and then exit the business.
Okay, so that's with regards to where Vare Renewable stands. The next question is on Marksans Pharma. Gaurav Baheti is writing in from Hyderabad. He's holding 185 odd shares, bought at 270 a piece, and wants to know from a 1-year perspective if he can continue to hold or not. This is a long-term query, so Prashant, I'll come back to you. What's the view with regards to where Marksans Pharma stand, and if not this one, any other counter that you like in the space?
Again, yes, the earnings are not matching with the price action which it has seen from last 2-3 months. So I think even the Q1 earnings are not at all updated right now. So I am expecting again a number should be very much muted to negative, and the price action can see some kind of negative from the current levels. If the viewer would like to shift it from this stock to any other stock, I think stocks like I think pharma as a sector, again, Mankind can be a stock when can focus more on that, a large cap as well as with the comfortable fundamentals. So that can be a stock one should focus or shift it from Marksans Pharma.
Okay, we've got our next caller then. Mahesh is calling us from Chennai. Mahesh, hi, a very good morning to you. I believe you have a question on Reliance.
Good morning, madam. Yes, this is about RIL. I hold 100 numbers of 1455. It's just dropping down. I wanted to add more. I would like to know at what level I can add and what is the short-term and long-term view on this, madam?
Okay, Mahesh, got your question. I'll take this up with Kush quickly. Kush, do you think this is the right time to make an entry in Reliance?
I would suggest a hold rather than a fresh entry. The reason for that is while the stock is seeing, a decrease in volume on the way down and a positive RSI divergence, the price action is not yet confirming that. And, we've broken past, the recent low that the stock has made. So it's now trading at a near 3-month low. So my suggestion would be to hold whatever he has. That I don't see too much of a problem with. But fresh additions, I perhaps just wait up a little. I want the price action to halt, its downward move and then perhaps consider a rebound. For now, I could suggest a stop loss, and that should be near the 1340 mark.
Sagar is writing in and asking about this. He's been holding shorts on Tata Motors from the last 1 year from 1,000 levels. He's asking what the future outlook is considering competition, demand, supply, overall financials, all of that. Does it make sense to continue holding shorts or add more or book out the profits at this point? So Kush, on the F&O strategy, on the future strategy, rather, this is for you. What would you do at this point? I'm pretty sure that he's sitting on a substantial profit. Should he book that out?
So Alex, we've often heard of, positional investors who go long for about a year's time or longer. Rarely do you come about a query where someone's positionally short for a year or so, or at least from about 1,000 odd levels. So kudos to him on that. I think right now, even now, actually the stock's not out of the woods. So he could well continue, maintaining his short position rather than perhaps poking out. My suggestion here is keep a stop loss at the 660 mark or a trading stop loss in his case, 660 mark. No fresh additions recommended because 600 is a very strong support zone and the stock has rebounded multiple times from that level. But the next time the stock comes close to that level, perhaps you're better off, booking these short, trades, taking the money home and then, look for some other trades on the short side. But yes, for now, continue to hold. 660 is your trading stop loss.
Okay, that's with regards to where Tata Motors stand. We've got our next caller. Ankit is calling us from Mumbai. Ankit, hi, a very good morning to you. I believe you have a question on Zentech.
Yeah. Hey, good morning. I do have a Zen Technology 300 shares at 1,328 rupees.
Okay.
So I just want a long-term view of that. I want to hold it for next 10 years.
Next?
10 years.
10 years. Wow, that's pretty long, Ankit. And I got your question and take this up with Prashant quickly. Prashant, the kind of volatility this stock has seen in the last few odd days, is something that investors probably are not liking because there were 3 or 4 days straight where it did hit lower circuit and then 2 days straight where it hit upper circuit. So your view with regards to where Zentech stands from a longer term perspective, 10 years is what he's saying, but do you think this is a right counter to have in your portfolio?
I think difficult to comment for a stock for a 10 years perspective. But yes, again, short term, there will be more pain seen in the stock again. I think the way how defense as a sector has been volatile from last 1 or 2 months. Stock like Zentech, which has good exposure towards the defense as a segment. Near term, you will see a consolidation or a negative turn to the stock. So I would like to advise him to hold it for long term, but don't worry about the short term issues. Yes, with respect to the 1 or 2 years, yes, I think I can assume a 20% plus can be a ROI he can expect for next 2 years.
Okay, all right. Santosh has got the next question, and Santosh likes my suit. Santosh, thanks so much for those kind words. I, in fact, chose it today with reason. I thought that if I wear green, it'll offset everything else on the screen, and maybe it's working. I don't know. I can't necessarily claim credit for the resilience of the Indian equity markets. I can hope, though. Narayana Hridayalaya, I think I got that right, more or less, is the name of the counter that he wants to know about. And 1,955 is the level that he's bought at. 100 shares is what he's got. He's looking for a long-term view. We already spoke about one hospital company is doing particularly well, Fortis. I wonder, Prashant, if this is another one that you should hold.
Yes, I think healthcare as a sector, hospital as a sector, we are very much bullish on the research house. But again, short term, you may see some kind of consolidation as well as some kind of pressure on the margin going forward. But again, Narayana Hridayalaya is more focused on the heart issues and operations and all. I think that would be the business model for the company for a very high margin business. So overall, providing a very healthcare services on a South India basis, very strong in their presences. But again, short term pressure, long term very good. So hold it for at least a target of 2,000 rupees from the current levels.
All right. We've got a caller from Hyderabad. Naveen is calling us. Hi, Naveen. How can we help you today?
Hi, I purchased Z Entertainment at 126 rupees price. Okay. I have a quantity of 468.
Okay.
I can wait for 6 months, so I just want to know what's the future and, should I hold or sell it off?
I understand. Okay, so Kush, on the technicals therefore, 126 is the buy price, and so incurring a bit of a loss at this point. Would you average, would you hold, what's the view?
So Alex, for the longest time, Z has been on my avoid or sell list, and nothing that has happened in the recent past has changed that. So once again, I would suggest an exit on Z Entertainment. Every time the stock actually tries or attempts a rebound, there is some of the other news that comes about, and the stock slips lower. Even now, if you see, the resistances are placed around the 125, 130 zone, which is again fairly close to his buying price. So he may not really see profits per se, but maybe he could exit at a mild rebound. But I would suggest there are far better stocks in the market to buy at this current juncture rather than something like a Z Entertainment. So an exit follows.
Okay, all right. So it's an avoid, right?
It's an avoid, but I think he has a position, so I would suggest an exit.
Sure, it's an exit. All right. So Kanan has got a question for us. He's calling us from Chennai. Kanan, very good morning to you. How can we help you today?
Yeah, good morning. This is Kanan from Chennai.
Yeah.
I have query here. I hold Dr. Reddy shares for 1,311.
Right.
329 shares.
Okay.
Currently, it is 40,000 loss.
Yes.
So, can I accumulate?
And what is the time frame that you have in mind, Kanan?
2 years.
2 years. Okay. All right. So a lot happening in the pharmaceutical space. You already commented about this, Prashant, but then specifically on Dr. Reddy's Laboratories, would you say holding for 2 years makes sense? He's already incurring a 40,000 rupee loss.
Yes, holding for 2 years makes sense. Again, buy on dip can also be a strategy for him because it's the largest in the sector. Again, despite having a Q1 numbers very good in terms of improved EBITDA margins, the stock is under pressure, and we know all the reasons because of the Trump's dialogues on tweaks. So overall, yes, hold, buy more on dips. It will add some value for him for long-term investments, and a decent growth of 15-20% can be expected for next 12 months to 15 months.
Okay, so Sunny, who's writing in from Goa, is asking about Liberty Shoes, which he's bought at levels of 424. He's thinking that because it's a domestic play, it might be inured or insulated from everything that's happening around the globe. But he's looking for a 1-year technical check. Kush, what's the view on the charts?
No, I'd avoid the share because while his theory from a logic standpoint makes sense, the stock actually has been in a very severe downturn for the last 2.5 months, and that has nothing to do with tariffs or whatever. The price movement itself is not encouraging. It could see a mild rebound, but even that would perhaps be sold into. So Liberty Shoes is an avoid.
And if you've got, would you exit?
Oh yes, I would. Yeah.
Okay, all right, so that's a view. Embassy Development is the name of the counter we're talking about, and this is effectively an affordable and premium or luxury real estate developer. Do you have a view on this one, Prashant? And would you hold if you, would you buy at levels of 97? No, this is wrong. This is not Embassy REIT. I'm talking about Embassy Development. It's the name of the counter. I should not be trading. This is the REIT. Any view, Prashant?
I don't get the research this stock, but again, a small view, again, very negative on the short-term period again. So I think the stock should be in the oil list right now. Volumes are very much less and the growth is very much muted.
Okay, all right. It's time for the rapid fire round, and gentlemen, you know what this means. I'll toss as many questions at you over the period of 2 minutes as possible. Do answer as quickly as possible. The first one from the defense pack is BEL. We've got a question, I don't know from whom. Buy price is 138. Would you accumulate and hold for the next 7 to 10 years? Prashant?
Yes, hold for next 10 years.
Okay, Ircon, is it good for the long term? Narasimha Reddy is asking this. He's got at levels of 219. Prashant?
Again, yes, for long term, yes, but for short term, there will be some kind of pressure in the price.
Okay, Pakshal Jain wants to know about CG Power, bought at levels of 805. Would you sell this and buy something like a Thermax or an ABB or a Kane Stack? Prashant?
Continue to hold from the current levels.
Okay. Okay, 1 second. Lakshmi from Trichy wants to know about Deepak Nitrate. Bought at levels of 749. Current market price is much higher. Would you book out those long-term gains? Kush, on the charts?
Yes, I would.
TCS bought at levels of 3155. This is Reddy who's writing in. Would you hold at these levels, Prashant?
Yes, hold and continue.
Mehul wants to know about, we've already answered a question on Reliance Industries. Coforge is the name of the counter. Technical views being sought. Kanan from Kerala is asking, good level to enter for 2 to 3 years?
Yes, keep a stop loss around the 1450 mark, and you could buy for the next 2 to 3.
Yamini from Chennai is asking about Godrej Agro. Godrej Agrovet is the name of the company. 837 is the counter. Looking to hold it for the short term, but don't mind holding it for the long term if she can't sell it for a profit in the future. Kush, what's the view?
Very much continue to hold on Godrej Agrovet. Keep a stop loss near the 765 mark.
Okay, and Arjun from Kolkata wants to know about BEL for 6 to 7 months. So Kush, on the charts, what's the view?
Positive, but keep a stop loss around the 365 zone, momentum missing.
Got it. Gentlemen, thanks so much for taking the time today. That brings us to the end of this edition of Ask Profit. Pleasure having you on the program. But before we go, a moment of pride for our NDTV family. At the 11th edition of the BCS Ratna Awards 2025 in New Delhi, NDTV has swept the honours. NDTV 24/7 took home the Best English News Channel of the Year, while NDTV India shone with the Best Election Coverage Award. Our very own Chief Executive Officer and Editor-in-Chief Rahul Kanwal has been named News Icon of the Year, and NDTV Marathi, the new kid on the block, celebrated a stellar launch, winning the Best News Channel debut of the year. It's a testament to our commitment to fearless, impactful journalism. Thank you so much for watching and for your support. Up next is Know Your Company, and this is NDTV Profit.
Ladies and gentlemen, we have the icon of the year, Raymond Lifestyle. Whoa, whoa, whoa! Let's have a thunderstorm round of applause. Congratulations. Icon of the year. Ladies and gentlemen, boys and girls, can we all be a little louder and clap for the icon of the year?
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching KYC, Know Your Company. I'm Harsh Saita and today we're going to be talking about Blue Star. Now there's been, while the numbers weren't entirely impressive at the face of it, they were a bit of a beat versus the consensus, and Q1 was expected to be a softer quarter in any case, given the fact that we've seen the monsoons coming in early, and that has impacted demand for air conditioners, and therefore Blue Star in focus. I'd want to know as to whether they can actually try and recover the lost demand of Q1. Is that a case of demand deferred or demand lost? That's what I'd want to understand. The second piece is with regard to channel inventory. Now, channel inventory and the view on the full FY26 in terms of FY, because if Q1 gets impacted, does that impact the full FY26 numbers, is the second piece I'd want to understand. The third piece is with regard to the key trigger, which is festive season. Going forward, that's possibly the only trigger that we are seeing. Can festive also possibly be a disappointment? Will it likely exceed expectations? Will there be a bit of a demand cover up in the festive season, given that we've lost some demand? Is the key piece I'd want to understand. The fourth piece is with regard to market share. They've guided for a 15% market share by FY26. 14% was the number FY25. Can they achieve that? And at the moment, at least in the segment which has been impacted the most, which is room air conditioners, we are seeing them gaining market share despite the fact that the numbers were softer. Now, let me talk about prices, because that will also determine where margins go. So, is there an ability, is there an appetite to raise prices further that we can see? The sixth piece is with regard to backward integration and cost control, because both of those will also impact margins, and therefore the next obvious question will be the margin inch up. They've guided for an inch up in margins. Margins have come off, unfortunately, because the top line has been pressured in Q1. But can it inch up is really the question, and how quickly can it inch up? And I will also have my eye on capex. They are likely to do nearly 1,000 crore of capex over the next 3 years, 300 crore to 400 crore kind of clip. A lot of that will be funded from internal accrual, so no concern there. But is there a change with regard to that stance as well? So you'd want to keep that in mind. But let me quickly also try and sum up that Blue Star is in 3 major verticals, right? One is, of course, their room air conditioning business. The second business that they majorly do is commercial air conditioning. So room air conditioning is unitary products, commercial air conditioning is the other piece, and then there is electromechanical projects. So all of those is what they focus on as a company. But let me bring in Mahima Vashajani, who covers the company as well as the sector very, very closely. And Mahima, about the company, take it away.
Right, Harsh, thank you for that. It's a very old company. To say the least, it commenced its operation in 1943, even before India got independent. Yeah, independent. Yes. So that's the year of commencement of operations, and air conditioning, refrigeration, and MEP solution provider is basically what Blue Star does. It maintains 2 million tons of air condition and refrigeration equipments. So that's the extent to which the overall equipment stands. Plus, Blue Star manufactures air coolers as well as water purifiers, cold storage, as well as specialty products. The company also offers turnkey solutions in MEP projects. That's your mechanical, electrical, and plumbing and firefighting projects. It also has the largest after-sales services as well in terms of where AC stands for the country. So that's also a segment of revenue for them. In terms of where the business segment stands, as you rightly mentioned, electromechanical is the first one, which is largely into central AC, ventilation projects, firefighting projects, as well as your water projects, plumbing, electrical, and railway electrification. In terms of where commercial AC stands, I mean, everybody knows what Blue Star does exactly in terms of where AC stand. Then we have unitary products. That's your AC coolers, air coolers, water purifiers, as well as commercial refrigeration is also a part of their business. And lastly, professional electronics and industrial systems. That majorly includes your specialized technology solutions, turnkey projects, as well as value enhancing services that the company provides.
Sorry, if we can just pause here for a minute, right? So it's across the value chain, right?
Correct.
One is it does B2B core, which is more for capex intensive projects. Then you have B2B for commercial ACs.
Correct.
This office itself could be one of those potential clients. The third one is unitary products, which is sells to you and me.
Correct.
Which is residential ACs, plus it does water purifiers as well for home, and it does for offices as well, where you have those water stands, which are largely done by something like a Blue Star. And then there is more government or pseudo-government type projects which they take up. So they're across the value chain. Just wanted to kind of put it out there.
Correct. And then also into after sales as well. Once they sold the product to you, after sales is also a big chunk of their revenue.
Yes,
in terms of their overall network also, the key end markets, as Harsh mentioned, it's residential, commercial, industrial, as well as infrastructure based. In terms of manufacturing facilities, it currently has around 7 manufacturing facilities and 4,000 plus channel partners. It's present in 18 plus countries, and there are plans to strengthen their presence in the international markets as well. In terms of the business model, just to give a perspective, what we were mentioning earlier, they're present throughout the supply chain, because from R&D to manufacturing to trading to being an EPC contractor as well as after sales, everything is done by Blue Star. In terms of the revenue breakup quickly, around 95% is from the domestic revenue, and around 4.5 to 5% is from exports right now. And segmental revenue, so your electromechanical projects and commercial conditioning system is roughly 45%, unitary products is 51%, and and the remaining professional electronics is around that 2.3% mark right now. So that's whole and soul of where Blue Star stands.
Well, yes, and we'll speak with the management. Veer S. Advani, who's the chairman and managing director, he'll be with us in a few minutes. Just one piece that I'd want to add to this. They use raw material, and that the prices of that pressures margins sometimes. So you need to be mindful of that. Copper, aluminium, inverter drives, electronics, all of those components used within the products that they sell is something that you want to keep your eye out on, because pricing of those could pressure the margin numbers as well, and there is commodity price risk there, especially where copper and aluminium are concerned. They're trying to hedge that, but not entirely successful there. Let's look at the 8 key metrics which we will track with regard to a Blue Star. We'll start with income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of that. And let me allow Mahima to start with the income statement.
Right, so income statement is a thumbs up for sure. I mean, let's take a look at the 4 metrics that we always consider. Revenue has seen a CAGR of 25% in the past 3 odd years, from a 6,000 crore in FY22 to almost touching 12,000 odd crores in FY25. In terms of the overall EBITDA, the CAGR growth has been 36%, from a 347 odd crores to almost doubling, or more than doubling, to that 880 odd crores. Even in terms of margins, overall margin trajectory, if we take a look at the past 3 or 4 odd years, that's been in the range of 6 to 7%. So that, as Harsh was mentioning earlier, key raw materials that they use is putting pressure on margins. That's why margins have not been able to expand in the past few odd years. Net profit again has grown 4-fold, from 168, 170 odd crores to over 600 odd crores, and a CAGR growth of 52%. So considering all of this, we've given it a thumbs up. In terms of where quarterly performance stands, year on year revenue has seen a growth of around 4 odd percent. EBITDA saw a degrowth of around 16 odd percent, but this quarter was largely also impacted by early monsoons, unseasonal monsoons, and plus 10 or 15 days odd in the quarter were also lost because of geopolitical reasons, the India-Pak war to be specific. Even in terms of margins, they've taken a hit, and net profit has seen a degrowth of around 28 odd percent. So that's, with regards to where the income statements stand, but because from a longer term perspective and a longer term picture looks promising, we've given it a thumbs up.
Well, yes, it does. Q1 FY26 was a tough quarter, and the base quarter was also a stronger one. So those numbers not really impressive due to that. Let me talk about the balance sheet now, and sorry, just the income statement for one little piece. 6,000 crore was the top line in FY22. Now I'm just thinking back. 1943 based company in FY22 has done 6,000 crore of PAT. So it's taken them nearly 80 years to get there, and then thereafter the pickup, it's doubled in the last 3 years.
Correct.
So just trying to explain that the opportunity size which they're tapping into, fairly large, right? So sorry, just wanted to kind of put that out there. Balance sheet, equity 40 odd crore, other equity which is profits and reserves around 3,000 odd crore, book value is roughly 3,065 crore, market cap is 35,000 crore, trades at 12 times book. You're looking at borrowing number which is extremely small, frankly, and it's all short term, 200 odd crore, really not as relevant, and you're looking at a bank balance which stands at around 400 crore. This will be important because they're doing a lot of capex. They're doing 300 odd crore of capex for the next 3 years, likely to be around 1,000 crore of capex cumulatively. So a lot of the EBITDA which comes out of the company, which is roughly around 800 odd crore annually, will go into this, into funding some of the incremental capex that they do. So something to keep in mind. Cash flow, Mahima.
Again, strong set of numbers here, because cash flow from operations has improved quite significantly, from a 243 crore in FY23 to a 688 crore. So nearly, 3 times. In terms of the metrics of cash flow to EBITDA, that has also improved quite significantly, 78% as of March 2025. And in terms of net cash flow position, that has also strengthened year on year and has been at around 63 odd crores in FY25. So a thumbs up here as well.
Yeah, and typically the cash flow is difficult for something like a Blue Star because they add up on inventory at the end of every financial year, because you are at a stage in the season where you will require a large inventory holding, and therefore you will see that build up in inventory every single year, and that's exactly what they are witnessing. We're just cautious because we're starting to see an inch up. I'd want to understand whether this is just normalized operating cash flow to EBITDA. Is that what one should expect, or can there be an improvement on this metric? Because clearly 45 to around 75%, not the kind of number we would expect from the size that Blue Star is. So that's with regard to cash flow. Let me now talk about the return ratios, and very impressive where the return ratios are concerned. Just look at the way in which return on capital employed has gone. FY21, I'd discount that to some extent because of COVID and probably the bounce up from COVID. But you look at FY22, 23, 24, 25, very steady trend with regard to ROC, no concerns there. But shareholding, Mahima.
Right, so fairly well-held company. Promoters have slightly decreased their stake from that 38.8% mark in 2022 to around 36.5%. But FIs have increased their holding from a 12% to 16%. DIS slightly inched up from 22 to 23 odd percent, and public shareholding has slightly come down from the 27% mark to 24% mark. So overall, taking a conservative approach here, we've given it a neutral rating so far,
yes.
and slight promoter downtick as well.
Yes, no, the promoter downtick was because of a fresh issue of capital. If you remember, they'd done an equity raise to do the to ensure that they have enough funds available for the capex that they are planning to do. So I may not completely blame promoter ownership, but just the fact that it's sub 40%. We generally look at metrics from a more than 50% standpoint, that the promoter holds the company in a far larger fashion, and therefore we've given this a neutral. No particular concern there. You look at street cred. 1 month the stock is down 2%, 6 months down 12%, year to date down 21%. 1 year performance is up 10%, largely not showing too much of exuberance. But you look at the 5-year number, it's up 7 times in the last 5 years. Strong outperformance, and therefore thumbs up from a long-term perspective, thumbs maybe down from a short-term perspective, and therefore we've given this a neutral. Valuations, and I'll take valuations and I'll allow Mahima to take up analyst recommendations. You look at the price to earnings currently, FY26 trades at 50 times. Its 5-year average is 64 times. Its competitor Voltus trades at 43 times, and the 5-year average for Voltus is 110 times. So maybe not the best looking picture from a valuation standpoint. It trades at a discount of around 20%, but look at Voltus. It's trading at a far larger discount, and at a discount to Blue Star as well. So you want to keep that in mind. Very marginal discount, but nonetheless, that's the valuation picture. Analyst recommendations, Mahima.
Right, so there are 11 buy calls, 10 hold calls, and just 2 sell calls, and not much in terms of where the return potential stands as to where Bloomberg estimates are concerned. So that's with regards to where street coverage stands.
Perfect. Let's quickly stack up all of our ratings and give the final rating on KYC for a Blue Star. That's how it stacks up, and Blue Star gets a healthy 5.5 on it with no thumbs down. That's the one which really stands out for me. Now let's go across to management. We have Veer S. Advani, Chairman and Managing Director at Blue Star, joining us. Great having you, Mr. Advani. This is Harsh here. Let me start off with Q1. Is Q1 a case of deferred demand? Is that what we're going to see? Are we going to see an impact of that on full year FY26? I wouldn't envy you if I were answering these questions, sir, but do give us that perspective.
Yeah, good. Thank you, Harsh. Thank you, Mahima. First of all, that KYC was excellent. I learned a lot about our company through that. You've done a lot.
Thank you so much. That means a lot.
And largely on the ball, so I appreciate that.
Thank you.
Q1 you're asking about. Yeah, I think that I think you'll agree with me. This is just postponed purchase. It's very clear that an air conditioner is on top of everyone's purchase list. However, it's a big purchase decision, 35,000 rupees plus. And in many cases, it becomes a multi-season decision because not everyone has that kind of purchasing power to just go out and buy it the first time they want it. So unfortunately, when it is true, when it is unseasonably
Okay, we believe we have lost him, but my sense is that he's tilting towards the fact that there's obviously going to be a recovery. Mr. Advani, sorry we lost you for a minute there.
So sorry, I'm back.
No
yeah, I was saying what you said is this is deferred. This is not lost, and we're quite hopeful that there will be strong demand coming back in the second half of the year and as we go forward. I think long-term outlook for air conditioners is very strong. We expect a CAGR of 20% for the industry, and that stays as it is.
Mr. Advani, in terms of your market share guidance, does that stay intact? Or from what I understand right now that your close competitor has been losing market share slightly. Do you think that that 15% guidance can still further go up?
So, we just crossed 14% this quarter. So even though the market degrew, I'm happy to report that Blue Star's degrowth was lower than the market. I think when you do channel checks, you'll see that as well. Tertiary sales have also been strong. Even our inventory in the field is lower than our competitors. So many things right, which gives us confidence that we should be able to inch up on market share. We're not changing our guidance of 15%. I think we'll keep it at that because we need to get there first before we set the next target.
Understood, Mr. Advani. What's keeping you on the ball there? Because gaining market share in a tough environment is especially difficult. So what are those levers which you're using to stay ahead?
Yeah, so it is our long-term strategy, which we started 4 years ago. It is investing in the product. So product is the king. We believe that we have the market-leading products available that customers want. We invest in R&D, we invest in our supply chain, we backward integrated. We're building everything in-house, which also, by the way, has allowed us to be flexible on our inventory position in the market. So a lot of investment done, we believe, into the business, both the product as well as the delivery mechanism. And that is what is allowing us to win in the market. I think customers, even though they are first-time buyers, they're looking for value, they're looking for credibility. And I think Blue Star is able to give them that in this category where we've been around for 80 years, as you said.
Mr. Advani, where does pricing stand? Because no matter what, competition is there to stay. What is the common trend that you're observing? Are you able to, slightly increase your prices when it comes to the selling pattern? Or do you have to be really cautious when it comes to your price increases?
So you may know we raised prices before the beginning of the financial year, April 1. So that was done, which partially helped us in our EBIT that we delivered. We have not rushed to give discounts and clear inventory because, as I mentioned to you, we don't have as much of an inventory problem. So we've been able to keep steady prices. I think in a tough market like this, that itself is a positive. And we're able to command that kind of price position because I think the channel and customers believe that we are a steady price operator. So I think that comes to our benefit in a tough market like this. We're not as nimble to react to market changes with pricing, and I think that's something that's appreciated by the trade.
Got it, sir. So let me ask you a question which is likely going to be the golden question. Margin inch up. You've spoken about it in the past that you're expecting an inch up in margins. You've not given us timelines, but give us a perspective. Directionally, it should go up, of course. Maybe in the next 3 years, if you were to put a number to this, what would that likely number be?
So you're putting me in a tough position, Harsh. I'll put it to you this way. It's about mix of business and then it's about profitability of each business. What I want to convey is that, segment 1 is expected to grow at about 15% a year is what we've been talking about. We expect segment 2, which is the unitary cooling products business, to grow faster. So if that happens, that the unitary cooling products EBIT margin is higher than our B2B business, and therefore we should see that business mix improvement on an aggregate Blue Star basis. Having said that, it's a hyper competitive industry. And as this category grows, there'll continue to be pricing pressure, and therefore we have to keep working on cost management, which is something that Blue Star does well. So net, Harsh, difficult to give you a number, but we've been looking to improve our EBIT by at least 100 basis points, over the next few years, and we're confident of delivering that.
That 100 basis points is over 7% or 6%?
So this quarter doesn't count. I think we take full year last year as the number, because this is just an anomaly. I take last year and then look at improvement.
Okay. In terms of your channel inventory buildup, because that would have happened this particular quarter because of unseasonal monsoon, in two next odd quarters, that should not be a concern, correct?
Yeah, I'll give you some numbers. We're currently holding about 75 days of inventory between our warehouses and our channel. That should have been 45 days in a normal summer. I'm not talking about a blockbuster summer. In a normal summer, we end the summer with about 45 days of inventory. That's about 75. So there's 30 extra days of inventory, which we are not too worried about. We think it'll get cleared out soon. There's a Bureau of Energy Efficiency table change coming January 1, 2026. And that tends to therefore lead to advanced buying of the existing table typically. So between the inventory that will get cleared out and production that will restart, I think we're comfortable with inventory over the next couple of quarters.
So, sir, if I were to look at Blue Star as an investor, right, you're at roughly 12,000 crore of top line at the end of FY25. Let's keep Q1 out. It's a washout quarter.
Yes.
FY26, 27, 28, 15% top line growth. Is that something that one can reasonably expect you to do?
I think so. That would be our, I think that's doable. We would like to do more. We have ambitious plans internally, which may be higher than that. But I think as an investor looking at Blue Star, 15% CAGR is very reasonable.
Any change in the capex guidance that you've given so far? And this is more likely in the backward integration aspect, correct?
So we have three areas of capex. We have backward integration and capacity expansion, which is in manufacturing. We have R&D capex because we are a heavy R&D user, and then we have our digitalization program. So across those three, we expect to spend around 1,000 to 1,200 crores over the next 3 years in capex, which is what we've been doing over the last 3 years. So it's not a further increase, but it is a step change over sort of pre-COVID that you've been seeing.
All right. Thank you so much, Mr. Advani, for coming in, speaking with us. Out of time on this one, frankly, and if of course Mr. Advani's guidance, which is conservative, and generally we've tried to collate all the guidances and get a sense. They've been on the ball with regard to the guidance, Mahima. 18,000 crore of top line in the next 3 years is what they will likely clock, and at an 8% margin, that will mean your EBITDA goes from 900 crore to closer to 2,500 crore, which is substantial.
Yes, more than triple.
Yeah, absolutely. and the way to look at this is more of long-term business rather than short-term. Let's also quickly zoom into the stock price. Let's quickly see on what's happening on that one, because while the numbers were, the stock has zoomed 3%. And is up 3%. Okay, so doing well today as well, did well yesterday post the numbers, and in a weak market, doing very, very well. But that, viewers, for you is a Blue Star. Completely out of time on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising.
Nifty 50 hits a 3-month low with 46 out of the 50 stocks trading in red. The Nifty metal and realty sectors lead the losses while most sectoral indices slide. The Nifty media shows some gains led by PVR and Anox. Sending a strong message a day after US President Donald Trump escalated the tariff war against India, Prime Minister Narendra Modi emphasizes that India will never compromise the interest of farmers and fishermen. BHEL under stress as order inflows jump 42% year-on-year, lifting its backlog, but 7 times the FY25 sales. Meanwhile, GPD Healthcare falls over 10% on the back of weak earnings. Hello and welcome. Let's take a quick how the markets are doing. My name is Puneet Zaveri and I'll be joined by Mr. Hiral Dadia just in a bit. But first, let's take a look at how the Sensex is doing. It's been, and the Nifty as well actually, it's been a day which has been under pressure today, 0.6% down on the Nifty 50. Let's quickly take a look at the constituents as well. We did see a block deal on internal and that's leading the pressure on that particular stock today. That's the contribution. Let's look at the heat map as well very quickly. On the Nifty 50 today, we've seen a lot of individual stocks that were in focus. Hero MotoCorp reacting to results positively, while something like an ITC, while marginally only up about 0.11%. On the downside though, we've seen some pressure on Tata Motors ahead of earnings tomorrow. That will be a very key one in terms of outlook for the company for FY26. We're seeing some pressure on Jio Financial as well. Cipla is the other one, down 1.45%, while the Grasim is down 1.3%. Let's quickly look at the advanced decline ratio. That will tell us how the market, essentially major performers of the market have been doing. And while we did see some intersection of that happening somewhere around 10 to 10:30 p.m. post that, it's been a clear downtrend across a bunch of stocks, almost 1,700 stocks declining in trade today. Let's also look at the mid cap and the small cap. Those are the other indices. We've largely seen actually the benchmark Nifty index outperform the broader market, and that seems to be the trend as well. Nifty down 0.6%, the mid cap 150 down 0.7%, and the small cap 250 actually seeing much pressure today, 0.9% down. And finally, the BSE 500, a lot of individual movers yet again today. Let's look at that very quickly. We're seeing Rain Industries up almost 9.8%. Something like Kajara Ceramics is getting rewarded today, up 4.4%. Fortis posts numbers is reacting positively, and a similar move happening on something like an Udo Minda on the positive sides. On the downside, GNFC and Prince Pipes, both very, very weak numbers for Prince Pipes. The net profit is down 80% in this particular quarter, and that's reflected in the sharp pressure seen on that stock. Something like SKF is also down on that aspect, and something like an Avanti Feeds is down on the tariff tantrum, to say the least. But moving on to this major story as well, US President Donald Trump has imposed a significant 50% tariff on India, targeting its purchases of Russian oil. Now, he also has labeled India as a high tariff nation. However, Prime Minister Narendra Modi has firmly reiterated India's strong stance in response, declaring India and saying that India is ready to face the tariff challenge. Before we bring on to Soumyakanti Ghosh, who is the Group Chief Economic Advisor of SBI and part-time member of the 16th Finance Commission, let's first hear Prime Minister Narendra Modi's message to the world.
साथियों, हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है। किसानों की आय बढ़ाना, खेती पर खर्च कम करना, आय के नए स्रोत बनाना, इन लक्ष्यों पर हम लगातार काम कर रहे हैं।
Well, that was a strong message from Prime Minister Narendra Modi. But as mentioned, let me welcome in Soumyakanti Ghosh, who's the part-time 16th Commission member, as well as the Group Chief Economic Advisor of SBI. I'm also being now joined by Hiral Dadia as well to take the conversation further. But Mr. Ghosh, let me come to you first. What do you make of Prime Minister Narendra Modi's speech and the clear message that he's trying to send to President Trump in this aspect?
Yeah, thank you. Good afternoon. I think the developments over the last several days actually indicated that a trade deal with the US may be round the corner, but it's still a little bit far given the facts that there has been another 25% tariff which has been imposed yesterday. But I would like to take the positive out of it. I think the US also needs India, and India also needs the US in terms of a partnership that goes not beyond trade. So basically it's a people, it's a trade, it's the digital technology. So it's actually some sort of a relationship which goes beyond trade also. So my perspective is that over a point of time, there should be a trade deal, and the markets also, if you look at the movements in the markets, if you want to look at the movement in the currency, I think it indicates that the markets are now veering towards the fact that the harder is the imposition of the tariff, the more likelihood that the deal could actually come through towards the end of this month. But we must keep our fingers crossed and ensure that the deal, because as if I look into our data, Indian exports to US is around 20% of our overall exports, but US also imports 2.7% of the share. And India's actually export share of the top 8 primary commodities is close to around 50%, of which pharma and electronics are actually around close to 24-25%, which are tariff exempt. So that's the interesting part, because pharma US also needs India's help, because India exports drugs which are important for the US population. So if I take all this into perspective, I think it's a matter of give and take. Hopefully there will be some trade deal over a point of time which will be mutually beneficial to both countries' interests, specifically India.
Soumya, in fact, good afternoon, Hiral this side. Happy to speak to you after a really long time, and welcome to NDTV Profit as well. Soumya, an interesting point that you made, that it's best to pull out the positive out of this conversation, and it becomes eminent that the next 20 or 21 days will actually be used for negotiations to arrive at a conclusion in terms of a deal. And I think that's what the markets are showing, that resilience as well. But everything said and done, hypothetically, let's still assume if we are still at 50%, you mentioned a couple of sectors. In fact, the last time we did speak as well, you had indicated a potential decline of around 3.5% in the exports to the US, with a minimal impact on the overall GDP. Any calculations on the back of the recent escalation to 50% as to what would be the impact?
See, I think we had actually estimated the impact some time back when the 25% was announced. I think our estimate was around 20 to 30 basis points could be the impact on the headline GDP. We have not revised that number because we believe that a trade deal was around the corner, and after that, I think additional 25% has been imposed. So my sense is that the sectors which are going to be impacted, I think mostly because of this, is one is the gems and jewelry, the other is the textiles. The other is also basically the iron and steel, and also to some extent the nuclear reactors. But some of these sectors are actually labor intensive. So nobody is denying that there is going to be a short-term impact on the Indian exports. If India exported 20% of its share to US overall exports, even though India has significantly diversified in the last couple of years, but there is no denying of the fact that it is going to have an impact. But our sense is that we can still ride through it, because there is a window of 21 days. The goods which are in shipment, that will go up to September 17th. So there is a hope that we are running against time, but there is a possibility that, and the US delegation is visiting India on 25th. So all these actually, and the 27th is the outer timeline. So basically it means that the talks with the US is actually could end in a conclusive deal by the 27th. So you don't have to go through the entire process of this additional 25% tariff impact. But I agree with the fact that this uncertainty could have some impact on the Indian exports, and also something on the headline GDP.
So Soumya, okay, so this is in terms of individual sectors, and we are hoping something will happen. But the latest tariff and the rationale that US has with this number is specifically related to India's oil trade with Russia. Does this really change the long-term outlook for the Indian economy, taking into consideration the kind of imports that we're doing from Russia? And if we have to do a trade-off with importing crude from the US to some extent, how do the mathematics change, from an economy perspective?
No, I think oil, they have mentioned oil as the issue, but I don't think oil is the primary issue, because US also imports from Russia. The point is that India is actually, I think, 1.7 billion barrels per day is the imports from Russia. And if I were to make an estimate of India, suppose foregoing this 1.7 million barrels per day from USA, there is no guarantee that there will be a concomitant increase in that output in the global market. So in the eventuality that India actually foregoes this there is no guarantee that it could be compensated by India buying from other markets. So the next question therefore will be, it could actually lead to an increase in the global oil prices. So it's actually in everybody's interest that we continue to buy from US and also from Russia, and also the fact that we are importing from US. But at the some point of time, there is some amount of demand basically that cannot be compensated what we are getting from Russia. So over and also the price difference between the Russian crude and the other crudes in the market is actually not that significant. So my sense is that if India were to say hypothetically that stops buying oil from USA completely, that will actually push up the oil prices, which will hurt the emerging market economies, including India, even worse, because there is no guarantee that it will be compensated in the global OPEC crude oil production.
So, Soumya, if we see an impact that comes in terms of oil prices globally as well, let's consider at least, again, it jumping up to that beyond $100 per barrel mark, that $100 to $120 barrel range, if we have to take at the high points. If that happens, what is that impact that you should be actually accommodating on India? That's number one. And two, you know, in the previous report also you had mentioned a boomerang effect where US tariffs would lead to inflation in the US. Do you see any inflationary risk in India as well, if there are any retaliatory measures or on the back of disruptions in supply chain?
No, as of now, I think we are actually not so much so much pessimistic on the oil market. We continue to believe that oil will trend in the $60 to $70 per barrel because there is significant amount of uncertainty in the global markets. So basically, and also the fact that most of the growth, the export growth has been front-loaded in the first quarter in anticipation of an US tariff hike coming. So I am not so much concerned about global oil prices breaking the $100 mark, at least in the near future. But come what may, if there is going to be an impact, if the oil prices go up, there could be only an impact on Indian inflation if that is passed through to the consumers. Otherwise, there will be margin compression of the oil companies. And I don't think there will be any pass-through of that in price and rise, even if suppose that were to happen. So there may not be any impact on the headline inflation trajectory. But regarding the interesting point is that in all these trade wars, the US is actually going to get hurt significantly adversely. Our estimates show that the US imports actually is around 3.6 trillion. So even if we assume a 20 to 25% tariff, the impact on the headline inflation of US is currently running at 3%, could be as much as 350 to 400 basis points. So that coupled with the fact that the consumers, the prices of the US goes up, so that will hurt the income of the US population. And also there are estimates which says that it could be around $2,500 per year, more so at the bottom end of the population of the US. So it's also the fact that in this tariff war, everybody is a loser. So nobody is a gainer. Some may be a loser in the short term, somebody is a loser in the long term. But my sense is that India actually has played its cards quite well till now. India has been wading through this crisis, and hopefully we should sit on the negotiating table to see how quickly we can get out, strike a trade deal with the US.
Absolutely. And then the RBI's action next is going to be key, for which I think we should connect again on NDTV Profit to understand what the trajectory will look like. That it has been a status quo this time around. But thank you so much, Soumya, for joining us on the show and sharing the views. In fact, let's move on to our next conversation, Puneet. I think it's Pidilite which is in focus.
Well, definitely. And, you know, we did, our colleague Mahima did speak to the management, Sudhanshu Vats, and it was an interesting quarter, to say the least, for Pidilite. Let's listen in to what the management had to say.
My first question to you is that everything is improving, you know, and from here on, I think it's only going to improve going forward. Just want to understand, why is your stance still cautiously optimistic?
Mahima, always a pleasure talking to you, and you know, and we are very happy with the strong set of results that we have delivered. I think you are right. I think we are saying cautiously optimistic, Mahima, because I'm breaking it up into two. I think as far as domestic demand is concerned, our ability to deliver double-digit profitable underlying growth is concerned, that is pretty much established. So I think we've done it even when the demand conditions in India have been a little bit more adverse. So I think we stay confident in that space. I think the growth in construction sector in general, overall liquidity, the interest rates coming down, they are all good news, both for medium term and as well as in the immediate term. I think we remain cautiously optimistic because the entire macroeconomic global scenario and the entire confusion around tariff which is there in the world today, it will be incorrect for me to say that I am really, really optimistic, because that piece is the one which gives a bit of caution. We've got to be careful. We are confident of navigating that also quite well. But the amount of uncertainty, Mahima, that has come into the world is very difficult to predict. So to that extent, we remain cautiously optimistic, because we don't know some of those headwinds, how and when they will shape up. We will remain prepared for what comes, but that's an area. That's the reason for cautiously optimistic.
Right. So that's a conservative approach. But does that mean, Sudhanshu, that you're under promising and you're over deliver, because that's something that you've already done in Q1?
No, I think, Mahima, one, we've always maintained that when it comes to our profitability, EBITDA, our request is never to look at quarter on quarter, always look at it from year to year. So as far as our EBITDA corridor guidance is concerned of 20 to 24%, we stay steadfast on this. With the input costs remaining benign and with some amount of scale leverage that is coming in, could we be on the higher end of that? Yes, quite likely. You've seen this quarter's number at 25.1, but that has a little bit of phasing of ANSP, which will go away in the subsequent quarters. That has a little bit of seasonality as well. But those advantages which I talked about earlier on benign input costs and scale leverage will remain. So I think that's the piece. As far as the double-digit underlying volume growth is concerned, we'll continue to deliver on that. Whether we inch up a little bit depending on demand situation, we'll see. We are a pioneering company, so there are a lot of things which we do are with our applicators and our users, and our ability to go deeper from a distribution point of view and from field marketing point of view, which is what we do a lot, is quite consistent. To that extent, when the going was a little tough for others, we delivered good numbers. Even in the quarter gone by, Mahima, I think whatever numbers I've seen, we've delivered very good numbers. We are confident of being able to consistently deliver those numbers as we go forward. If we get a little bit of tailwind and if it lifts it up, that's a bonus.
Fair enough. I get your point. In terms of the B2B business, I was just, and correct me if I'm wrong here, when I was going through the press release, I realized the underlying volume growth is at 13%, which is lower than what you did in the past 2 odd quarters, if I'm not wrong. And this is with regards to, you did mention the start that this is with regards to a lot of macro headwinds as well. But apart from those, any concerning factors here?
No, I think first and foremost, Mahima, the good news in this is the 8th straight quarter of double-digit volume growth even in our B2B business. And I think while this quarter you are absolutely right in your observation, the number is a little lower than what it has been in the past. But I think the reason for that is basically because the B2B business has a little bit of exposure to direct exposure, very small direct exposure to United States, and some cascading exposure. So we sell to companies or to industries that actually export, which have higher export intensity. So that's the piece we will navigate. But the good news is that our projects business is doing exceedingly well. So that's growing very rapidly. Even our off-site joinery business, furniture making business is doing very well. So we are basically confident that between our projects business and our industrial business, we will continue to deliver double-digit underlying volume growth. A little bit of this impact which is going to come, we will navigate that as we go forward. And we'll show you a little bit of up and down, which you've seen at this moment.
Understood, Sudhanshu. In terms of the EV side of things, how are you planning to scale that when it comes to EV and electronics? Are there any partnership or wins there?
So you see, this is a slightly longer term game, and I always ask this question. So I think as far as electronics and EV is concerned, we have basically are in touch with or have established really good contact with all the large EMSs in the country, electronic manufacturing services companies. We have good this thing with some contract manufacturers. We also have now built relationships and started conversations with the EV players. As far as our products are concerned, many of these products are getting tested for specification. This takes a little bit of time in this industry, which we fully understand. But I think we're making progress, and I can share with you in the quarter gone by, we've won one additional large EMS and the commercial transaction with them have started. We are strengthening our capacity as far as both innovation, ability to make this, collaboration, which we've done, which we've spoken about earlier, and also our front-end teams and the capability which we need to bring in to be able to do this. This indeed is a good long-term opportunity for us, and we are staying focused on building it and driving this to our advantage.
Okay. What is the capex plan for this year, FY26?
So our capex always remains in the 3 to 5% of our turnover. So therefore, this year again, it will be similar.
Okay.
You are seeing the action will be a little bit around ROF, which is doing which is growing very rapidly. So that is also a distributed supply chain. So we are going to put up additional plants there. That is happening. But we are also consolidating and automating some of our plants in order to deliver more agility and consistent quality as we go forward at a more cost-effective way. And that is the job again which is happening. So some capex will go in consolidation and automation for our traditional businesses as well.
Understood. Okay. And one last question in terms of where demand stands, both in terms of rural as well as urban. Any shift in terms of your strategy when it comes to the kind of demand that we're seeing? Because, a lot of consumption companies that I'm talking about have come out and said that rural has grown in double digits, but urban is seeing green shoots and has grown in single digits. So any commentary there, any change in strategy?
So, Mahima, as far as we are concerned, I think we've delivered consistently better rural growth. And I think that happens because of our ability to deliver on depth of our distribution, continuing to deliver more and establishing more Pidilite ki Dunia, as we call it, which is now we are 18,000 plus in that space. But more importantly, continuing to work with our users. So even in the quarter gone by, our rural growths are stronger than our urban growths. We are seeing, as you've rightly heard from others, we are seeing a little bit of uplift, and I think that should be helpful. But we are focused on doing what is right, building the demand bottom up, going to users and applicators, and we'll continue to do that. And we'll hopefully continue to reap dividends of this moving forward.
Well, that was the management of Pidilite. It's been, as Mahima also spoke to the management, let's quickly look at the one-year chart. It's been where the management has been cautiously optimistic, not giving any kind of guidance, but in this uncertain environment, while the stock's also not done too well, this could be a very interesting play going forward because we've seen the underlying volume growth being around 9 to 10%. Both the B2B business is also doing well, roughly about 12% of volume growth they had in this particular quarter, while the consumer and the bazaar business has done roughly about 9.3%. So both these segments going from strength to strength across growth parameters, in the next couple of quarters, and that'll be something to watch out for. But for now, that's all the time we have on this edition of earnings and markets at 12. Thanks so much for watching. Profit Buzzers comes up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint.
Welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia, and with me is Vaisha Chandani. Interesting day, interesting moves in terms of markets, and clearly, whether they are shrugging off, Trump tariff threats or not is what we need to wait and see, because 50% is a lot. Markets did see a good recovery after opening slightly in the negative, so there is some bit of resilience, Varsha, that we're picking up so far. Let's just pull up Nifty 50 again. You're trying to inch towards that day's lowest levels. You're below that 24,450 mark. So yes, there is some bit of pressure that is continuing to build, but the cuts are not as deep as we had expected to some extent. In fact, I wouldn't say as expected, that could have been warranted. Expectation absolutely since yesterday evening was that markets will be resilient, and we have that 21-day window where negotiations could take place. But with that, let's quickly pull up Bank Nifty and the sectoral heat map to understand where is the resilience coming from and where is the pressure building up. Bank Nifty, a similar trend that we are seeing in terms of Nifty 50 is what Bank Nifty is also mirroring. Let's quickly pull up the sectoral heat map post this, so we'll know which sectors are seeing gains. Is it the domestic-oriented sectors which are resilient? Absolutely not. Everything in the red except media, which is seeing gains of 0.2%. But apart from that, defense, biggest profit booking coming in there, 1.2% downtick coming in on that sector. Metals is down in trade, infrastructure, oil and gas, PSU bank index. Real estate continues to trade under pressure. Your pharma, which is down to the tune of almost 0.6 to 0.7%. Auto down almost 0.5% in trade as well. I think it's only IT which is also showing some bit of resilience in today's day of trade, where it's pretty much on the borderline with consumer durables and FMCG being least impacted, but that is also trading under pressure. So that's the sectoral heat map. But before we get into individual stocks, let's just pull up the mid cap and the small cap index, because the next conversation that we need to, there you go, similar trends in terms of mid cap 150 and small cap 250 as well. In fact, the cuts in terms of broader markets are much deeper as compared to the large cap space, and the advanced decline ratio favoring the declines. But auto, that's the sector to focus on, because good moves that we saw in terms of yesterday's session as well. In fact, what has happened so far as per the FADA report is that the auto sales have hit the brakes in the month of July. The two-wheelers have seen growth of around 6.4% coming in there. And, you know, what does this actually mean from here on? Joining us on the show, we have CS Vigneshwar, President at FADA. Vignesh, good afternoon and welcome to the show, and a pleasure to speak to you as always on NDTV Profit. What is the data indicating so far? Because categorically, two-wheeler space, a 6.5% kind of decline is what you're seeing. With this, if you have to look at passenger vehicles and CV, what is the immediate trend that you're picking up?
Passenger vehicles and CVs have been a bit flat this time, Hirul, but we also need to remember that it was a 3 month of extremely good growth, I mean, in terms of the relative situation. So there is going to be a drop. We've also seen a major drop in the two-wheeler segment. As you mentioned, it's about 6.5%, which is a huge amount of drop versus the year-on-year sales. When you look month-on-month again, there has been a drop from the two-wheeler. Two-wheeler pretty much are the benchmark in terms of how the auto industry is doing in terms of health. But then when we compare it to last year, we need to see that last year was, in the month of July, it was an extraordinary month, because in April, May and June, we had extremely low sales because of either monsoon situations and floods in certain places or extreme heat. So a lot of the sales in April, May, and June were actually postponed to July. This time it wasn't so. There's been decent growth in the months of April, May, and June. So July perhaps had to contend with a pent-up demand, 25 versus 24, and that's why the 25 looks a bit weak. But however, the mid-term outlook and the short-term outlook, when we look at it, it looks quite decent. There's nothing much to, there are not much worries in terms of major economic factors, except of course, you have the tariff effects coming in.
Got that. Hi Vigneshwar, Varsha this side, pleasure to have you. On the two-wheeler sales, which has declined. Now, given this segment is a proxy to rural sentiment, what are the primary reasons for this decline, especially if you see the tractor sales, show robust growth. Is it related to specific crop cycles or monsoons or financial availability in rural areas? So any views on that?
Thanks for the question, Varsha. It is a great question. And yes, the buying of tractors is part of the crop cycle, but the buying of two-wheelers would, of course, be kind of a luxury. And this would probably happen after the harvest has done and the money has come in. But having said that, again, 2024 July was a pent-up month where a lot of postponement from the previous 3 months were actually pushed on. So perhaps that also has helped the year 2024 July. But however, the basics are not too different. The basics are looking quite strong. The rural markets have been contributing in the last few years, and it's also been a very resilient market, and hopefully it remains resilient and strong for us.
Vignesh, you did mention in the previous question with regards to tariffs coming in as a threat as well. Now we're looking at 50% currently post last evening. Though you have the Indian government who's categorically come out and said that there will be no trade-off as of now, specifically with regards to protecting national security, farmers, etc. With everything said and done, we have the next 21 days in terms of negotiations, but if it stays at 50%, what is the kind of impact you're seeing on the auto industry, taking into consideration not only OEMs, but also the auto Ank segment?
There are not many exports which go from India on towards the US in terms of a full vehicle, completed vehicle. But in terms of the auto accessories, of course, quite a lot of trade is done. And India being a great market in terms of its quality and cost competitiveness, of course, is going to be affected. But for me, I'm more worried from the customer point of view because I represent the dealers and where we are the last mile which connects with the customer. For our sector to do well, for our industry to do well, every customer needs to do well, every industry needs to do well. So if the 50% tariff, definitely every industry is going to be affected. And I'm completely with the government in terms of protecting our farmers, protecting our fishermen, making sure that our defense is strong. So these are the more important things in life. But unfortunately, the trade-off would be that the rest of the sector would be affected if the 50% tariff comes in. But again, we have 21 days. You never know what's coming out of this whole tariff war because it's so dynamic, it's so fluid. Every day I'm seeing a different number and none of these numbers are for sure. So hopefully, I think the negotiations are still going on and I hope there's a win-win situation where both America and India are able to come to an agreement where both of us feel strong about the agreement. But at the 50% tariff, certainly things are going to get affected. Perhaps at the 25% tariff, things were manageable. Yeah.
So 25 is manageable, 50%, yes, certainly an impact specifically with regards to auto Ank. The other aspect is the inventory levels. We're talking about PVs that is at around 55 days. Yes, it is elevated, but we're just ahead of the festive season, Vignesh. So is this an anticipation of the festive season and a good festive season for the sector? Or are you expecting any disappointment taking into consideration the dynamics right now?
The dynamics are looking very fluid. Having said that, we've been around as an industry for quite a few decades in India. And every time there is some kind of a challenge, we always overcome that. And the most important thing about India is its very strong domestic consumption. So that would certainly come on to help. That could be a tailwind. Of course, if it's going to be 50% tariff, you might as well keep it at 500%. So that doesn't make a difference. At 50% itself, any cost competitive sector would be out of reach for us. But however, the monsoons have been great. The festive seasons are coming in. Yes, the elevated stock levels are not desirable. This is what we started off last year, and we really end up with nearly 85 days of stock last year around, which isn't desirable. The OEMs need to take into consideration the volatility in the markets and also make sure that their wholesales are not dumped onto the dealers.
Okay. And Vignesh, I think a couple of the two-wheeler players who categorically now came out and mentioned that everyone is monitoring the raw material price hikes, specifically with regards to metals and precious metals. And two, the rare earth crisis is now starting to show an impact with regards to production. What is your read of the situation and what do you think it will impact going ahead? Do you think there will be a demand-supply mismatch that could come in, though we have a 55-day inventory that the PVs are already sitting on? Two-wheelers, what is it looking like? Because I think it's Ola, I think Bajaj Auto, all of them have spoken about it.
If there's one thing which is even more opaque than the tariff was, would be the availability of rare earth metals. And as dealers, we've been given very little information about this. We've also talked to the industry, the people in the industry. Some of them are, for example, SAM claimed that in May or June, they would run out of parts to make vehicles, but we have gone past July and still in August, and we are still manufacturing vehicles. So I'm a little bit confused about it. Of course, Bajaj has come out and talked explicitly about how their EV products would be affected right now. We are still wondering what's happening there, but the industry sources have told us that they're trying to get alternative sources and to keep the engine moving. The automotive economy moving in India. And yes, so again, EVs play a very, very small part. Probably in the scooter space, it's very large. When you look at the three-wheelers, it's really, really big in terms of market share, nearly 62% in three-wheelers. But when you look at PVs, it is around 4.5%. When you look at two-wheelers, it's about 7%. So we still have the mobility needs which can be met by ICE engines. But of course, EV is a growing market and all of us would like to sell more EVs. It all depends on how the government is able to work the deal out with China right now and how the OEMs are also able to source alternative buyers and suppliers.
Understood. Got that view, Vignesh. Well, thank you, so much for joining this conversation. Always pleasure to have you.
Thank you.
Moving on, Raymond Lifestyle is in focus after its Q1 number, and of course on the back of tariff that we are seeing. But let me just get you the key takeaways when it comes to Q1 FY26 numbers. They've recorded Q1 revenue, which was led by strong growth in branded textiles and apparel. EBITDA growth was on account of operating leverage that the company has seen, and growth in bottom line, that is profit. This was despite marketing investments and muted consumer demand that the company has seen. Garmenting revenue was impacted due to US tariff uncertainty, leading to weaker order book. But to speak about more on numbers and what is the outlook going ahead, we are here joined by Amit Agrawal, who is the Group CFO of Raymond Lifestyle. Hi Amit, welcome to the show and pleasure to have you. So very pleasure to have you. Well, we are seeing kind of turnaround when it comes to Raymond Lifestyle. Any hits and misses this quarter that you would like to tell us?
No, actually, we are very pleased with the performance which we have been able to deliver in this quarter. As you can see, the demand was still continues to be muted, but we have been able to put together our products in much nicer manner, and both the fabrics as well as the branded apparel has delivered a growth which is constituting more than the range of 27% in textiles, 22% in the apparels, which are the main key segments in the domestic market. And that is led by the volume growth. So it is not a price-led growth, it is a volume-led growth. And I think that is something which we have looked for very, very carefully. Two things what we have done, very clearly we have put together some newer products at a price point which was able to replace some of the imported fabrics which were being sold into the Indian markets. Second thing which we have been also able to do is bringing what are the new products and communicating it with the consumer at large. So communication is very, very key, the advertisement or explanation around that. And I think these two has led us to move in terms of revenue growth, and which eventually delivers the profitability. If I look at the EBITDA growth, we grew by almost 36% from 89 crores to 122 crores in this quarter. So that has been quite robust. And as far as garmenting is concerned, we have really reduced, got a lower sales, primarily because of the US tariffs. As you know, every day it keeps changing. We have seen very clearly what happened yesterday, completely out of blue. So I think a lot of our retailers in the US are holding back the supplies from India.
Amit, good that you made this point with regards to tariffs. Actually, Hiral, this side. My question before we speak about the other part of the earnings is also that the garmenting segment revenue that you're indicating did decline on the back of the uncertainty on account of US tariff announcements. Firstly, what's the kind of total exposure that Raymond Lifestyle has to the US? And two, if they are holding back purchases right now and a 50% tariff does come in, what would you do?
Yeah, okay. So first of all, let me answer it at a high level. These 50% tariff and the stance taken by the US changes practically every day. And it is not with us, it is happening with other countries as well. Who knew? They agreed with Japan, and yesterday night they again gave an increase in the tariff. So I think this is a very, a volatile situation which keeps changing, and we need to watch out carefully. And there should not be a knee-jerk reaction based on one announcement made by White House. So I think we are very clear that we have a long-term play. Now, as far as our exposure is concerned, you look at it, out of our total garmenting revenue, almost 50-55% comes from the US. And of that, almost 30% of that is coming from our Ethiopian plant, and Ethiopia continues to be at the lowest duty rate, tariff rate of 10%. So I don't think so there would be any impact in Ethiopian business. Rather, it has a potential to grow the business. Second thing, when we talk about the business in India, we always have a flexibility. If it really continues for a few months, we have the flexibility to move some of the machines, and these are not very large machines, from India into Ethiopia and do more business out there. The third thing, which is also a possibility, that we can support by supplying our fabrics into the countries like Bangladesh or Vietnam, so that we can continue. And we had already sent our teams to Vietnam somewhere in the month of February, March, that we can export some of our fabrics to get it converted there and shipped out eventually to the US market. But as I said, it is not appropriate to make any knee-jerk reaction onto this, whether you never know what is going to happen tomorrow. And we know two more things which are very clear, given that they are sending their team in the third week. US is sending their team in third week to India for a trade deal negotiation.
So Amit, if I get your point correctly, okay, so from the 50% of the business that goes to the US, what percentage of it is going from Ethiopia, number one? What percentage of it is getting exported from India? Yes, on the Ethiopian side, it will be beneficial because you're just talking about a 10% tariff. But the kind of business that you have from India directly to the US, is there a possibility where you will be able to mitigate that risk by shifting that business from India to Ethiopia or any other country? What is that strategy going to look like in terms of 50%? I'm sure there will be negotiations, but let's take hypothetically it's 50%.
Okay, so to be clear, so let me give you the specific numbers. This is 550 crore is the total revenue for us out of 7,000 crore revenue of a lifestyle. Okay. So it is what I was talking, 50% was only for the garmenting piece of the business. So in that business, around 400 crore comes from India, 150 crore comes from Ethiopia. It still has a capacity of another 50 to 75 crore to increase from Ethiopia, which we will be able to transfer the business out of India into Ethiopia. Rest of the business, we have the flexibility to support through Bangladesh and Vietnam, because we are already in discussion. And this is not the first time we are having this discussion. We have been having this discussion for quite some time, that whether something happens, then we should be having the flexibility to move some of the fabrics. However, anything movement right now, because in the US, they go for a Thanksgiving sale and the Christmas sale, and the time for that is less than 4 months. Now, if you look at it, anything you start new, a fabric takes anything between 75 to 90 days, a garmenting takes another 45-50 days, and the shipment between India, Bangladesh, Vietnam to the US, another 30 to 45 days. So therefore, if I take entirely this whole thing, it is a question of more like 5 to 6 months. And therefore, they will not be able, the retailers in the US would not be able to meet their requirement for this period. So I think to that extent, they will find ways to get the products out of India also. Maybe it is a little bit right now in the next few days, but I think by the end of this quarter, things should settle down. That's our stronger belief. And that's what we are hearing also from our customers already, because some of the customers did call us yesterday night itself.
Right. Amit, your losses have narrowed down from 23 crore loss of 19 crore. What's the path to profitability now?
So actually, as I said, that this first quarter in the entire history of Raymond is the seasonally weakest quarter, because for us, the products get sold primarily for the festive and the wedding season, which starts from the second quarter. I put the inventory before the retailers, and the retailers then start selling into the secondary market. But in spite of that, what we have been able to deliver, the 1,425 crore revenue, is the highest ever revenue in the record 100 years in the history of Raymond. So to that extent, we say we are fully satisfied. And as soon as the revenue increases, and generally you consider the first quarter to be more like 18-19% revenue for the entire year. And accordingly, as soon as the revenue increases, you get the operating leverage, and thereby you start delivering much higher substantial profitability of the business.
So, a quick 30-second, Amit, will FY26 be a year of profitability, or do you see there could be some bit of doubts on that front, taking the uncertainties into consideration right now?
Absolutely, it will be much more stronger compared to FY25, and we are very clear because a significant, almost say 85% of our business is in India, so that has no impact of tariff and so on. And I think what the recently with the tax benefit and such things has happened, I think the consumer are coming back. And we believe this festive season and the wedding should be much more stronger.
Probably.
So to that extent, we believe a stronger year this year compared to last year.
So a domestic market play is what you're betting big on as well. But thank you so much for joining us on the show and sharing your views as well. So that's the management of Raymond Lifestyle, clearly categorically indicating the kind of impact, the tariffs could have, but seeing insulation from the domestic markets. But moving on, rights. Flattish growth in terms of revenues. Profits have seen an uptick of around 1.4% as well. The stock trading at the day's lowest levels with cuts of 2.5-3%. Coming in there, Rahul Mittal, Chairman and Managing Director at Rights, joins in. Rahul, good afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. The results are flat. Execution now becomes a key going ahead as well. I mean, the revenue also has been led by consultancy and exports. And the kind of margin rebound that we've seen is again a strong point. From here on, is the year expected to look similar to the first quarter, or do you see further green shoots from here on?
Good afternoon. Yes, the key element which you said is expeditious execution. You see, the order book of 8,800 crores, that's a very young order book. About 3,500 crores out of that, and that is 300 plus orders totaling to about 3,500 crores, came in the last 2 quarters of the last FY. And considering an average lifespan of about 2.5-3 years of an infrastructure project, these orders, we are fully on track to do the initial design work and fixing up the executing agencies, etc. So that by Q3 onwards, when the actual construction starts on the ground level, that's where these revenues, these orders will start generating revenue. So the key point is that, yes, the quarter has been flat and the preparatory groundwork for a majority of the orders is being done, so that sequentially you see an improvement, so that overall in an FY, we definitely surpass the performance of last year.
Hi, Varsha, this side, pleasure to have you. So with that, the overall guidance of 20% of top line growth remains on track when it comes to FY26?
Yes, we had at the beginning of the FY given a guidance of a growth of top line of 20%. We are still aspiring for it, plus minus a percent or two here and there, but definitely that is the goal which we have set ourselves for, considering, as I said, the orders which came in at the right time due to a lot of effort last year, and now we are at that stage where these have to start generating execution and generating revenue. In fact, the export orders also, you see the export order book of 1,400 crores. We had said that we will start delivering, the deliveries will start, and the first 2 locomotives have gone in early July, so that revenue will start getting booked in Q2. So this, whether it's the consultancy orders, whether it's the export orders, or whether it's the turnkey orders, the executions are now the key.
So with execution, which is key, your order book was around 8,900 odd crores at the end of the fourth quarter of FY25. How much have you added in the first quarter of FY26, and what's the visibility with regards to execution and revenue realization from these projects?
So the we got in the quarter one, we got about 150 plus fresh orders, totaling to about 400 crores plus 414 crores. These were primarily consultancy orders. So consultancy orders are normally small ticket size orders. We also maintained that track record of one export order a quarter, which we started about 5 quarters back. So we got a small export order also of about 30 plus crores to South Africa for 2 locomotives. So in terms of order book, the size on 30th June is approximately the same, about 8,800 crores. But even now in quarter 2, in the month that has gone by, we've already reached about another 300 crores plus orders. So which is nearly equivalent to the entire, or reaching close to the entire quarter 1. So in terms of order book, we definitely see touching about 10,000 crores somewhere down the line, maybe latest by end of this FY. And definitely, as I said at the outset, expeditious and focused targeted execution. So you see a sequential growth in the top line in each of these quarters, and an overall growth on an FY to FY basis, at least aiming for a healthy, very healthy double-digit growth.
Right. Rahul, so you're getting more new orders, by being very competitive with other companies, of course. And because of this, do you expect your profit margin or on the your EBITDA margin to stay around 20%, or do you see more pressure when it comes to margins?
You see, I had given a guidance at the beginning of this FY that last year our focus was trying to re-engineer the strategy, whether it is in our competitive bidding or whether it's our costing, etc. And that made us achieve the milestone of being a 1 order a day. And we've maintained that for last 6 quarters. Now it's more than 1, in fact, 1.3 orders a day on an average. So now we have reached the bottom of the barrel, to my mind, in terms of the margins. And at the beginning of the FY, I had given a guidance that we would be aiming for EBITDA margins around 20% odd and PAT margins of about 15%. Quarter 1 is in that range, in fact, slightly better. But on a blended overall year basis, we are sure that, as I said, the bottom of the barrel has been reached, and we would be able to maintain EBITDA margins of about 20% and PAT margins of about 15%.
You had high, outlook in terms of how exports would look like. The previous quarter, I think, if I'm not mistaken, you secured projects worth little over 900 odd crores in the export business. It's actually come down to 31 crores. What's the reason for this kind of a dip? Likewise, turnkey also has seen a degrowth. Lease has also seen a degrowth. What are the factors that is impacting the order inflow, number one, in terms of projects that you're securing? And from here on, the outlook that you have with regards to where Rights Videsh goes?
No, so let me correct you. The order inflow of the figures that you mentioned, 900 crores is now 1400 crores in export tech. That 15 crores or something, that is the revenue. That's the revenue in export. So in terms of export order book, we have continued to add on the export order, one export order every quarter. So now, in fact, it's gone up sequentially every quarter. And now we are at 1400 crores on export, pure export of rolling stock as of 30th June. Besides that, we have a substantial order of about 200 odd crores in project consultancy. So these are the two elements of Rights Videsh, as you said. And this 1400 crores of export of rolling stock, the execution also has started. So out of the 300 crore of this from Mozambique, which is 10 locomotives, the first 2 locomotives have been shipped out in early July, and that revenue will then get booked in quarter 2, because the revenue gets booked when the bill of lading happens. So whether it is the growth in the export order or execution, there's an uptick in both.
Well, thank you, Rahul, for joining this conversation, and pleasure to have you, and all the best for the business. Well,
thank you so much.
Time for a short break, but on the other side, we bring you exclusive chat with Trust Mutual Fund Mihir Bora about Trump tariffs and what should be India's next move. Stay tuned.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
That's huge. That is a biggie. It's on.
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. You're watching Profit Buzzers. In fact, one important aspect that we need to consider right now is what the F&O movement is looking like, because that will give us cues as to what is the support, what is the resistance. Because if you talk about August or futures as well, the UI is up nearly 0.5%. I have Vansh who's joining in. Vansh, over to you. What are you picking up in terms of the trends on the basis of the F&O cues at this hour?
Right, so as we can clearly see, the Nifty is trading with a loss of about 0.5% in the trade today. And if we talk about the open interest is up by for about 2% for Nifty, indicating that the traders are closing their short positions. Now, if we talk about the FI long short ratio on the front, now we can clearly see that FI index long stands at 8.58%. In fact, this is the lowest since March 2023 from the FII front. Now, if we talk about the OI distribution for Nifty, we can clearly see the Nifty 24,500 mark acting as a strong resistance for Nifty, followed by a strong call writing, and 24,400 mark acting as a strong support, followed by a strong put writing on the front. So clearly a trade range of about 24,400 to 24,500 is what the open interest is indicating. Moving on, let's look at the stock specific action. If we talk about the open interest gainers in trade today, we can see shorts building up for Eternal, Nuvama and Tutco and Bale, and long building up for Fortis Healthcare. And if we talk about the open interest losers front, we can clearly see the short covering for Blue Star, Torrent Pharma, Hero Motor Corp, and long positions being covered by IIFL Finance and Sun Pharma. So clearly, this is what the picture is looking like for the markets right now.
Thank you so much for that. So that range of 24,400 to 24,500 should be closely eyed on the back of the derivative data. Thank you, Vansh, for getting us all the details. But moving on, India is certainly pushing back, asserting its right to strategic autonomy and fair trade. In the last 24 hours, we've spoken to top voices in business and corporate. Here is what they think about the Trump tariff impact. Let's quickly listen into that conversations.
There is this little bit of moving away from US, and if that happens and continues, then because US is 70 and the rest of the world is 30 or 68 or whatever, and you reduce 3-4% from US, we mean all collectively, and that 3-4% goes to the 30% base, everybody gets more money. And in that, India has a strong case. So India money, I think the overhang of selling has already gone away 1 or 2 months ago, according to me.
They believe better senses will prevail, and US will recognize that European Union, US itself have been trading with Russia. It's not just the Russian oil which funds Ukraine war effort. It is also the Russian gas which Europe is buying. It is also the Russian chemicals, fertilizers which America is buying. So market is hoping that better senses will prevail. The strategic interest of India and US will overcome current challenges.
You cannot move to a new market overnight. It takes time. And therefore, in medium to long term, for de-risking also, they are looking into the other market. The FTA has offered them an opportunity. I think UK will be a good big market once the UK Parliament approves the FTA. The early harvest with UK, with the EU will also help, and so with other GCC's countries. But these are in medium to long term.
Looking at new markets and developing contacts there and starting to export to those markets is not going to be easy. As far as our established markets are concerned, the European Union, which is one of our largest markets, China, which imports very little from us and could import a lot more. So these are some of the areas where we can focus on behalf of the government as well as the business.
I just think it's a tactic to get India to negotiate a trade deal. And I think the key point here is that President Trump wants India to buy American oil. And I think, this extra 25% tariff, which brings it up to 50%, is likely to give the Indian government an incentive to make a deal and to purchase oil from the United States. Look, this is, in my opinion, it's not going to be long lasting. This will wreck the Indian economy. It will cause inflation. It will cause job losses.
We haven't seen the full effect of tariffs, so I think that's what they're counting on. They think it's not a big deal, but it is going to be a big deal down the road for US.
Indian sectors will be hurt by this. I do not expect India to stop trading with Russia, whether it's for oil or whether it's for weapons. I think that that's not going to change, and I think that the cost is going to be borne in the US both in the short run as a tax on consumers, but also in the longer run as the U.S. seeks to build up an alliance.
All right, so those are the big voices that we brought to you today with respect to where the entire tariff saga is concerned. And to take this conversation ahead, we are joined by Mihir Vora, who's the CIO of Trust Mutual Fund, joining us now. Mihir, thank you so much for taking out the time and speaking with us at NDTV Profit. My first question to you is, what does this 50% Trump tariff actually mean for India? Because, this is not the first time that, Trump has, come out and done something irrational.
See, 50% is clearly not sustainable. It pretty much means a lot of items which are under that 50% bracket will become uncompetitive, especially given that most of those items are, items which other countries like Vietnam, Cambodia, China, etc. are making. So the relative advantage that India had with some of those countries before this 25% would be gone. So it pretty much, I think, we should treat it as a negotiation tactic. 50% in some of the items that we are talking about means India becomes pretty much uncompetitive. So it's definitely not our outcome that we want. Having said that, there are certain items like pharmaceuticals, electronics, etc., which are still exempt from the higher duties. But overall, it's not a good situation to be in.
Right, and you know, as you rightly mentioned, this is more of a negotiation tactic. But what's the probability, you know, knowing Trump and his past, that this is the final verdict?
No, absolutely. You know, unless both countries have decided that we don't want relations, this has to be negotiated. I don't think India can have a. I mean, what would it say about India-US relations if India has a duty which is greater than that of China or Pakistan? That would say a lot about what the equation between India and the US is. And the two largest democracies in the world certainly don't want to be seen as not on friendly terms. So I think 20 days is a good time. It's a good window for negotiations, and I think that's how we should consider this. It's more of a pressure tactic, a negotiation tactic, rather than a final outcome.
Absolutely. I wanted to understand with regards to everything that's happening, where does India stand? Because considering this is just a negotiation tactic, and there is UK FTA, which was a huge success, and a lot of exports that we do right now to the US might be sent to UK now. It might happen, right? So how are you reading that, and then the impact on India overall?
See, it all depends on what the final contours are, and it's not only India tariffs alone, it's India versus some other countries. So as long as two countries are both at 25%, we are not at a relative disadvantage. But if we are at 50 and the other countries at 25, then obviously we are at a relative disadvantage. So it's a complex situation. I don't think we should just look at the absolute numbers, because tariffs are going up for everyone, right? For Japan, it may be 15%. For India, it may end up at 20-25%. But relatively speaking, are we better off than before or not? That's what we need to figure out. Especially versus countries like Mexico, Vietnam, Cambodia, Bangladesh, China, Philippines. Those are the countries where we are competing on labor-intensive sectors. Right. So we need to benchmark ourselves with countries which have labor-intensive competition versus India. Sectors like textiles, footwear, some amount of electronics assembly. So as long as we are not worse off than those, we can still kind of bear it. But if we are at a great disadvantage versus China or Vietnam, that would be a problem.
All right. Considering everything, do you think this is the right time to go full in when it comes to Trump-proof stocks? Is that the right approach?
No, I would kind of stagger it out. As I said, I'm not very bearish about this news, but I'm not very bullish, because as it is, the recovery is tentative. So what we want to do some things in a staggered way rather than going all in one shot.
Understood. And for someone who is sitting on dry powder right now, which sector should one deploy their money in, or should they wait for a while?
So as I said, do it in a staggered way. No need to go all out on one day. But if there's a sharp decline in the market, suppose the market in a week goes down by 3, 4, 5, 6%, then you can accelerate the deployment. But if the markets are down only 0.5%, 1%, then you can stagger it out. Because as I said, we want to see data points apart from exports also to pick up, like banking, credit, etc. Structurally, I would still continue to be bullish on the domestic sectors. Because in spite of all this, India will still go at 6% plus, which is still better than most of the economies in the world. So most of the sectors that are domestic linked, like the financials, like the industrials, the capital goods, government spending linked segments, I think if the slowdown happens or if the exports do get hit, government will come out with incentives, further spending by the government on infrastructure. So those domestic sectors will continue to benefit. And of course, if there's a favorable outcome on the exports front, then the sectors like textiles, etc., will come back into favor.
All right, Mihir, we'll leave you at that. Thank you so much for taking out the time and speaking with us at NDTV Profit. All right, now shifting focus to more earnings, and Varsha, Lupin came out with its earnings, and it's a beat. It's a good set of numbers. What is your reading, because you're the expert?
Yeah, thank you for that. Yes, it's a good set of numbers. So EBITDA and net profit were beaten by Lupin, and the revenue growth that you're seeing is driven by strong sales in US and India. While US sales were up 24%, India sales were up 7.8%, and they've launched 5 brands across therapies in India. But to speak about more on numbers and what's the outlook going ahead, and of course what's the outlook when it comes to tariffs as well. We are here joined by Mr. Ramesh Swaminathan, who is ED and Global CFO of Lupin. Well, Mr. Swaminathan, welcome to the show, and it's always pleasure to have you. My first question to you would be about the US sales. If you see, they're up 24%. You've seen a robust growth there. What is your outlook for the US market for the rest of FY26, particularly, given the recent commentary by some peers about potential channel destocking due to tariff concerns?
No, we continue to do well on the back of, in fact, a lot of good launches in recent times. So Tolvapan was a recent launch, and obviously it's doing pretty well for us. It's a REMS product, and we will have exclusivity for a period of time. And Mira Background that we launched last year continues to do well. Our respiratory portfolio, which is really Spiriva, Albuterol, Brovana, and Zopinex, they continue to do pretty well. So from our perspective, it is pretty good going out there in Americas. But it's not as though it's limited to the US alone. You're finding actually secular growth across other markets as well. We've done fairly well when it comes to the advanced markets of Europe, with in fact equally good launches out there in recent times. India, though of course the top line, is a little, lackluster, given the fact that there has been loss of exclusivities. And this should be seen on the back of, in fact, a loss of exclusivities of certain products. But when it comes to the mainstay, which is cardiovascular, diabetes, and respiratory, we continue to do well. And knocking off the impact of exclusivities, we are actually 1.4x of the market. So you have reason to be pretty happy about, in fact, our overall top line growth.
Right. Now, I was actually about to ask you about the India business, which is up 7.8%. This was expected to do better. But what's the outlook for India business considering the pipeline that you have?
No, so essentially we would do well, and our own target is close to 1.3, 1.4 times the market. And even in this particular quarter, if we were to knock out certain, let's say, the loss of exclusivities on a few products in recent times, we've done fairly well. Essentially, we follow a four-pronged strategy, more feet on the ground. Second is essentially looking at in-licensed products. A third is looking at, in fact, R&D from, our own stable. And we've done this in recent times in terms of, respiratory products, the first triple drug combination and the like. And fourthly, looking at M&A, as when the opportunity really presents itself. So this four-pronged strategy would really help us to grow pretty well in India. And the focus is hugely on this.
Right. Mr. Swaminathan, how do you look when it comes to revenue growth in FY26 and possibly, beyond that, number one? And of course, on the margin side, so there was a good uptick that you saw this quarter, and also since the last few quarters, you have been, speaking about the cost initiatives you have taken. How should one look at the margin side? How will margins play out in FY26 and beyond that?
So clearly the margin expansion is a function of, in fact, the top line buoyancy that we have exhibited across various geographies, and of course, particular emphasis on America, because it's of course one of the largest markets for us. Clearly that's continuing with, in fact, the focus on, in fact, more complex products to be launched, and the entire slant is really on complex products, respiratory, complex injectables, biosimilars and the like. Clearly that is helping our cause. But equally, this incessant focus on cost reduction, so every line of the P&L in terms of, you could see this gross margin expansion, which is really a function of top line buoyancy, as well as the fact that we have worked on a host of measures in terms of routes to synthesis, alternate vendor development and the like. Equally, the focus on productivity across, the factories, the R&D, the sales force, the use of technology across, all of this have played a big role in bring up the margin expansion over the last several quarters. I would say close to about 13, 14 quarters on the trot. And this focus will obviously continue more with, in fact, the kind of products that you're bringing in and this incessant, focus on costs, equally using, a lot of measures like AI to focus on this as well. Clearly, the future is exciting. We have been pretty prudent in the way we look at, guiding for the future in terms of margin expansion. We are a tad lower than the competition, but that's more because the fact that adjacencies are still evolving and the like. But clearly, we are looking forward to more exciting times.
Mm-hmm. But any ballpark number for margins, if you can give, for FY26 and 27 as well?
So we are looking at anywhere between 50 to 100 basis points vis-a-vis the last year. So 27, clearly because of certain products being phased out and the like, despite that, we do expect, in fact, the growth to be there. So margin expansion would continue. And this after taking into account a much expanded R&D outlay, so to speak, and that's been going up in absolute terms and as a percentage of sales. So this should be seen in the context of potentially that as well.
Right. Mr. Swaminathan, so one of the growth levers that you spoke about was, focus on the novel drugs. With the MFN policy now, how should we look at the strategy going ahead?
No, if your question is about actually tariffs, etc., it's still unraveling. So we really it's as of now kind of exempt. There is of course a 232 investigation report which is still pending and the like. There is of course a lot of apprehensions in terms of the kind of tariffs that he says that he would impose. So those are really the dark clouds. So one can't actually. But as you would appreciate. Generics is all about access to medicine, and clearly any step in bringing in tariffs, etc., would have an impact insofar as costs for the American population in a general sense.
Sticking to the tariff, Mr. Swaminathan, because Trump said that he'll be, imposing tariffs next week. How flexible it is to set up new facilities in the US, because you do have 2 facilities in the US. So how are you looking when managing, supply chain, and are you looking to, set up more facilities?
No, so clearly you got the answers yourself, so certain parts, so we would see if we can actually look at local production, but you would also appreciate, the cost of conversion in America is several times of India, so to speak. There are products that we would potentially be looking at, passing on, the extra costs to the consumers and to the channel partners. And we are of course looking at a few other mitigation measures and so on if it ever comes to the crux. But as of now, I think there's more being spoken about than so far too many moving parts to really comment about.
Right. Well, thank you, Mr. Swaminathan, for joining this conversation and answering all the questions, and all the best for the business. Well, that's all the time that we have on this show. Stay tuned to NDTV Profit.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm your host Anushri Vakharia and with me is Somit Sarkar. You know, currently if you look at the markets, the benchmark and the broader markets both in the red is what we are looking at currently at the day's low as well. But you know, as always, we have Hiral standing by to break down the small cap index for us and the key stocks that are buzzing on air. Hiral, over to you. Yeah.
Thank you so much, Anushi. The pressure has built in the second half of the trading session right now, if you see, because we are trading at the day's lowest levels as we speak. In fact, all the sectors seeing a beating. Little over 4 lakh crores is the kind of market capitalization that has been wiped off from the markets. We are below that 24,400 mark. And because this range is broken, there is an anticipation that 24,000 is not far away. So that's what it's looking like in terms of where overall markets go. But broader markets also seeing a similar trend. If you see in terms of the small cap 250, 1.4% is the kind of cuts at the day's lowest levels. And if you talk about mid cap 150 as well, the cuts are similar, but we're trading at the day's lowest level. So cuts in terms of broader markets much deeper as compared to the benchmark indices. But let's quickly look at stock specific action in terms of broader markets and see which are the counters that are buzzing in trade today. On the back of earnings reactions and the others, let's look at the 5-day chart of ITI first. Or okay, we'll look at the earnings reaction. GNFC SKF, GPT Healthcare, all of them have reported numbers, cuts in the range of almost around 5 to 11%. In fact, GPT Healthcare is below the IPO price also right now. Apart from that, if you see in terms of the other stocks that are in focus on the back of earnings, you have Prince Pipes, Lumax Industries and Morpin. All the three reacting to numbers. Pressure continues. Lumax Industries, this is auto. Morpin Laboratories also trading under pressure. Sigachi Industries, Rain Industries and Avalon also reacting to numbers. Avalon, Rain, good set of numbers that have been reported on the back of its strong moves, but Sigachi also down. Now let's look at the other small caps which are in focus as we speak. Names like Kirloskar Brothers, Kajaria Ceramics, GMDC, some good moves coming in there. Volumes are also pretty okay on these names. Bear Crop, R Power, Ador are also buzzing in trade. Reliance Power last couple of sessions has been weak. Bear Crop also under pressure. Avalon Tech, which is seeing some smart moves. Three stocks where I would want to see the 5-day chart. ITI. Interesting name because you've seen good trends that come in over there. Last two trading sessions have been pretty good. 8% up move during the week, 6% today. Godfrey Phillip is also interesting after the earnings. You are seeing profit booking that is coming in on that counter now. 8% is the kind of downtick that you're seeing in terms of Godfrey Phillip as we speak. And very lastly, Stovecraft. That's another one that you should be watching out for. That stock seeing gains of 6.5%. Volumes also pretty strong on a Stovecraft. So these are the movers and shakers in trade today. But the key is going to be the pressure that has built up in the markets right now. You are at the day's lowest levels. A lot of levels that are being broken. So the aspect to consider is what next?
Well, that's the aspect to consider is what next. But let's firstly go across to our management on the show. Dr. Bhaskar Rao, Chairman and Managing Director of KIMS Hospital. So, sir, firstly to start off with, on a YOY basis, if you look at your margins, it has come off sequentially. So, any view on the margin, how should one look at? Obviously, I understand that new hospitals have come in, new beds have come in. So, earlier the margins would take time to mature and grow. But any target margin that you could give us for the company?
So, as of now, as you rightly said, there is a new beds has come in. With that, the drag has come nearly 21 crores of EBITDA of this month. The one good positive thing is that the existing hospitals, the mature hospitals are still keep growing as we anticipated about 5 to 6% growth will be there, both in volumes as well as the ARPOFs are concerned. And this is an anticipated drag on these new units like Thane, Nasik and Kerala units, and we are thinking of this one will come down in the next quarter, which is today 21 crores will become 10 crores. By quarter 3, I think it will be neutral. So from fourth quarter onwards, this will able to ramp up.
So Rao, this is Anushi joining and as well. You spoke about the current margin profile that is there, but I want to understand once this addition happens in terms of the bed capacities that we are looking at, what is the kind of optimal range that we should be looking at for in the next 3 to 4 years timeline? Would it be in the 27 to 28% of range or a higher upside is something that we can expect?
Definitely, we can able to sustain that 27-28%. That was our planning to do that, and we are very, very confident the way the new two markets that is in Maharashtra, Thane and Bangalore 800 bed hospitals are coming. We are very, very confident that we can able to achieve these numbers.
That's the outlook that we are seeing in terms of margins. Now, I just want to get a sense of the first quarter results as well. For revenue, we have seen a relatively stronger growth. Just want to get your sense in terms of the FY26 guidance for the key operational metrics which are there.
See, as far as the 26 is concerned, that as we mentioned that first and second quarter there will be a drag on the EBITDA because of the new units. Third quarter will be neutralized and maybe fourth quarter will start picking up. But by the fourth quarter again we are adding another new 2 units in Bangalore. That will come as a drag and the EBITDA drag. We are expecting around another 15-20 crores even third and fourth quarters also from Bangalore units. Maybe next year, from now, next year, first or second quarter, definitely all these negative EBITDA will come to positive. And maybe positively the O&M contracts what we have taken, they are doing very well. That is also giving some sort of a cushion for the EBITDA drag on these new existing hospitals.
Sir, so this 26.5% growth that you have done in this quarter on a YY basis, that number is sustainable going forward?
Yes.
So we should expect this kind of growth not only in FY26 but also in FY27. Any guidance on that front? Could you clock in higher growth, say 30%, 35%? Given that a lot of capital expenditure is coming online?
Yeah, and 27 definitely it is a very promising, because the way which we are seeing the Thane hospital is doing very well, and maybe in this next 2 quarters, once we start the Bangalore unit, I can be much more confident that I can able to do. The good portion is that a lot of doctors has got a good positive view that has shown in Thane, and the similar way we are also seen in enthusiasm in Bangalore medical community. So we got most of the doctors on board. With this, I think definitely by 27, definitely we'll get all these insurance, credit organizations also enrolled. That will also push the growth on that 27.
Right, sir. So given the fact that you are doing more capital expenditure from in fourth quarter also and continuing in this quarter as well, could you give us some number on what is the capex spend that you aim to incur in FY26 and in FY27 as well?
See, the existing projects what we have is maybe another 700 to 800 crores is the total spent in the form of equipment. Most of the capex has been done in Bangalore, the entire Thane has been done, and maybe we are doing something in Kondapur and some of the technology in Bangalore, and some of the Andhra units where we are doing, the maximum will go around 800 to 1000 crores in the capex. As of now, we think we are about 1600. That will go up to 2600 to 2700.
Okay, so you're saying that the capex spend that we are looking at would be in the range of 2000 to 2600 crore. Is that the number that you were mentioning?
Maximum, yes.
Okay, and how would that be funded if you can for the capex spend?
All bit only, all arranged. The only thing we need to do.
Okay, understood. Now, coming to the other metric that we should be watching out for is the RPOP. Now, considering that you're expanding in the higher micro markets, there are expectations of these RPOP numbers of this 43,000, which you currently have, going upwards to the range of 50,000 or even upwards from that level as well. So, in the next 2 to 3 years, just want to understand the kind of metric, the number that we should be watching out from this.
Looking around 10 to 15% growth in RPOPs in the next coming 2 years, because these two RPOPs are very high, both Thane and as well as Bangalore. And the existing Telangana, also there is a pair mix, and then we are also adding a new units in Andhra. Andhra RPOPs also will increase because we are adding cuddles and oncology in 3-4 units.
Right, sir. And how should one look at the occupancy number? Any guidance for FY26 and FY27?
So as of now, what we have is 55%. Maybe when the new entire the mature units is keep growing around 5% growth. The Bangalore and Thane is concerned. By the time in the next 1 year from now, we both the place about nearly 1200 beds. We can able to get a 30% occupancy. The year after we'll go up to 40-45%.
Okay, so that's the outlook that we are seeing for KIMS for the year forward, not just for 26 but 27 as well. Thank you, Mr. Rao, for joining and sharing that outlook on the company. But with that, we also have another company in focus, and this is again on the back of its first quarter numbers, and this is Godavari Power and Ispat that we are talking about. If you just look at the key numbers, revenue was down about 1.4%, while margins were stood at 24.5% as compared to 30.4%. But let's understand an overall detailed outlook on this, and we are joined by Mr. Abhishek Agarwal, the ED of the company. Mr. Agarwal, welcome to the show first of all. Now, if we are looking at the first quarter numbers, it's a relatively weaker set that we are seeing in terms of how the operational performance has been. Just want to understand your assessment of the first quarter.
Very good afternoon. Although you mentioned it's on a weaker quarter because you're comparing from last Q1, but I feel we were at par at Q4, and in given scenario, I think we performed well. So a bit of 25-24%. I feel it's good being in the commodity market.
Right, sir. Okay. So we also wanted to understand one thing here. Earlier, your plan was to set up a 2 million ton per annum of integrated steel plant, and your current focus has shifted towards downstream steel, cold rolling mill, and battery storage marks. Why this deviation in the strategy, sir?
No, see, there's no deviation in strategy. Just that we have delayed the announcement of the new steel capex. We have full intentions to go ahead, not 2, but a 1 million steel plant in a new complex. So this CRM complex, which we have, just announced, is part of that steel complex. Although it's a totally different route, but we want to enter into value-added segment now. So the idea is to, start making steel, which has value addition now.
By value addition, do you mean that these products will fetch you higher margin? And if yes, then what is the kind of margin target that you have for next year?
See, for the next year, the new company we have announced, of course, will get commission in, FY28, April, March 27. So you can see numbers coming in from there from, FY28. But for next year, my new pellet plant will be commissioned in next quarter. So we can see additional volume growth from, on the pellet side. That will give us additional margin for the remaining part of the year.
So this planned capital expenditure is close to around 1500 to 1600 crore rupees. How are you planning to fund this?
See, so the plan expansion in 2 phases. One is on the CRM complex, and other is, we have formed a new company and we want to enter into battery storage space. So 700 crores is for that, and out of 1600, remaining 900 is for the CRM complex. On the funding side, it will be 40 to 50% internal accrual, and 40 to 50% will raise loan from the market.
Okay, so considering, that the debt requirements are there for these 2 projects that you're talking about, just want to get a sense on how the FY26 debt numbers would look at. And also, once these projects, the capacities are on stream from these, what is the kind of incremental revenue growth that you're looking at?
See, on the debt front, right now we are cash positive. We have taken the approval. We have plans to, raise the funds. But the drawn will only happen when we require, when the capex moves at a faster pace, which will only happen in FY27, because initially the amount required to start the project will not be very less. So we'll be doing it internal accrual. So FY26, we can say we will remain, probably at 0 debt levels, or probably we take some debt out of, 50% we just announced. Major debt will come in FY27, where we will be, borrowing and funding these 2 projects apart from internal approval.
And about the revenue projections that you were talking about from these 2 facilities coming on stream?
Once these 2 come on stream, so on the CRM complex side, we see a revenue growth of close to, say, about another 3,500-4,000 crores, assuming, bare minimum value of 60,000 rupees a ton. So at 0.7 million, it comes to about 4,000 crore rupees. On the battery project side, it's totally a new ball game. And from there, we are looking at revenue of, again, 3,000 crores, or say 2,500.
Fair enough. And now,
But both of these projects will go live in FY27. So FY28, sorry.
Okay, fair enough. Now, coming to the quarter gone by, just also want to make sense of how the realizations are going to be forward. Because if we just look at this quarter, realizations have remained subdued. So what's the kind of outlook that you see for the upcoming quarters?
See, Q2 is definitely much weaker compared to Q1. There has been a decline in the prices during the initial part of the quarter. But post that, since end of July, the numbers have picked up again. The steel market is up almost 10%. So Q2 should be slightly weaker compared to Q1. But I'm hoping with the demand coming back, Q3 and Q4 should be quite good.
Any guidance that you could share on iron ore and iron ore pellet prices, sir?
Pellet prices, to be honest, if you see last year's average, it hovers around, 8,800 to 10,000 rupees. So today we're selling it about 10,000 rupees. Early June, early July, the prices have gone down below 9,000 rupees. So a band of, 88 to 10,000 is, practically is what achievable in the today's market.
Right, sir. So for the battery storage unit, you were giving some revenue guidance. Any guidance that you have internally prepared on the EBITDA front for both the CRM and the battery unit?
See, on the battery front, with the numbers we have, we feel on a per megawatt scale, we can do about a 5% on EBITDA levels. With 10 gigawatt, it's close to almost 10,000 megawatts a year. So once we're able to achieve the entire capacity, we can see EBITDA levels of say 5 to 7% on the revenue side. And on the CRM complex side, again, we see a EBITDA of about 10% compared to revenue side.
Okay, and overall, if you just have to take FY26 in conjecture, what is the kind of guidance that you have for the revenues as well as the EBITDA numbers that we can expect?
See, look in the current market scenario, and almost 40% of the year has already passed. We feel we'll be able to achieve the declared numbers as per our annual business plans, and FY26 should be as probably same as FY25 because there are hardly any volume growth. And the revenue is more or less, in the range of 10% plus minus.
Right, sir. Well, thank you, sir. Thank you for joining us and explaining every detail about the company's future capital expenditure plan as well. Well, with that, let's move on to HUDCO, the next management on the show. Sanjay Kulshrestha, Chairman and Managing Director of HUDCO. Our colleague Harsh spoke to the management, and let's listen into that bite.
Let me first start off with that net interest income number. The expansion is extremely impressive, 32%. Even the growth clip that you've clocked of 29% on the AUM number, the disbursement growth also is evidently strong. Talk to us about growth, the sustainability of these kind of numbers, because the base is getting higher. So give us that perspective first.
So if you see, the growth is backed by the strong commitment of Government of India for Viksit Bharat, and the infrastructure is planned till 2030, and HUDCO is a company which is financing all such kind of infrastructure. So we are into that space and we are supporting the states. States are the prime movers for creation of the infrastructure. Government of India is supporting by the policy advocacies, the capital support as well as the policy support. So I think we are well placed at the right time. Looking at our growth, and if you see, our numbers are not too high because the loan book is only now 134, and we can grow, and there is a good kind of exposure, regulatory exposures available toward the lending as well as the borrowing side. So there is a potential in the business. There is a conformity of the infrastructure creation. There is a policy support, there is a monitoring support. So I think we are at the best placed situation and the circumstances to support our state sector to leverage that kind of economic growth into the country.
Say near zero with regard to net NPA, and which is what is causing you another or giving you another strong tailwind on your PNL at least, which is the recovery tailwind, which is evident. Give us perspective on how long this can last for and how large is the recovery pipeline like. And if I were to just remove the recoveries, what is the kind of credit cost number on a normalized basis than one can expect?
See, our NPA numbers in absolute terms is not so high, so it doesn't impact too much when these assets are resolved. We had taken a commitment that HUDCO will be net zero company within 18 months of time, and if you see, our figures are continually improving on quarter-to-quarter basis. Now our net NPA is only 0.09, which I think it's the best in the industry, and we are continually working on our asset quality. We doesn't compromise on the asset quality, starting from the time of discussions to the appraisal, to the monitoring, to the disbursement. Even after the disbursement, we continue to monitor these kind of projects. And if you see, we are continually maintaining our spreads and the NIM and without compromising on the asset quality. So in an NBFC, IFC companies, this is a big challenge that we had taken. And if you see, our numbers are sustaining, our loan book is growing. There is no net NPA, new NPA from last 3-4 years. So I think we are working on a very sustainable kind of manner without compromising on either on asset quality or on our spreads and the NIMs. Because if you see, the vision of the company is the profitability with social justice. So we are here to create infrastructure, the trunk infrastructure which will create economic driver into the country, and that's what we are doing.
And so, what's the better metric to look at when it comes to a HUDCO? You have a 42% capital adequacy and therefore no concern with regard to capital, but that also means that maybe margins is not the best way to track you. Is the spread the better number to look at? And as this capital adequacy compresses, what's that margin number that you are typically looking for when it comes to a HUDCO on a normalized basis?
See, we are working on a very basic kind of margins, and I don't think any compression we will be having. Having said that, capital adequacy is strong because our asset quality is very strong. We are particularly supporting the state government, where we are getting the state government guarantee. So most of our loan, to the extent of say more than 90%, are backed by the state government guarantee. So because of that, the capital adequacy is very good. We will not compromise on our numbers, and we will not compromise on our asset quality. So that is the mantra. And at the same time, we will resolve all our NPA assets. So with this mantra, we are working regularly, and we are achieving results on quarter-to-quarter basis.
Understood. So the ROA is closer to 2%. So is the better metric to look at the ROA therefore, and is that the kind of number you continue to aspire to achieve, that 1.92% kind of number?
ROA will be more than 2%, of course. There should not be any compression. This compression, or you can say the 1.89 or 1.9 figure, had came because we are enhancing our loan book very high, with a very high speed. We are creating a pipeline for the disbursement, and at the same time, if you see, our loan book should be the best parameter to judge our business model, because it is all depend on the timing of the disbursement that affects the ROA or spreads or all these things. And because if you see on a quarter-to-quarter basis, yes, you will find something that is aberration. But if you see on a year-to-year basis, I think we are maintaining plus 2% of the ROA. But the better way of looking at the HUDCO business, how we are creating our loan book, which will give and yield our bottom line, contribute to our bottom line in next 5 to 10 years of the time.
So sir, just give us that number with regard to recovery pipeline. How much is that number, and how many years are we looking at in terms of recovering that number?
Total our NPA assets, you can say, is around 2,000 crores, and around 1,000 crores are already resolved through NCLT, either through liquidation or through resolutions. So not a big number that we will be getting out of these things. So we are waiting for the results to come through the NCLT, because it's a regulatory process. So it will come whatever it is. Then there are few cases which are into the DRT cases. So there we are expecting the values, and we are continuously revising our strategies also. We are revising our OTS policy. At the same time, we had came out with that we will give the resolutions, and we can take over some land banks, because all these DRT cases are backed by the land. So wherein we may be going and we may be taking through the auctions through the DRT, and we will be creating the value along with NBCC. So all these things are there. So I cannot tell you any ballpark number, because sometimes we may be investing and taking over those kind of assets and building up and then enhancing the value in that. So there are a lot of things that we are doing. This is not only the OTS or NCLT. We are also considering that lender-backed resolution plan can also be submitted, or lenders can also acquire that kind of property.
Got it. And sir, any reason why the effective tax rate has gone up? It's gone up substantially, because that's the minor impact that we've had with regard to where profitability is concerned. So give us that perspective.
I think it will be stabilized. It is a one-time kind of tax that we had given.
Understood. So around 25%, is that where it will stabilize? Going
around 20, between 22 to 25% kind of thing.
All right, that was the final management on the show. But with that, we are completely out of time on this edition of Small Cap Buzzers. But do stay tuned in our India Market Close coming up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising.
Welcome, you're watching India Market Close. I'm Mahima Vachajani. With me is Harsh and Neeraj. Let's take a quick look as to how the markets are doing. Let's try to pull that up. The market at its day's low point, almost the Nifty 50 trading at around 0.7% lower, but it's not something, markets are not afraid of tariffs for sure. Markets have shown resilience is the key takeaway from today's move in markets. The Bank Nifty also down by about 0.6%. Let's try to pull up the Nifty 50 heat map and see how counters are doing in trade today. ITC Hero MotoCorp, well, topping the chart, of course. It's up 3% as we speak, and this is on the back of its earnings. ITC almost flat, up 0.3%, and JSW Steel is another counter which is in the green. Asian Paints almost flat there, but there is some pressure in Adani Ports and Adani Enterprises as well. Geo Finance, Tata Motors, Shriram Finance are some counters in the red. Trent has turned to the red side of things and it's down 1.6%. There is pressure in Grasim, Bajaj Finserv, IndusInd as well as Reliance, BEL, HUL, M&M all down by about 1 to 1.5%. Let's also try to pull up the advanced decline ratio and see how that has fared throughout the day. There you go. The gap has widened, and how there's around 478 odd advances versus that of 1800 odd decline. So the ratio is more than 4:1
Yes.
today. Let's also try to quickly pull up the sectoral heat map and see what sectors are doing. all sectors in the red. Maximum pressure seen in the defense part, down by about 1.7%. Oil and gas also down by about 1.3%. Nifty Realty also down by about 1.2%. And also, Harsh, as you were mentioning, keeping expiry also in mind, and plus, what are the broader markets looking like?
Well, yeah. So if we pull up the Nifty daily chart, the Nifty mid cap is down 1%. But just for a minute, if we can pull up the Nifty 50 chart for the day, intraday, and some part of this move, of course, would likely be expiry to a certain extent. But at least the start of the day, we saw quite a measured response from the index. So that's the one key positive. But currently 0.7% lower, just off the day's lows. Let's pull up the mid-cap index one more time, nearly 1% lower on the mid-cap index. The small-cap index too, seeing some bit of pressure. So the broader markets is where pressure has built up, 1.2% lower more on the Nifty small-cap. And it's been a tough week already for broader markets. So on the back of that, to see another % shaved off is obviously difficult for those holding stocks within this space. Now, in terms of the sectors as well, of course, defense was one. But when you're looking at the pressure across the board, we have infra companies under pressure, realty, energy, even PSU banks and metals are down 1% each. So you're seeing pressure across the board. And realty, of course, within the broader markets, one of those names or one of those sectors which only focuses, or all of the constituents of which are part of broader markets, pressure is evident. But Neeraj, your observations?
Well, observations is one, but the point being, there are some points that I definitely want to make. So a lot of combination, a lot of, commentary around whether this is going to be really bad or no. Now, very likely could be, but I thought about it. The only other country which has got this 50% tariff is Brazil, right? It's the other victim of the Trump tariff issues. And Brazilian real is still up nearly 13% against the greenback this year, which is against the dollar. And the Brazilian index, which is Bovespa, is up about 11% YTD. So you would ask that even though there's such high tariffs, those indices have done well. Well, the truth is that since July 9th announcement of the 50% tariff, Bovespa has underperformed the S&P 500 by about 3.4 or 3.5 percentage points, and the Brazilian real is flat versus the USD. Now, the question that you ask is this such a bad outcome for a country which was spoken about since July 9th with a 50% tariff? Maybe not. So what should the near-term strategy be for anybody? I think it's not incorrect to buy the markets 5% higher, but when the trend restarts, so why go out and buy right now? Might as well wait for the trend to restart. It could do it anytime, by the way, but might as well buy it when it's high or starting to trend higher. Remember, periods of dislocation, as could happen to some textile names, that could happen to some auto ancillary names, can create some very compelling entry points. And same way, if you think of which are the pockets that will be hit by dislocation, I think the most impacted stocks according to MK, right? Textiles is Gokaldas and Kitex, and we'll be speaking to Kitex soon. Chemicals, Camlin, Aarti, Atul, according to them. Auto ancillaries, Bharat Forge, Suprajit, Sona, BLW, all of these have sizable US exposure, and therefore that is something to watch out for. MK also believes that cutting Russian crude imports may hurt Reliance and OMCs and risk crude price spike. And the pharma and the EMS pocket is exempt for now, but any potential Apple announcement of not doing too much in India might impact the sentiment of the EMS stocks. So that is to be kept in mind. With all of this in mind, let's get in Kush Bora in the conversation to try and understand what to do in a scenario like this. Kush, we started off reasonably okay. Good afternoon to you. But we have come off and now trading circa the low point of the day. Now, is the risk reward stacked against going short at these levels?
Hi, Neeraj. First, a very good afternoon to you and to the viewers. Indeed it is. Indeed it is. And I don't think I could have summarized it any better. I was just listening to your commentary. And my view is exactly that sometimes inaction is also good action. You don't have to act or react every time something happens in the market, particularly untoward, right? So this is that time where, your patience is tested. You might as well sit this out, because as you rightly said, and as I have been saying for the last couple of sessions, the risk reward ratio, despite the market trending lower, is not favorable for a fresh short position. Now, right now, Nifty is at a 3-month low, but we know that, a couple of indicators suggested that the Nifty on the downward move is overstretched. There could be just one piece of news that could trigger a sharp short covering rally and you might get caught on the wrong foot. So yes, the only two trades that I could suggest is one, sit out. The other is play for a rebound as and when it occurs. Don't preempt it, but as and when you see some sort of a rebound, you could perhaps cash in for a quick trade. The next immediate and a strong support for the Nifty now is at 24,000, 24,050, which is the 200-day moving average. Whether it tests or not remains to be seen. But even if that were to happen, I would assume that there would be a couple of rebound sessions, and you might get an opportunity to make that rebound trade before hitting that 200-day moving average, if at all we do.
And Kush, what about your top picks for the day? Are they buys?
Still going with buys. The reason being, as I said, you can't short index at this level for sure. You can't short stocks at these levels because a lot of them are into already deep oversold territories. So yes, I've got two calls, both of them on the long side, and both of them are fairly domestic plays. One of them is JK Cement. We discussed this yesterday as well. In a market like this, the stock is holding ground, in fact, gaining some. And yes, the volumes are also fairly decent. Nothing extraordinary, but fairly decent. And I'll take that. So continuation of that call, 7070, 7200 targets maintained, 6790 is where you place that stop loss. The second one is Thyrocare. And we're starting to see some sort of traction in some of these names, be it Vijaya, be it Dr. Lalpat, be it Thyrocare, some sort of traction. So there is very clear accumulation in the space. Maybe once the markets settle, you might see a sharp rebound in some of these names. So today we've picked Thyrocare, Vijaya, we'd already mentioned some time ago. 1375, 1405, those are your targets. 1315 is where you place that stop loss. So you're still going with both long calls.
Okay, Kush. We are seeing a bit of a recovery as we speak with regard to the index itself. But really, one sector which has really bounced back is the Nifty IT, Kush. What is the trend you're seeing there?
Harsh, I would largely, account that as more of a short covering bounce. You name any large cap stock, in fact, in some cases, even some of these mid cap stocks, they had gone into oversold territories, and you're seeing a rebound on those lines. Now, is this something that you buy into? Not really, because this is that short covering bounce which has not really sustained in the near in the recent past as well, and could well give way. So why do you want to take a risk in a sector which wasn't doing well, and a short covering bounce could also be sold into? So while yes, it's a positive that Nifty IT is showing some signs of holding up. So if I look at the index, it's showing a positive divergence on the daily setup, which is a very positive thing. But right now, the confidence isn't there to go out and buy. And as again, alluding to something that Neeraj said, once you have a clarity in terms of the price action that the trend is for sure here to stay, that's when you perhaps go out and buy. Right now, IT is not into that space, although green shoots appear. Yes.
Kush, your take on a hero top gainer on the Nifty 50 today?
Splendid. In fact, I think this entire pack is starting to show a lot of traction. Excellent accumulation in some of these names. Even TVS Motor, if you see the recovery on this one from those support levels of about 2750 has been excellent. So yes, I think there is a lot of traction and interest that is coming back to the entire two-wheeler space. I would actually be a buyer in Hero, TVS Motor, both of these names, despite the kind of run that it's already had. So yes, if you have a position, for sure, continue to hold. If not, you could still build some. And on the upside, targets of 4,800, even 5,000, very much likely on a Hero Moto coming out of a 3-month consolidation. So yes, very positive on the pack, particularly Hero and TVS. For Hero, your stop loss could be close to the 4,450, 4,500 mark.
Trent, Kush, it started in green, but right now is under pressure on 1.6% down. What are the charts indicating?
So, Mahima, see, this is exactly my concern. And if I can just, correlate this with the IT move, even something like a Trent, which was, fairly heavily shorted, rebounded on the back of maybe mild volumes from oversold territories, but did not sustain and has given way from those resistance levels of 54.50. Now, if some of these levels are taken out on the way up, that's when you're relatively sure of the trend and the bottom being in place. Not the case with most of the IT stocks as we discussed, and even Trend for that matter. So I will wait. I am okay to let go of the initial gains. So 54.50 If that level is taken out, we're able to sustain above that, maybe that's when you consider. For now, this is more of a dead cat recovery, short covering sort of a bounce that you're seeing in trend.
Okay, Kuch, one quick thought on the textile companies. We have a textile conversation coming up, but they were in vogue, maybe for the right reasons, currently being punished, again maybe for the right reasons. From a trader's perspective, how do the textile stocks look?
So, Neeraj, I would make that trade again, on similar lines, not right now. I would let the dust settle because a lot of these names have gone, deeply into oversold territories, and any kind of positive news and price action would actually spark, a sharp rally on some of these names. So Gokuldas, Kitek, some of these names could actually see a very sharp uptick. So, I'm actually looking at some of these names very constructively. It's just that I want the price action to stop falling first and then maybe start showing uptick. So maybe some of these could fall, in the buying category in the coming days.
Okay, Kush, stay on because it's an important conversation to have. What could happen to textile exporters? Mr. R.K. Vij, President Emeritus of the Textile Association of India, joins in a moment. We'll also get in Sabu Jacob of Kitek's Garments. But Mr. Vij, thank you so much for joining in. Now, first, what is your sense? I mean, will Indian exporters tide through this big hump, or there needs to be some resolution or some support or a combination of both that needs to happen?
Actually, in last 1 week, there is a Trump G is changing on and off on the tariff now, because earlier our tariff was about only 5% higher than the other countries, Bangladesh and other things. So we expected that our Indian government will support us with the 5%, but now the difference has gone up by, now our is 50% and there is 20%, by 30% it has gone up. So it's difficult. Suppose if we'll try our level best, we cannot match this 50%. So our textile industry is still thinking, because around $8 to $9 billion of garment, carpet, home textiles we are exporting. Over the total, our textile trade export is about 40 billion. Out of that, 9 to 10 billion is going to USA. So at present, with this 50% tariff, it is very difficult to export to USA. That is sure. And uncertainty is there. Of course, we are also thinking this 50% will not remain, because they are on the 27th, the team is coming. But as on today, we are not sure what will happen and where we will have to export our products. The buyers of USA, they are also not keen to buy, but I think some solution will come down.
Okay. So, but let's assume that we don't have a resolution for now, Mr. Vij. We don't know when it will come through as well. I mean, are there other countries where the exports could help? I mean, what is it that can be done? Could there other countries or other markets open up? Can the Indian government give some support which could help as well? What are the options?
No, I'm just telling you this. We have a very strong domestic market is also 8 to 9 billion domestic market to consume. Of course, it will take 2 to 3 months. But we have the world over another market with the recent this FTA with USA and with Europe. It's going on. So we will get the market and we will change our products according to them. But now the government they should make as earliest as possible the FTA with Europe. Europe is also a very big market, so which we are aiming, and we can supply also. And the government should give us some support. They should give us 5 to 6%, not more than that. We don't expect 30% from them, but 5 to 6, 7%, they should give some export benefit to other countries also, including if USA, to all countries, so that we can overcome this problem. And another thing, we have a very big market, so government should make some, because here cotton we are getting, cotton is we are importing PTA MEG for MM fiber. We are importing. The duty of cotton is at present 10%.
Right.
Custom duty. And on PTA MEG it is 5%. So government can take a decision so that our raw material should be cheaper.
Got it.
So then we can compete.
Got it. Got it, Mr. Vij. We're also joined by Sabu M. Jacob, Managing Director of Kitex Garments, joining us now. Mr. Jacob, hi, good afternoon to you and welcome to NDTV Profit. It seems that we have technical issues with him. His call seems to have dropped. But okay, Mr. Vij, sticking to that conversation, lots happening in the textile space. First thing, of course, US tariffs. But on the other side, on the flip side, we have the UK FTA, which could benefit the entire textile space. There are targets that the government has set for textile exports from India to different nations by 2030. Just want to get a sense that if tariffs are not beneficial, let's say in the case of US, do you think that UK FTA, which was a huge success, could offset to some extent when it comes to textile exports from India?
Yeah, UK is very much benefit because all the duties to UK tariff is zero. So we are opening a very big market for UK, and I don't think we will. This is the time being. So, and ma'am, textile, of course, the profit margin in the textile are very, very less as compared to other products. We are very strong, and we are not going to, we will solve this problem and we'll immediately find out other market. For the time being, 1 or 2 months, we want a government should support for the local market as well for UK, and immediately government should start negotiating for the Europe market also. Europe is a very big market, and we sure will get whatever the $6 to $7 billion. Of course, $9 billion is we are exporting. It will not become a zero, but $4-5 billion part of we'll consume in India, and part of we will find out other market of the world. So I think within 2-3 months this will be over. And moreover, ma'am, this Ukraine war from the last 3.5 years is going on. It will come to an end, and then I think this problem will be solved and we will be on the normal track again.
Okay, Mr. Vij, thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit. Now we, also had a conversation with Raja Shanmugam's former president of Tirupur's Textile Exports Association, and Shalin Toshinwala, Vice Chairman at Synthetic and Rayon Textile Export Promotion Council, on what will be the impact of tariffs on the garment sector. Listen to what they had to say.
To swiftly invoke the support of the incentive tools, what is there already, what is there that has to be enhanced at least for the ongoing programs towards US. So then the later days they can negotiate and get it settled. So till then we have to invoke whatever the possible tools available with India to safeguard the interest and existence of the micro and small industries of these segments.
Export to the world market for Indian textiles is worth $35 billion. Now, the US alone is about $10 billion worth of that, so almost a third of our overall export. And within that, apparel and made-ups is about 8 billion combined. Now, as far as apparel goes, there is a very clear danger that there will be quick replacement to different destinations. And as far as made-ups go, we have a very sizable share within the United States. It's going to be harder to replace it quickly, but of course, there will be a slowdown, and there will, if things don't normalize, there will be replacement pretty quick.
Okay, so that's with regard to textiles. Not seeing a major reaction on most of the textile players, Mahima. In that sense, we're seeing a very mature reaction from the market, regardless of what Mr. Vij was saying, which could be quite a heavy price for the textile sector. Despite that, we're not seeing that kind of reaction. So it seems, is the market really discounting some part of this?
Maybe some bit of damage has already happened. In the sentiment, there's no benefit that came in after the UK FTA move as well. So I think the stocks have largely been quiet after that initial hurrah, right? So maybe that's what's playing on the mind. But clearly they are a loser. I mean, you can't really doubt it. But yeah, I think market-wide there's been a bit of a pullback. Maybe that is also helping the current mood right now.
Yeah, possibly that. Okay, before we slip into a break, India's IPO market remains lively. Several offerings lined up this month. One notable IPO opening is JSW Cement, and that's of course led by Sajjan Jindal, aiming to raise around 3,600 crore through a mix of fresh issuance and offer for sale. My colleague Sajid spoke with the management. Let's hear Parth Jindal's perspective.
Parth, your IPO is coming on 11th. Can you take us through the entire proceeds which you're going to raise? It's the 3,600 crore IPO, and I think the second one in the last couple of years after JSW Infra, which came out with an IPO. How are you going to use the proceeds?
Sure. So the IPO opens on the 7th and closes on the 11th. And like you rightly said, we're raising 3,600 crores. 2,000 crores is an offer for sale where the private equity investors in JSW Cement, Apollo, Synergy Capital as well as State Bank of India would be partially offloading their stake. And the 1,600 crores is getting infused into the business as primary. We've disclosed that about 520 crores of that is going for debt repayment. About 800 crores of that is going towards building our integrated unit in North India at Nagaur in Rajasthan. And the balance is being used for general corporate purposes. So the purpose of this IPO is really to enter the North Indian market as well as to become a pan-India cement player. And this is the first step in our journey from 20 million tons where we are today to 42 million tons, which we would like to get to over the next 3 to 5 years.
Do you see this IPO being also an exit for some of the investors who came in 2021? Because your valuations have more than doubled since the time they came in. I think if I'm not wrong, 1,600 crores for 18-19%, and now we are looking at 19,500 crores for the upper band which is there. So is that also one of the reasons?
Yeah, so the upper band is at 20,040 crores, and you're right. They came in at a lower valuation, and they would be partially exiting, but they will still retain about 7% of the company even after the IPO. So yes, every fund has its strategy. So I'm sure they are looking at they are partially exiting, and partially they would remain in the business. And they came in at a very timely time for JSW Cement. That 1,600 crores that they invested in 2021 has really allowed us to expand and become the 20.6 million ton company that we are today. So we'll always remain grateful for their participation, because without the capital that they provided in 2021, we would not be where we are today.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Call us from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Back with India market close right here on NDTV Profit, and the reason I'm laughing is because the market mood is very fickle right now. We recovered a bit of lost ground, which is good news, but I don't think portfolios would have made money, which is what I think we were laughing about, that not too many people are making money, even though, I mean, everybody's being a watcher of the markets right now. But Kush Bora, you spoke about IT and that bit of a green on the screen. Just wondering, you gave a view on that earlier, but considering it's trading circa the high point of the day or around that, I mean, is there a trade to be taken for the last 1 hour on IT?
Neeraj, gun to my head, which I know you'll never put, but a gun to my head. I mean, you could still consider, a sharp short covering trade on some of these names. I don't call it a positional trade because, as I said, some of the key levels need to be taken out before, and a confident move comes in some of these names. But otherwise, yeah, I mean, if you're playing for that short covering quick trade, then couple of names. I think TCS is one stock which is now starting to show some positive divergence, some sort of an upswing. So maybe with the stop loss around the 2950 mark, you could play for another 200 to about 350 points of upside. Persistent has stemmed its fall. It's starting to see some sort of rebound on occasional days. Volumes again, nothing to write home about, but they're still a steady holding ground. So yes, I mean for a stop loss around the 5050 mark, again for a uptick of about 150 to 300 points. So some of these trades as a short covering play, purely a rebound from oversold territories, yes, but that doesn't still change my view that IT is still a sector that you'd want to perhaps put it on wait and watch list rather than take a big positional bet.
Okay, Kush, stay on. It's that time of the show wherein we get you what dealing rooms are saying. What is the chatter from across the dealing rooms in the country? Some would have dialed maybe 3, maybe 5, maybe 10 phones, or maybe more. Sorry if you do more. But I'm guessing it's a lot of hard work through the day, which gets you to this final list of 4 or 5 names, right? What's that list looking like today?
Firstly, it's HDFC Bank, and dealers are saying that there are some sell flows that they're seeing at higher levels on anticipation of some negative corporate development that could come in for HDFC Bank. So keep an eye out for that counter. Titan is another counter where there are sell flows on large HNI desk on anticipation of weak Q1 numbers, and the weakness could be on the margin side is what dealers are indicating. For Trent, Dealers are indicating that despite the strong financial performance, there are sell flows at higher levels on institutional desk. Both domestic and foreign institutions have been seller in this counter, and valuation is one of the concerns that they have pointed out. For Paytm, there are buy flows on institutional desk at lower levels, and dealers expecting some positive corporate development. And as you can see, despite the weakness in the market, Paytm is one stock that has gained around 1.5% in trade. PVR Inox is another counter where multiple dealing rooms are suggesting a tactical buy trade to their clients. This counter, that's PVR Inox. And lastly, it's Manappuram Finance, where dealers are indicating that there are fresh buy flows at lower levels, as Street believes that all the negatives are largely priced in now for Manappuram Finance.
So all negatives are priced in. So are people saying that they would want to go out and buy into Manappuram Finance at the current valuation?
Well, yes, that is what the indication is coming in, and also there is some indication that even though the numbers are expected to be on the weaker side, given the fact that Asirvad, which is one of the subsidiaries of the company, reported a weak set of numbers, there would be buyers for Manappuram even at falls. So keep an eye out for that counter.
Okay. Now, Somit, thank you so much for that. And I'll urge my producers to keep these graphics on as I ask Kush Bora about some of these stocks that Somit has brought out. So on two of those names, Kush Bora, HDFC Bank, where there are some sell flows from that what dealing rooms are saying, and on Manappuram Finance, where they believe that the negatives are priced in. Can you talk about both of these?
Love to. In fact, quite intrigued by this, piece of news that, or rather, the dealing room check that Somit has shared on HDFC Bank in particular. My views constructive on HDFC Bank continues to remain so. But now since he's mentioned it, I'd perhaps watch it a little more closely. 1950 is that support zone, and maybe a little further down 1925. So 1925, 1950, that's the support zone for me. As long as that is held, I don't think HDFC Bank structure is going to weaken. Perhaps, in fact, I would look to buy around those levels. So HDFC Bank, I still remain constructive, but as I said, now that Somit's mentioned it, I would actually keep it on my radar. The second one was Manappuram, right, Neeraj?
Yes, it was Manappuram.
Yeah, here the structure is not actually very exciting. The resistance is near the 263, 265 zone. So for me, that needs to be taken out before any kind of meaningful long positions need to be created on this. So yeah, not too constructive on Manappuram just yet. But I do like a couple of shares that he has already mentioned. PVR seems to be turning a corner, and 197 on dips remains a buy. So yeah, among the pack, if I were to pick just one, I think it would be 197 communications Paytm. That still looks fairly strong despite the kind of decline it's seen in the last couple of sessions.
Thank you for those views, Kush. We're also joined by Aditya Shah, founder of Hercules Advisors, joining us now. Aditya, hi, good afternoon to you. I'll take up one of the stocks that Somit was just talking about, that is Titan. We're expecting the earnings today, and as he rightly pointed out, the earnings will be weak on the margin front especially, and this is because of their studded ratio not going up in the past 2 to 3 odd quarters. What is your understanding with respect to how the business update came in, of course, and how do you expect Titan to come out with its earnings?
I expect very muted set of numbers. Given the valuation at which Titan really trades at, I don't think that the numbers would be great or cheer or will be cheer about the story. Of course, I think that the revenue growth would be in the region of 10 to 20%, and then from there on, if margins continue to be deteriorate, profitability could get it. So from my perspective, Titan is a great company, but the valuation is crazy enough that I would not tend to look at this stock. In fact, valuations across the entire sector, be it Kalyan Meller, be it Sky Gold, or be it PNG Garden, all of them are trading at a very crazy type of valuation. Volume growth is muted. The revenues are getting inflated because the gold prices continue to keep moving up. And as gold prices continue to keep moving up, revenues keep moving up, as well as percentage of the revenue that also keep moving. So from my perspective, growth with respect to prices is there. Volume growth for many of these companies is really very muted. From my perspective, valuation is crazy. Good company, but I will tend to avoid that company at this stage.
Okay, all right, so that's with regards to where Titan stands, but it's time for our stock of the day segment, and the stock that we're putting spotlight on today is Fortis Healthcare, which is buzzing on the back of its earnings, and it's beaten analyst estimates, and we have Varsha joining us with more details on Fortis. Varsha, what are you picking up?
Right. Thank you so much for that. Yes, good set of numbers, beaten estimates when it comes to your EBITDA, your revenue, and even net profit as well. The revenue growth that you're seeing is led by higher RPOP, that is average revenue per occupied bed, and 7.8% increase in occupied beds. Now, the international patient, if you see, it grew 21%. Now, international patients contributes almost 7.9% to the overall revenue. Onto occupancy, if you see, the occupancy stood at 69% versus 67% last year. So the uptick there, and management is expecting 70 to 71% of occupancy level when it comes to the whole year, that is FY26. Diagnostic business, if you see, grew 7.4%, and over here the next leg of growth for the company would be diagnostic business growth, where they are expecting almost 12 to 13% of growth when it comes to this segment. Let's see what management vision is, because we earlier spoke to the MD of Fortis Healthcare, Dr. Raghuvanshi, and what he has to say, that the consolidated revenue is expected at mid-teens growth in FY26, and the hospital business, if you see, is projected to grow at 12 to 14%. Now, of course, this will be led by the capex that the company is doing, but the diagnostic business, as I was informing, it is expected to grow 12 to 14%. So 7.8% of growth this quarter to overall 12 to 14% of growth in FY26 is a huge uptick that the diagnostic business will be seen, because of the brand that the Fortis has been building on. They are anticipating a slight moderation when it comes to RPOP, that is average revenue per occupied bed growth, but they are planning to add 900 bed capacity when it comes to FY26, and overall, if you see, a lot of hospitals are actually playing on capex. The next leg of growth for all the hospitals would be to go to capex capacity addition through brownfield project, and which will lead to higher ratios and higher margin, and Fortis is also leading when it comes to brownfield expansion. Lastly, if you see, the EBITDA margin is expected to increase by 2 to 3%. So huge uptick there, and huge uptick when it comes to diagnostic business will actually lead to the growth that the Fortis is eyeing on when it comes to FY26 and 27. Lastly, on the analyst recommendation, if I were to talk about, there are 15 buy calls, 0 hold call, and 1 sell call, but the upside potential would be almost negative 7%.
Well, it's been a very, very solid performance from healthcare as a segment, and in terms of returns given to shareholders. Curious. Thank you so much for that, Varsha. But curious to know, Aditya, can that kind of outperformance that healthcare as a sector has given in 2024 calendar year, can it sustain, or are we just losing some of the shine there?
Very surprising that everybody has a buy call, but their targets are minus 7%. Very interesting. From my perspective, the company has performed well. Fortis' results are really very good. But again, I am seeing a hospital stock trading at about 60 to 70 times multiple. Now, I don't think, given the 15 to 20% growth that the company will clock off, I don't think that kind of a valuation is justified. Point number one. Yes, healthcare will continue to do exceptionally well. Healthcare is a broad range of spectrum. There are so many subsectors within the healthcare space. There's a CDMO space which is doing exceptionally well. There's an API space where companies like Laurus have also done exceptionally well. So it is a broad range. A lot of healthcare performance will also depend on how the US exports are treated going forward. If there are tariffs, expect a little bit of slowdown in the near term, which could affect stock prices trading at a very high valuation. They could see some bit of price correction as well as time correction. And once that really happens, you will see a good opportunity. For example, on TV's call yesterday, TV was very, very cautious on their export market. 88% of TV's business comes from the export market. And if there is a tariff in the US, it could hit companies like DBs, also for that matter, companies like Laurus, Syngene, all of those companies. So I think 2025 will be an opportunity to invest in the pharma sector. the returns may not be great in 2025. Returns will return back when there's clarity with respect to tariffs, which could come by the end of this.
Okay. Kush, your quick view on the charts for Fortis Healthcare. If one wants to go ahead and buy today, is that the right levels to enter, or should he wait?
So, Mahima, about 10 sessions ago, we recommended Fortis on the channel, except around 855, 860 zones, for targets of 885 and then subsequent targets of 905, and that was 2 sessions ago. Today's high is 904.5. So I think that near-term trade is done and dusted. If you had a position, you're better off taking profits home. Now, the stock is in a very, very strong, medium to a long-term uptrend, and nothing that has happened today, at least in terms of price action, has changed that. In fact, it's only reinforced that view. But if you want to add, my suggestion would be do it on dips. Any level close to the 850 to about 865 zone, that should be taken as an opportunity to accumulate further from a positional standpoint. And from there on, your stop losses are 830, 835, around that level. But accumulate close to the 850, 860 zone. Hold on for some more time. I think the stock is in a good uptrend. Once the market settles, this stock's outperformance will just keep on continuing.
Okay. All right. So that's with regards to where Fortis Healthcare stands. But the top nifty gainer today, that's Hero Motocorp, and Q1 earnings con call highlighted a mixed start to the quarter with easing demand, stable finance penetration, and gains in scooter and EV market. To discuss as to what are the key takeaways from the con call, we have Puneet joining us to give us more details. Puneet, what are you picking up?
Well, thank you for that. So definitely it was a weak quarter. In 10% sales fell in this particular one, but the June sales led to a 20% rise compared to the same time last year, and the street is continuing with that momentum as well. So in this particular year, in this particular con call, actually they didn't mention that the start of the quarter was much stronger in quarter one, but because of industry demand as well as other factors, it did soften by the end of the quarter in May as well as in June. And we've seen just a tinge of revival essentially in the month of July, but it is on a low base. So that is, supposed to be considered. They did mention a very interesting trend, which is opposing to what all the two-wheeler makers are saying, that the rural growth is actually slower than the urban growth for Hero Motocorp specifically, at least over the last 2 months. That trend is reversed according to them. So they are actually seeing the urban markets come back faster compared to the rural markets in June as well as July. And it could be very interesting because it's a very contrary trend compared to what Bajaj as well as TVS has said in their con call. So that's one. The second key aspect is finance penetration. It did go down in quarter one. The company mentioned that that's largely because of some specific issues that they were facing in their financing arm as well. But now the trend seems to have reversed and is better at around 65,000, which is the normal level as well. The third key highlight, they mentioned that they are looking for a new forthcoming launch in the 125cc segment. It's very interesting because Bajaj also yesterday in their con call said that they are looking for a more affordable 125cc segment launch, which will be a non-sporty variant. So it is to address a larger market which competes with the likes of Honda Shine as well. So that is a very key. All players going after the non-sporty segment now in the 125cc. The fourth key trend is scooter sales market share now at 9.4%. It was almost negligible in the same time last year, as well as the EV market share is now 7% for the company, moved up to 10% in July as well. So a key positive. And finally, on PLI certification, the Vita V2 has already got PLI certification. That should boost margins. They're also applying the other models like the VX2 going forward as well. So it's largely that the commentary is driving the positive momentum, and valuations are definitely in favor for investors compared to the other peers.
Puneet, what should one make of the trend with regard to some of the base models of Hero as well as a Bajaj Auto not doing as well, but on the premium side of things, and Neeraj and me were discussing earlier today, on the premium side of things are looking much better. What do you make of that?
Well, definitely. So the premiumization and the scooterization trend seems to be quite vigilant, and that is doing very well for TVS because they have both these segments. For Eicher, they have premiumization, so that is doing very well as well. The entry level has definitely taken a hit, and that's visible both for Hero as well as Bajaj Auto. So they will have to do some model launches, and I think the new launches in the 125cc segment, in the non-sporty segment which I mentioned, Scooters for Hero have been doing very well compared to Bajaj. TVS, someone like a Hero actually does have scooters in petrol and diesel. So those two trends are a clear indication that the 125cc segment could be the new 100cc segment going forward, and all the players are focusing on that pie, because with the ABS coming in 2026, the cost will go up and the people will start to migrate and go into the 125cc segment first rather than 100cc now.
Okay, thanks for that, Puneet. Aditya, just sorry, but very quick view with regard to a Hero and everything that's playing out in this space.
In the two-wheeler space, and positive on Hero, the valuations for Hero are looking really very good. And as the management is guiding, growth will become slowly and steady. From my perspective, I am positive on Hero, positive on Bajaj, and positive on Answer for that matter as well. Slowly and steadily, as growth continues to pick up, given the upgraded valuations of Hero Motocorp, the stock price will continue to do well as the growth continues to pick up. I think TVS Motor has been a standout performer and continues to do exceptionally well in this. But the valuations for TVS Motor are really very expensive at this stage. So Hero Motocorp is a favorite zone.
Okay, all right. Shifting focus to the IT space and talking about Datamatics, which came out with its Q1 earnings. Overall revenue was down around 6% EBIT up 3% margins have improved to 12.1 and net profit up 12%. And to discuss as to how the quarter has gone by, we're joined by Rahul Kanodia, who's the Vice Chairman and CEO at Datamatics, joining us now. Rahul, hi, good afternoon to you and thank you so much for coming to NDTV Profit. My first question to you is that revenue has seen a slight dip, but both your margins and PAT has grown. Just trying to understand as to what's worked for this quarter and what's led to this kind of margin increase.
Yeah, so we do have a seasonal spike in Q4 and therefore Q1 is always a little depressed for Datamatics compared to Q4. So that's a normal business cycle that we have. The margins have improved because we've been taking a lot of optimization and cost cutting, and that's beginning to show the results. So we had taken that initiative in Q4 of last year, and therefore Q1, you're seeing those results.
Okay. In terms of, the kind of the investment that you're doing in AI, from what my reading is, you invest around 40 to 50 odd crores every year when it comes to your technology development with regards to where AI stands. Is there a change there? Because competition is picking up in the space. Do you think that you will be able to invest more and maybe get more technology in place? Is that something that you're aiming at, or will that be in the same range of 40 to 50 odd crores?
Yeah, we have the capacity to invest more, although right now we're not planning to invest more because the current investments need to see a return. So we are doing a very specific customer-centric investments because that will give you a better ROI rather than a general purpose investment in these solutions. So right now there is no plan to increase the investment. However, yes, of course, we have the capacity to invest more. And if there's a need, depending on the situation, we will increase our investments.
Got it, Mr. Kanodia. This is Harsh joining in as well. Give us a perspective on where you see the business go in FY26 in particular, which is in the near term, in terms of both top line growth as well as where margins go. And then give us a slightly longer term lens, maybe 2 to 3 years. How should one look at the business of Datamatics? Things are fast changing. So give us that perspective first.
Yeah, things are changing very rapidly in the near term. For this year, we are looking at mid-single digits organic growth. The reason is that right now you have this tariff wars going on and there's a lot of uncertainty. We see many customers going slow on the decision making. The pipeline is healthy, but nevertheless the decision making is slow and therefore one has to be a little conservative. On a longer term perspective, 2 to 3 years, I think there'll be a huge disruption in the industry because of AI. And therefore, there's a great opportunity for companies that are taking the lead on AI to capture opportunities for automation and AI-based re-engineering and transformation. Datamatics is fortunately very well placed. We've had an early start. We work very closely with some of the OEMs like Microsoft and Google. And with that partnership, we have an edge when it comes to the market. So fortunately, because we have a good edge and an early start, I think we are very well placed to capture that opportunity. So 2 to 3 years looks very promising. This year, because of the tariff wars, one is a little skeptical because customers are slowing down their decision making.
And no commentary as of now, Mr. Kanodia, I believe, on when does that change, right? That uncertainty remains, customer commentary.
Yeah, that remains for now. At least I see for the next 6 months, I don't see any major change. The turmoil will continue.
Got it. The model that you've built, you spoke a bit about benefiting from AI as well, I presume on multiple counts as well. Does that enable you at a higher base to reenact the 5-year CAGR numbers that you've spoken about in your presentations?
It will. Right now, we started seeing a commercial deployment of the pilots that we were doing. So some of the projects are going live, and that's very reassuring. We are deploying AI across all the three digital technologies, digital experience, and digital operations. So all three, we are doing that. Once they see the light of the day, hopefully in the next quarter or maybe at best 2, then I think we'll be in a good place to talk about the benefits. But we're seeing very good traction. And some of the new wins that we are getting are on the back of the AI solutions that we are able to demonstrate to customers.
Sorry, so the crux of my question, Mr. Kanodia, excuse me, was that you mentioned how you've had a very impressive 5-year journey, CAGR, right, after NCI on the PAT and the revenue front. It's high double digits, not something that too many companies have done. Do you reckon you can reenact this story for the next 5 years?
Answer is yes. This year may be a little soft, but the next 5 years, answer is yes. We will probably maintain that.
And Mr. Kanodia, in that journey, there's also been some bit of client concentration. So there's been clustering of revenue. Do we expect that to continue? What I'm trying to get to is, are existing clients going to be the prime focus area, or are we penetrating deeper into newer clients, and are those opportunities really opening up for you?
Yeah, no, we will do both. We are putting a lot of emphasis on penetrating existing clients. That's very important because you have a good relationship, a good base, and all our accounts are marquee logos that are very mineable. So certainly we will maintain that. Having said that, we are getting some good traction with new logos on the back of some of the AI solutions. So it's both of them, but probably a little heavier emphasis on mining existing relationship. And there's a lot of headroom for growth there.
All right, Mr. Kanodia, thank you so much for joining. We'll let you go on that note. So that's, of course, Datamatic's global stock perked up on the back of the numbers of Q1. Seasonally weaker generally, and which is why the market's completely brushed off that degrowth number that we've seen QOQ. Aditya Shah, while some of the larger IT names aren't showing enough zing in terms of growth, and it's been a while since we saw absolutely any kind of growth from them, are some of the smaller names on your radar, or would you find them too expensive? Rationalize that for us.
From a valuation perspective, the entire package is but then that's how it is. The market is derated them and does not derate them, even when the growth is slowed down. So from big cap IT perspective, something the ER&D space, ER&D space is facing a severe slowdown because the United States and Europe are undergoing a slowdown. So something like a NDTV Technology Services or a Tata Tech as well, that stock has seen a massive correction down. So ER&D Services continues to be my top pick within the IT space. Tata Tech, I'm looking out for that, though valuations are not cheap. However, that company has a lot of potential if the ER&D space continues to do well. Other names include L&D Technology, KPI, but all those stocks are really negative.
Okay. Sorry, Aditya, just one quick follow-up. I would also want Kush's view here, but did you happen to hear Datamatics? What did you think of that conversation?
Not able to comment.
Okay, fine. Fair call. Kush, that stock 3% higher today, as is the rest of IT pack. I know we've spoken at length about IT, but because we just did a Datamatics conversation, any thoughts there?
If only the team can pull up, just the last 1 month chart.
Yes, we can.
Stock.
Let's pull that up.
It has been a staggering, phenomenal move. I think the stock's gone upward about 60-70%, around that time. So I think this itself speaks for the view. It's already overshot, but to be completely honest, I would have called the stock overshot, at about 900, 950 odd levels. So yes, this is more of a momentum play now. No point entering at these levels. If you have, you could, well continue. In fact, you should continue to hold. Keep a stop loss near the 1030 mark and ride the wave. But this is too overstretched for any kind of fresh entry.
Overstretched for a fresh entry on the technicals. And yes, indeed, that 1 month chart, stock's really taken off. If you zoom out and you look at the 5 years as well, stock has really taken off over the last month or so. But on to our bull versus bear segment. Today we have the pharma giant Lupin, and it's Varsha's day, of course, both on stock of the day as well as bull versus bear. Lupin has surpassed estimates with robust US sales in Q1, but a decline in API sales signals core segment challenges still remain. Varsha, talk to us about Lupin.
Right, thank you for that. But overall, if you see good set of numbers, EBITDA and net profit beat that the company has given, exceptional Q1 FY26 earnings. Now, this was driven by strong growth when it comes to US, and of course a little bit growth when it comes to India. Now the EBITDA margin expansion that you're seeing is on the back of favorable product mix that the company has seen, and of course if you see in the past few quarters there's been EBITDA margin growth. Now this was led by the cost initiatives that the company has shown in the past few quarters. But onto the API business, if you see, was down 33%, which indicate a weakness in the core segment. Even if you see the India business was up only 7.8%. Now, downtick in institutional business has led to the moderate growth when it comes to India business. So this is on the negative side, but company believes that they're going to be on track from next few quarters when it comes to India business. But strong US sales, if you see, the US sales grew almost 24% year on year, which demonstrates strong execution and pipeline potential, and the US growth was driven by new launches and the volume growth in existing products. Going forward, if you see, the US business is expected to grow, which will be driven by continuous growth in the respiratory franchisee, and of course the complex generics and injectables, which is likely to offset price erosion in the base business. But now, since we are speaking about the US business, the other disadvantage that the company has is the single-digit price erosion in the base US business suggests some pressure, and though we might see continued pressure when it comes to US generics business. Sustained R&D investments in complex generics and the robust pipeline provides long-term growth for the company, but delay in one of their products, which is used to control symptoms of asthma, so delay in that product shows that the complex launches can face setbacks and which can impact revenue timelines for the company. But on the bull side, you have the EBITDA margin. So they have reiterated, or they've maintained the guidance of EBITDA margin of 24 to 25% for FY26. In FY25, the margins were around 23%. So good uptick. Even now, they're expecting more uptick there, and a high single-digit to double-digit revenue growth for FY27 provides good visibility when it comes to financials for the company. But Pitambur Unit 2 and Unit 3 facility, if you see receipt form 483 with some observation, is one of the headwinds that the company has. But overall, good set of numbers, and of course the good growth when it comes to US business are the reasons why the stock was up yesterday and even today.
Okay, Varsha, thank you so much for explaining that in so much detail, and thank you so much for those insights. Kush, I'll quickly take up your view on the charts with respect to where Lupin is concerned.
So I'd wait for one more day because the stock has a falling trendline resistance from medium-term downturn, and also the high that it's made today is bang on at the 50-day moving average. So some resistance acting up. I would wait and watch. If this follow-through continues and the stock is able to sustain and close above the 1590 mark, is perhaps when you consider a long trade. Up until then, this could be a short covering bout.
By the way, some breaking news there. As per reports from agencies, Russian President Vladimir Putin is likely to visit India in late August. Geopolitically, I must say, things are moving very, very fast, simply because we know that Prime Minister Modi is scheduled to visit both Japan, which has been slapped, by the way, with additional 15% tariffs, and China's SCO, August 31st. Now we're hearing that even Vladimir Putin is slated to come to India as well. So You know, I mean, as much as US is slapping penalties left, right, center on countries, it better keep one eye out on what is it that the other countries are doing as a result of this as well. I'm not saying this is the result of the tariffs, but it is something that, well, nations should keep in mind. But, well, this is big news, is a very big development and something that you want to keep an eye out for. Okay, we need to slip into a break. Okay, actually, before we take a break, let me thank Kush Bora. Kush, thanks so much for joining in and really appreciate you taking the time out and being with us and your calls as well. And of course, Aditya stays on. We take a break, come back, dissect this piece of news a bit more if necessary, but also a keen focus on the last half an hour of trade, considering the fact that the markets are putting up a fight.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Exciting afternoon we're having in the markets today. Nearly a 200-point recovery from lows. We're waiting within the studio. We're waiting to see if you're going to flip into the green any second now. Maybe in the next few minutes.
We are right now almost in the green.
Yeah, almost in the green. You know, I think the recovery from lows of
in the green.
Yeah, there
on the Nifty 50.
Let's pull it up. Let's pull it up. This is, I mean, you want to call it a, thenga dikhana. Is one way you can say it in Hindi. You bring on your 50%. That's all right. We already
75 kar do.
We already have meetings fixed. I think it's very interesting that Prime Minister Modi will be meeting Xi Jinping. The reports you all just talked about that Putin will be coming to visit India in late August, coinciding with the US delegation also. It's sounding like it's going to be a very hectic last few days of August, which will create that whole situation. And the way India is handling this, saying that, hey, wait a minute, we have other friends that we can dial.
Yeah. You're not the only, you're a very important game in town. We want to keep our relationships with you, which is why we are not being unsavory in our commentary. We are following diplomatic channels, but yes, we have other friends to dial. We have other games to play.
And we will look at our own domestic interest.
As we should, as any nation should.
Several screens turning green. I just want to recap that very quickly. The Nifty 50, yes, now in the green, I think for pretty much the first time of the day. The recovery led by IT stocks, and we should pull up all of those intradays because it shows you beautifully what kind of recovery has really taken place. And on the Nifty IT as well, near the day's high. So you're hitting maybe 20-25 minutes before end of trade, you're hitting a complete turnaround in mood. Where is the money coming in from? Where are investors coming in from is the question. You know, we spoke this morning to a whole host of big market voices that were talking exactly about this, that money is right now sitting on the sidelines looking for opportunities. Bank Nifty also has seen a pretty decent recovery actually from the lows of the day. Yeah, there you have it. Quite a sharp recovery on the Bank Nifty as well, and a lot of it coming with the news that you are going to maybe have Putin coming to India. I don't know if tonight you will hear more tariffs, like you said, 50 ka 75, and you know all of that might come in. There might be more tantrums, tariff tantrums to come. But meanwhile, the kind of voices and responses we're hearing from very astute market investors will give you a sense of how they are seeing this situation. Listen in to what some of them are saying.
There is this little bit of moving away from US, and if that happens and continues, then because US is 70 and the rest of the world is 30 or 68 or whatever, and you reduce 3-4% from US, we mean all collectively, and that 3-4% goes to the 30% base, everybody gets more money. And in that, India has a strong case. So India money, I think the overhang of selling has already gone away 1 or 2 months ago, according to me.
They believe better senses will prevail, and US will recognize that European Union, US itself have been trading with Russia. It's not just the Russian oil which funds Ukraine war effort. It is also the Russian gas which Europe is buying. It is also the Russian chemicals, fertilizers which America is buying. So market is hoping that better senses will prevail. The strategic interest of India and US will overcome current challenges.
You cannot move to a new market overnight. It takes time. And therefore, in medium to long term, for de-risking also, they are looking into the other market. The FTA has offered them an opportunity. I think UK will be a good big market once the UK Parliament approves the FTA. The early harvest with UK, with the EU will also help, and so with other GCC's countries. But these are in medium to long term.
You know, looking at new markets and developing contacts there and starting to export to those markets is not going to be easy. As far as our established markets are concerned, the European Union, which is one of our largest markets, China, which imports very little from us and could import a lot more. So these are some of the areas where we can focus on behalf of the government as well as the business.
Okay, Coforge, persistent emphasis. These are the IT companies that are leading the recovery today as well. Rajesh Palvia joining in this afternoon. Rajesh, great time to have you on the show as we see that bit of a turnaround. Do you buy into it right now?
So I think we are almost recovered from the 100-day moving average support area, and now we are back above 24,500. A very strong short covering action on the weekly expiry option weekly expiry day. So I think yes, some confidence again. Looking at the broader market recovery, yes, there is confidence again coming back on the street. We have witnessed huge supply pressure in last couple of days, but yes, I think this momentum can extend further as the kind of recovery we are witnessing in all the sectors. A possible up move can extend to 24,650 to 24,700. That's the major challenging area. 24,700 is the challenging area at this juncture. If at all we crosses those level, then another round of short covering will trigger in the Nifty. But till the time 24,700 is intact, I think really this pullback can face some supply pressure around those level. So yes, one can hold the long position for further more upside. At this juncture, trail stop loss towards 24,500. Even on the bank Nifty, also very strong buying action. BFSI sector is showing good traction. So I think bank Nifty is also showing sign of recovery, and short covering is also playing out here also. So back for bank Nifty 54 900 54 55,000 is the immediate base for this pullback. I think if we continues to trade above 55,000, I think this really can extend also towards 55,800 to 55,900. So maybe both indices can contribute to this rally, and we believe that another round of short covering could trigger in the market.
Interesting. Rajesh, your picks in this market?
So first pick is from the automobile space, that is TVS Motor, clear outperforming stock, series of higher top, higher bottom formation. Stock is at all-time high trajectory despite of volatility in market. So we believe that this outperformance may extend really further. We are projecting target towards 3,050 to 3,060 for trading point of view. Keep a stop loss towards 2,955 to buy TVS Motor. Another stock where we are focusing from the banking space, that is Indian Bank. Here also outperformance is there. Stock is comfortably trading about to all its near-term, short-term moving averages. So I think Indian Bank can extend its gain. We are projecting target of 660 to 670 for trading point of view, and on the downside, one can place a stop loss towards 638.
Okay. All right. So those are picks coming through for you. I want to quickly switch over to a development coming out of TCS, with a company which recently laid off a significant chunk of the workforce is set to give wage hikes from September the 1st. We have Jasmeet with us with regard to more on this one. Jasmeet, what do you have?
Well, right. Yes, thank you for that. TCS wage hikes in focus. Well, this news comes after the company announces the layoff of 12,000 employees eventually in FY26. When you look at the Q1 figures, the companies added an employer 5,000 employees, while as per the commentary, the employer did not pan out as much. While now we have the news of wage hikes. The company has plans to do the wage hikes from September 1st, and this wage hike could have some impact in the margins of Q2 as well as in the Q3. Now, to get on more details about the wage hike, the company is looking to provide a 2 to 4% wage hike for the employees which are on onshore basis, and to provide a 4 to 6% wage hikes for the employees in the onshore. When you look at the salary hike impact, while this will impact 4.5 lakh employees, that's almost 80% of total workforce, and the range of employees being targeted under it would be the C1, C2 and C3. While this category basically specifies that the impact would be for the employees who are earning anywhere between 15 to 35 lakh of package. So Q2 will be something to watch out for how this margins impact going forward.
Okay, TCS also showing some recovery, but Aditya, I want to come to you on the kind of recovery we're seeing in IT at all, as overall. Do you think this is something worth buying into, and would you stick to the larger ones or look at some of the mid-cap names?
Within the IT pack, as I said, markets are not cheap, but within the large cap IT, I would already be able to tell them same bank and then TCS. Of course, I don't think this year the growth will return to the IT pack. Growth will only return next year for all IT. Then after that, within the mid-cap IT space, you look at something like a Tata Tech or L&T Technology Services, L&T look at Mindtree or Tata or Tata Elxsi for that matter as well. Valuations across the mid-cap IT space are not cheap. They are expensive, so one should be taking care of there. But somebody who's a long-term investor, only they can invest in the IT sector now. Think in the near term, don't look easy for the IT.
Okay, I assume you said, I couldn't hear you very clearly, Aditya. I'm assuming that you said that valuations are too high, right?
Yes, absolutely.
For you to find comfort. All right, we'll try and fix your line, actually. Audio is not very clear. Rajesh, anything in the IT space that you're liking?
I think from oversold trajectory, most of the stocks now recovering. I think looking at the recovery, we believe that midcap IT from midcap IT, Coforge is looking attractive. After the corrective move, now stock is trying to find some support buying action around its previous swing low level. So I think 1660 is the key support area for Coforge. If it continues to defend this level for next couple of days, I think some more pullback action towards 1760, 1800 we may see for this counter. So Coforge one can look at from the mid cap IT space, and I think from large cap IT, if someone wants to go, I think Wipro is well placed, and I think Wipro can extend its gain from the current level. The way stock has turned from its oversold trajectory, if it continues to trade above 235 level, I think here also there could be chances to get some pullback action, possible up move towards 255. But again, these are all pullback trades. Trend is still on the weaker side. So in higher side, again, we may see some supply pressure to be remain in the system for IT stocks. So this is all purely for trading point of view. Keep strict stop loss, whatever stocks you are buying for pullback trades.
Okay. What else? I mean, there's this whole piece of stocks which become in focus as well because of the rejig, and the MSCI August rejig is also in focus with counters like Swiggy, Vari, Vishal Megamart and Hitachi Energy India shares likely to be a part of the MSCI Standard Index. Somit has the entire details. Now, Somit, there's a lot of calculation and a math and an assumption that goes behind it, but fill us in on this.
Well, yes, the announcement is expected to come in tomorrow early morning, and the flows regarding this changes, that is inclusion and exclusion, will happen on August 26th. So which are the stocks that might get included in the MSCI Standard Index? Firstly, it's Vishal Megamart, Swiggy, Hitachi and Vari Energies. These four stocks might get included in this MSCI Standard Index, and the inflows could be anywhere between 217 to 287 million US dollars in these stocks, which is nearly 2 times to 10 times the 20-day moving average. So keep an eye out for these counters. On the exclusion side, there are only two possibilities as per analyst. It's Sona BLW and Thermax, and the outflows regarding this exclusion could be anywhere between 150 to 190 million US dollars. Now, when it comes to the small cap index, multiple changes are expected, but I'll just give you the top 5 which are expected to see the highest amount of inflow. If they get included in the MSCI Standard Small Cap Index, they are IKS, Capri Global, Brainbees, Lumax Auto and Bellrise. And if these stocks get included in the MSCI Small Cap Index, then the inflow amount could be anywhere between 5 to 12 million US dollars. On the exclusion side, only 4 stocks are expected to get excluded from the MSCI Small Cap Index. It's Bharat Dynamics, Bondara Engineering, Heikel and Kenna Metal. And if these stocks get excluded, then the outflow could be anywhere between 2 million to 29 million US dollars. Tomorrow morning is when the announcement is expected to come in. So keep an eye out for these counters in trade.
So, and Somit, I'm throwing this out of the blue at you, but past instances of these things, some of them move in expectations versus actual when the actual event happens, right? In this case, maybe because the markets have been a bit curtailed, that may not have happened. But have any of these stocks preempted this inclusion?
Well, yes, these inclusion and exclusion names have been going around in the market for quite a while now. But yes, the market reaction still could come in tomorrow, given the fact that markets have been very volatile of late. And the more, so yeah, if that happens, and if there is any surprise inclusion or exclusion, that would be also something important to track.
Amit, thanks a lot for that. And Rajesh, I would love for you to come in and talk about some of these. There is, of course, Vari, which is one of the candidates that Somit has spoken about, and a couple of others like Swiggy. Any thoughts on the charts, particularly on a Vari?
So I think Vari Energy, yes, we have seen a very strong rally in last couple of days, and the way you're talking about Vari Energy, okay, okay,
Vari Energies.
Okay, so yes, stock is now trading near to its important support area of 3150 for the near term perspective. I think if it continues to trade above 3150, I think we could see some run up on the higher side. On the higher side, 3250, 3300 is the immediate hurdle for the counter. If at all stock crosses 3250, yes, there could be, another round of rally can take stock towards 3450, even 3500 kind of zone. So yes, one can hold the position at this juncture with stop loss of 3140. It's a very small stop loss. for trading point of view, but those who are positional trader can hold the position. The stop loss for positional trader would be around 29.50.
Okay, a few buzzers today in the media space as well. Z, PVR, both of them looking quite exciting. Of course, IT is leading the charge, some pharma as well. But as far as PVR and Z are concerned, this is something that is it seeming like further upside on the charts?
PVR managed to give breakout of a very small range of price action in last couple of weeks. So looking at the breakout on weekly chart, we believe that if it's a hold 1030 level for next couple of days, there could be chances of really towards 1100 to 1150 in the continuation of this pullback action. So looking at the breakout on weekly chart, yes, one can hold on the position with 1030 as a stop loss. 1100 to 1150 would be the next target.
Okay. And what about your BTST for this afternoon? This is the time to stick your neck out.
Yeah. So Blue Star is looking very attractive.
Yeah.
There is a breakout on the daily chart as well as on the weekly chart. Falling trend line breakout is there for Blue Star. And looking at the breakout, we believe that yes, this momentum can extend further. One can buy Blue Star for upside target of 1880 or 1890 zone. So one can buy this stock with stop loss of 1805. Again, Nifty is also showing the sign of recovery further, and the way short covering is playing out, I think as we speak, like 24,700 would be the next level for the Nifty. So I think here also one can carry the position, and now one can trail stop loss higher further. 24,550 should be your stop loss to carry the position for next target of 24,700 for Nifty also.
Okay. All right. So that's Rajesh's view coming in. Blue Star's chairman and managing director Veer Advani shared an optimistic outlook. Of course, maybe not for FY26, but H2 and beyond is what he was suggesting, expecting margins to inch up by as much as 1% over the next 3 years, driven by favorable business mix and profitability focus. Listen in to a slice of that.
It's about mix of business, and then it's about profitability of each business. What I want to convey is that, segment one is expected to grow at about 15% a year is what we've been talking about. We expect segment two, which is the unitary cooling products business, to grow faster. So if that happens, that the unitary cooling products EBIT margin is higher than our B2B business, and therefore we should see that business mix improvement on an aggregate Blue Star basis. Having said that, it's a hyper competitive industry. And as this category grows, there'll continue to be pricing pressure, and therefore we have to keep working on cost management, which is something that Blue Star does well. So net, Harsh, difficult to give you a number, but we've been looking to improve our EBIT by at least 100 basis points, over the next few years, and we're confident of delivering that.
Okay, let's also look at some of the other counters in focus on the back of Q1 earnings. My colleague Vansh joining in with the details. Something like a Rain, Sula, GNFC really buzzing in trade today, Vansh. Talk to us about those.
Yeah, so let me start off with Rain Industries. Now the stock is up on the back of the strong Q1 numbers that the company has reported. The company saw 13% uptick in the revenue from the carbon operations, and the carbon profit almost doubled for the company, and the cement profit also rose about 500%. If we talk about Sula Vineyards, now the stock is down 5%, and the margins are at all-time low for the company, and there has been a lowest EBITDA since the last 13 quarters, and the lowest ever PAT stands at 1.94 crores. Company also saw lowest quarterly revenue in the last 7 quarters, and the revenue has been impacted by the urban demand softness that is coming in. Third on the list is Gujarat Narmada GNFC. Now the revenue has been impacted by the lower volumes and the unproductive cost for the company, and they have saw a higher fixed cost repairs and maintenance, and there has been some chemicals that has faced margin erosion for the company. If we talk about the numbers, the revenue was down 20%, EBITDA was down 80%, and the margins were at 1.9% versus 7.6%, and the net profit was down 30%. So clearly a weak set of numbers that the market is penciling in for this counter.
Okay, thanks for that. Thanks for that, Vansh. Now 4 minutes left, and I just drew my attention to the stock that we were talking about earlier, and which is PVR. And guys, I don't know how you guys think about it, but I wonder if after quarters and quarters of pain, could this be an interesting next 3-4 months? Festive season coming up, people like going out, and I was just checking on X, right, the trending things. Yesterday there was a Ranbir Kapoor thing trending because there are 2 movies coming out between now and Diwali of his. Then there's a Hrithik Roshan movie coming in, Hrithik Roshan and NTR movie coming. I'm presuming that Salman Khan, Shah Rukh Khan would have a couple of movies as well, and then there might be international releases. Are we looking at a packed Stardust calendar, and could that bring in the crowds?
I'm first of all shocked. Shocked to hear this from you. For the last year and plus, and with last season this time as well. We've been talking about this, and you have been convinced that movie mein koi nahi jata.
Nahi jata, I agree.
Yeah.
Could there be a change?
I think something is changing. I agree with you. I think something is changing. And there is a movie hall that I pass every day. It's not a PVR, but it's a movie hall that I pass every day when and I head home. And I'm seeing crowds come in on your Fridays, your Saturdays, your Sundays, more than before. People are rediscovering it. You need a few good movies to do that. And then all your superhero and international lineups also definitely help.
Yeah.
I think there might be some turnaround. If they, if the numbers seem like if they can control some costs, etc., smart use of their theaters, like they did with IPL.
Yeah.
So maybe something to look at.
As it's been a while since we've actually seen a decent hit come our way as well. So hopefully with just this bunched up set of movies coming in.
Sorry, just to I know we are saying too much, but globally, I mean, F1 was a raging hit, I believe, in India as well.
Yeah.
Yes.
So in some sense, the global thing has happened.
Yes. I haven't managed to go see it yet.
But apparently, it's a raging hit. It's a good movie, but it's a raging hit. So now, need to see if other movies.
Rajesh, what movie are you watching this weekend? What have you planned? Or which movie have you seen last?
No, I don't remember. I have not seen any fresh new movie in recent past.
I want to come back to you on the Nifty though, because the last time we spoke about this, and it was just when things were turning around. But look at it, the Nifty IT now 1% up. Bank Nifty smart recovery, Nifty Auto smart recovery, and we should run intraday charts of all of this. Even for the Nifty, I mean, what a turnaround on Nifty 50. You're at the day's high. Are you still being as cautious as 20 minutes ago, just seeing the strength in the charts?
No, there is a strength on the chart, and I think with the stop loss of 24,551 can carry the position. I think this pullback can extend further. 24,700 would be the next target for Nifty, and I think in the Bank Nifty also some shorts are covered by the call writers. So I think here also we may see extension of this pullback. 55,800 to 55,900 would be the next level. So both indices, I think, can continue furthermore pullback in the tomorrow session, so one can carry the position.
Thank you for that, Rajesh. And I just want to point out to those of you who may have tuned in this morning to watch India Market Open, Neeraj, we spoke about this. We spoke about this in the morning that maybe, just maybe, you're going to see a recovery. And this is a sharp recovery.
To be fair, you did.
Yeah.
To be fair, you did.
Okay. So we did speak about it. I did speak about it. And for the simple reason that you're hearing from so many analysts that there's money waiting on the side. I mean, now, Indian investors have gotten used to using every opportunity, and this seems to be a taco trade in play. Yeah, maybe that's what it is. Indians munching on tacos this afternoon as we wrap up, Harsh.
Well, absolutely. An expiry day which has not failed to surprise with the way in which we've seen the kind of move we've seen. 24,600. Midway through the day, I don't think too many people would have placed their bets on seeing 24,600 today itself. And let's look at the intraday, 1/3% higher on the Nifty Bank as well. And just look at the way we've turned around, at least over the last couple of hours. It's been fantastic to watch and be part of at least this move that we saw over the last couple of hours. Now, in terms of the heat map, let's look at that as well. and where the breath was looking extremely difficult, just 4 gainers is what we had to 46 losers. We now have turned it around, 31 gainers to just about 19 losers that we are seeing. Of course, there's pressure on a couple of counters, no doubt about that, but Hero Moto is the one which stands out. 4% higher on the back of numbers. Tech Mahindra and the IT stocks have turned it around completely. You'll see Tech Mahindra there, Wipro there, HCL Tech there, TCS also up around 0.5% thereabouts. So the entire IT pack front loading itself on that Nifty 50 index. There's also a JSW Steel and a couple of other counters, a Coal India as well within that similar kind of sector. Eternal is up 1% as well. Let's pull up the contributors on the index. I'm curious to know which ones have done extremely well. And in HDFC Bank, Hero Moto, well, far and few in terms of chunky contributors, but nonetheless, we've seen that turnaround in terms of the contributors as well. Let's look at the heat map on sectors, and what we'll again notice is this was entirely red, now has turned predominantly green. IT, of course, 0.9%, the top gainer from the bottom likely within sectors. Nifty Pharma is the other one. So IT and Pharma, where there is no tariffs, have completely one way pushed the street higher. The PSU banking index, of course, supporting, and you have the auto index also supporting well in the green. The metal index, which is down over 1%, has turned green as well. So some pockets to take care of. The Nifty India Defence, which is down nearly 2%, is now has recovered from those lows. So we're seeing that as well. And the Nifty Realty is nearly in the green. Just a slight negative bias that we're seeing there. Let's look at the advanced decline, and I'll be curious to know how that has reversed, because we were, well, it's reversed very sharply. We're closing very close to 1:1 when this was nearly 1:5 just about an hour and a half back. So real sharp reversal that we've seen on the index, and that's replicating on the advanced decline as well. The Nifty mid cap, let's quickly pull that one up intraday, and you'll see a very similar texture of recovery, 0.25% higher from down nearly 1%. And the Nifty small cap as well was down over 1.2%, and now it in fact turned green briefly and thereafter has just dipped. So fantastic day for the market in terms of the way the move is. Let's look at, there you go, the BSE 500 top gainers, top losers. Plenty of them on the back of numbers, Rain Industries and ITI as well. And FSL up 6%. Wow, that's First Source really moving up. And Varroc also up 5% along with Kaplan Point. Lupin, fantastic set of numbers, 4.7% higher. Prince Pipes down 8. Again, a lot of these are casualty of numbers. GNFC, Prince Pipes, Godfrey Phillips. This has been one which has gone up very sharply. So we're seeing a bit of a cool off there. Hickel is down 5, and EID Parry also down nearly 5%. So that's broadly. SKF again on the back of numbers down 4%. In terms of cues, what all should we look for? Of course, outside of the commentary and the tweets that keep coming our way, we have US initial jobless claims, and we have the BOE interest rate, which is the Bank of England interest rate decision. We'll have dividend with regard to all of these, which will come through, and there will be those dividend adjustments which will happen. There's a bonus issue on Nestle India, 1:1, and you'll have all of these earnings which will come post market today, and LIC will be the big one we'll watch out for. This is the earnings to watch out for tomorrow, and SBI will be one of those. Among others, we'll also have a JK Tyre within the auto space. We'll have Grasim as well coming in tomorrow. Tata Motors will be the other big one to watch out for tomorrow. So plenty of names to look out for in terms of earnings as well. But viewers, completely out of time on this edition of India Market Close. A big announcement coming in though. Russian President Vladimir Putin is expected to visit India in late August, says India's National Security Advisor Ajit Doval during a meeting with the Russian Security Council Secretary Sergei in Moscow. Listen in to a slice of that.
You have very rightly mentioned, Excellency, that we have got a very special relationship a long relationship, and we highly value our strategic partnership. We have had high-level engagements, and these relationships, these high-level engagements have contributed very substantially. We are very excited and delighted to learn about the visit of His Excellency the President of Russia, President Putin, to India. I think that the dates are almost finalized now. The more important thing is this, that is, these summit meetings have always been the watershed points.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome. Good afternoon. You're watching Market Express and I'm your host Malika Mishra. And let's get straight into the show. Markets shrug off Trump's tariff threats, end the day in the positive territory. HDFC Bank, Eternal, Hero MotoCorp contribute the most to the indices. HUL and M&M amongst the top sectoral loser. Nifty manages to end near day's high. Sectoral action remains mixed. Nifty, Media and IT end as the top sectoral gainers. Bitter day for the Nifty Defense and Realty. US President Donald Trump imposed a 50% tariff on Indian goods, apparels, textiles, diamonds and chemicals face the biggest hit. Knitted apparel exports could see a 63.9% tariff. Textiles and diamonds also face over 50% duties. The tariff effective August 27 targets India's Russian oil imports. Indian exporters brace for a 40 to 50% drop in US shipments. Sending a strong message a day after US President Donald Trump escalates the tariff war against India, Prime Minister Narendra Modi emphasizes that India will never compromise the interests of its farmers and fishermen. The sharpest minds weighed in on US President Donald Trump's 25% tariff, which shook the markets today. Nilesh Shah of Kotak AMC said it is fatal to be America's friend. Markets expect a trade deal as US-India interests align. Tariffs effective August 27 target India's Russian oil trade. Shah predicts market volatility but hopes for negotiations. India's economy faces risks from global trade tensions. Trent delivered a strong Q1 FY26 with standalone net profit up 24% YOY, beating estimates of 405 crore. Revenue grew 20%, slightly below the 20% guidance, reflecting a multi-quarter low. EBITDA surged 37% with margins expanding to 17%, driven by inventory provision reversals, low employee costs, technology-driven efficiencies and reduced rental expenses. Fashion segment like-for-like growth slowed to low single digits from mid-single digits in Q4. Store additions were below expectations. Trent's Q1 FY26 results with a 23% YOY net profit rose and 20% revenue growth drew varied brokerage reactions. Citi maintained a buy rating but cut its target price to 7,150, citing moderated like-for-like growth and a 0 to 2% EBITDA estimate reduction. Morgan Stanley is overweight with a 6,359 rupee target, sees the slowdown as a strategic move, emphasizing margin gains. Jefferies holding at 6,000 notes flat unit EBITDA but questions a 7% staff cost drop despite 30% retail expansion. Bajaj Auto reported a 5% YOY increase in Q1 of FY26 standalone net profit, beating estimates of 2,050 crore rupees. Revenue grew 5%, driven by 14% export growth and double-digit gains in premium motorcycles, commercial vehicles and Chetak electric scooters. EBITDA rose 3%, but margins dipped to 20% due to lower dollar realization and rare earth magnet supply disruptions. Total sales edged up 1%, with domestic two-wheeler sales down 9% YOY, reflecting 8 months of flat to negative growth. Jefferies maintained a hold rating on Bajaj Auto with an 8,000 rupee target, implying an 18% downside post a subdued but in line Q1 FY26 result. Net profit rose 5% YOY, driven by 14% export growth. Jefferies is optimistic about India's two-wheeler demand, but cut its FY25-28 industry volume CAGR to 8% from 10% earlier. Concerns include Bajaj's declining domestic motorcycle share and export volume share, while praising Bajaj's Chetak EV franchisee. Hero MotoCorp reported a modest 0.3% YOY increase in Q1 FY26 standalone, aligning with the 1,120 crore estimate despite a 10% YOY sales volume decline to 13.92 lakh units. Revenue fell 5% and EBITDA dropped 5%, with margin stable at 14%. Weak domestic demand, particularly in the entry-level segment, was offset by premium motorcycle growth. The company invested 510 crore rupees in Euler Motors to bolster its EV strategy. Gujarat Narmada Valley Fertilizers and Chemicals reported a 30% YOY drop in Q1 FY26, hit by lower volumes and high costs during planned shutdown. Revenue fell 21%, driven by weaker fertilizer and chemical demand. EBITDA crashed 80% to 31 crore rupees, with margins shrinking to 2% from 8% due to higher fixed costs from repairs and lower chemical realizations. Management remains optimistic, citing cost revisions and capacity expansions to boost future profitability. Prince Pipes and Fittings reported a challenging Q1 FY26 with consolidated net profit crashing 80% YOY, driven by inventory losses from a 12% YOY PVC resin price drop. Revenue fell 4% to 580 crore rupees despite a 4% volume increase. EBITDA dropped 32% with margins shrinking to 7% from 10% due to lower realizations and higher interest costs. Management expects recovery in second half of FY26, driven by festive demand and stable PVC prices. Sula Vineyards reported a tough Q1 FY26 with consolidated net profit plummeting 87% annually, driven by a 10% revenue drop. EBITDA fell 46% with margins shrinking to 17% from 28% earlier due to lower gross profits and weak urban demand in key markets like Mumbai and Delhi. Wine tourism revenue remained flat while premium wine sales grew 5%. Management expects recovery in the second half of FY26 with festive demand and new launches. Life Insurance Corporation of India (LIC) is set to report Q1 FY26 results today with expectations of a 4% annual premium equivalent growth to 10,350 crore, reflecting modest top-line expansion. Value of new business is projected to rise by 9% YOY, driven by a 70 basis points margin improvement to 15%. Focus remains on non-power segment traction, persistency, trends, and expense control. While LIC targets a 20% VNB margin by FY26, regulatory pressures and weak APE growth pose key challenges. Lupin posts strong Q1 FY26 results, beating profit and EBITDA estimates. Revenue rises 11.9% YOY, driven by robust growth in US and India markets. US sales jumped 24.3%, now 39% of global sales. India up 7.8%. Global API sales slumped 32.9%, dragging segment contribution to 4%. Rain Industries returns to profit after 7 loss-making quarters. Q1 FY26 revenue rises 7.5%, driven by strong carbon and cement segments. EBITDA soars 88.8% with margins nearly doubling to 15%. Stock jumps 6% on earnings and EV battery tie-up buzz. Hardco posts strong Q1 with 13% profit growth. Income jumps 34% YOY, driven by higher loan book. OPEX surges 218%, but asset quality improves. Return on asset dips, capital adequacy remains robust. Prison Johnson's shares surged nearly 5% after strong Q1 results. Net loss dropped 70% to 5.6 crore rupees from 18.3 crore rupees last year. Revenue rose 7% to 1,922 crore rupees. EBITDA jumped 28% to 169 crore, boosting margins. The company improved cost control and operations. Investors cheer the turnaround despite a tough market. In a letter to shareholders, Reliance Industries chairman Mukesh Ambani said the company is transforming into a deep tech enterprise. The company achieved solid growth despite global challenges. Revenue hit 10,000. Revenue was up 7.1% year-on-year, and Jio leads as the world's largest data network with over 488 million users. Retail expanded to 19,340 stores, boosting India's retail sector. Ambani credits shareholders' trust for Reliance's bold vision. Paytm reduced its workforce by 4,600 in FY25 to cut costs. The company saved 650 crore rupees, exceeding its 400 to 500 crore rupee target. Employee count dropped from 44,000 to 39,400. Permanent staff fell 48% to 14,656. Paytm focused on a leaner structure using AI technology. Revenue declined due to RBI restrictions on Paytm Payments Bank. Adani Airports plans to invest 20,000 crore in city-side developments. Nearly 70% will focus on Mumbai and Navi Mumbai airports. The goal is to raise non-aeronautical revenue to 70% by 2030. Navi Mumbai's 240-acre project includes hotels, offices, and retail. The plan mimics global airport city models like Schiphol. Adani aims to build a stronger business model. LTI Mindtree won a 792 crore rupee contract from the Income Tax Department. The PAN 2.0 project aims to modernize PAN and TAN systems. It will create a single-digit platform for all services. The platform will use AI for faster, secure processes. Rollout is planned over the next 18 months, and LTI Mindtree's stock today fell about 0.8% despite this deal. Adani Power has received the go-ahead to build a 2,400 megawatt ultra supercritical thermal power plant in Bihar's Bhagalpur district. The $3 billion project was awarded through a competitive bidding process by the Bihar State Power Generation Company. Adani Power will supply 2,274 megawatt to state discoms at a tariff of about 6.075 rupees per unit under a long-term agreement. The plan will follow a DBFOO model, where the company will design, build, finance, own and operate the facility. The first unit is expected to be operational within 4 years, with full capacity coming online by the 5th year. Tata Consultancy Services has announced salary hikes for roughly 80% of its workforce, covering mid to junior level employees. These wage increases take effect on September 1st, 2025 and were communicated via internal email by CHRO Milind Lakkad and CHRO designates K. Sudeep. The announcement comes alongside plans to lay off over 12,000 mid and senior level employees this year. Infosys has inaugurated a new Center for Advanced AI Cybersecurity and Space Technology at its Hubli Development Center in Karnataka. The facility is part of Infosys' Global Living Labs network with over a dozen centers worldwide. It will develop AI-driven solutions across key domains like cloud, engineering, services, SAP, and space tech, and as well as a lot more. With this launch, Infosys has raised its local employee count in Hubli to more than 1,000, marking a milestone for both regional employment and industry academia collaboration. Zerodha's Rain Matter bought 5% stake in Capital Mind Financial Services. This is Capital Mind's first institutional funding. The deal follows the launch of its Flexi Cap fund raising 45 crore rupees. Deepak Shenoy, Capital Mind CEO, calls it a validation of their journey. Zerodha's Nitin Kamath backs Shenoy's data-driven approach. The investment aligns with SEBI's 10% stake cap. Air India has introduced a dedicated emotional and mental well-being app for its pilots, cabin crew and their families. The initiative is aimed at supporting the mental health of its flying staff through a structured and confidential platform. The app includes features such as one-on-one therapy sessions with professionals, AI-powered chatbot for real-time assistance, and access to over 600 self-care tools. This development follows a recent incident involving a crash near Ahmedabad in June, which led to a noticeable spike in sick leave among the crew. Popeyes, the Louisiana style fried chicken chain, has made its debut in Mumbai with 4 new outlets operated by Jubilant Foodworks under a master franchisee agreement. The brand first entered India in January 2022 and has since expanded across Bengaluru, Chennai, Hyderabad and NCR. Sameer Khetarpal, CEO of Jubilant Foodworks, expressed his excitement, saying, "We're thrilled to bring Popeyes to Mumbai and we are confident that Mumbaikars will embrace our signature offerings with the same enthusiasm." Instagram has introduced a fresh set of features aimed at making the platform more interactive and personalized. Users can now repost public reels and feed posts directly to their profiles. The platform has also added a new Friends tab within Reels. Now, this section highlights what your friends are engaging with, whether they have liked, commented on, or reposted a video. And finally, Instagram has launched an opt-in map feature. It allows users to share their most recent location with selected friends, helping people stay connected in real time. Tragedy struck in Udhampur, Jammu and Kashmir, when a CRPF vehicle transporting personnel from the 187th Battalion veered off the Kandwa Basantgarh road and plunged into a deep gorge. Over 2 Jawans lost their lives and several others were injured. Rescue teams with vital help from local residents reached the site swiftly and evacuated the wounded to nearby hospitals. Union Minister Jitendra Singh and J&K Lieutenant Governor Manoj Sinha both conveyed their grief and assured that full medical support and investigations are underway. The Supreme Court decisively rejected Justice Yashwant Verma's petition challenging the in-house committee that had recommended his impeachment following the discovery of burnt cash at his official residence. The court described his conduct as not confidence-inspiring and upheld the committee's constitutional validity, clearing the way for Parliament to initiate the impeachment process. The Election Commission issued the official notification for the vice presidential election scheduled for September 9th. The nomination process has now begun. Candidates must file their nominations by August 21st, with document scrutiny on August 22nd, and the final deadline to withdraw standing at August 25th. Chief Minister Devendra Fadnavis has reconsidered the decision to shut down Mumbai's pigeon feeding zones known as Kabutar Khanas, calling the abrupt ban inappropriate. He's directed the BMC to allow feeding under controlled conditions to ensure pigeons aren't starved while the city addresses health risks. The Bombay High Court's directive to curb public pigeon feeding due to hygiene concerns still stands, and the BMC must now find a balanced, time-bound solution to this. President Donald Trump has announced that his new reciprocal tariffs are now in effect, calling them a response to countries that have long taken advantage of the United States. He declared, quoting, "The only thing that can stop America's greatness would be a radical left court that wants to see our country fail." This pointed message came amid mounting legal challenges to the tariffs. Donald Trump said he could meet with Vladimir Putin very soon following what the US president described as highly productive talks in Moscow between his special envoy and the Russian leader. The potential summit was discussed in a call between Trump and Ukrainian leader Volodymyr Zelensky that, according to a senior source in Kyiv, included NATO Secretary General Mark Rutte and the leaders of Britain, Germany and Finland. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Market closes in green after a last hour rebound. Nifty bounces nearly 300 points from day's low to end above 24,600. All sectoral indices barring oil and gas close in the green. The Prime Minister sends a strong message to Trump's tariff hike, says India will never compromise on farmers and fishermen's interest, and he's ready to pay a huge price for this personally. Trump's 25% additional tariff on India rattles exporters. They say the impact is much more than the previous 25% tariff plus the penalty, as US importers are reluctant to finalize orders. Trump's sweeping new tariffs on more than 90 countries around the world come into effect just before the deadline for deals to be agreed to cut or to avoid the import taxes. Trump posted on his Truth Social platform that billions of dollars were now flowing into the US due to tariffs. As Trump intensifies the tariff offensive, Russian President Vladimir Putin will visit India in late August. Announcement comes after NSA Ajit Doval's meeting with Russian Security Council Secretary Sergei Shoigu in Moscow. TCS will roll out wage hikes from the 1st of September to 80% of its employee base. IT majors looking to provide 2 to 4% raise to onshore workers, while 6 to 8% increase in offshore salaries. Rescue efforts continue in Uttarakhand's Harshil and Tharali after flash floods and landslides this week. 59 people, 50 civilians and 9 soldiers are still missing, and 5 deaths have already been confirmed so far. Hello and welcome viewers, you're watching Profit 360 only on NDTV Profit, and this is your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay tuned. Let's begin with checking how the markets fared today. The market posted a stellar recovery in the last hour of trade as Sensex recovered over 800 points from the day's low, while the Nifty bounced nearly 300 points from the day's low to close above 24,500. Earlier in the day, Sensex and Nifty fell after US President Donald Trump announced an additional 25% tariff on Indian goods, effectively doubling the total tariff to 50%. Let's go across to my colleague Harsh, who's going to help us understand how the markets traded today.
Well, the market started the day on a cautious note, right? And understandably so, given everything that was happening with regard to tariffs and all the announcements that came through. And thereafter, while the reaction initially was quite mature, saw a bit of a slip, and probably attribute that to a certain extent also to expiry day. But thereafter, the reversal was fantastic. In fact, we closed the day in the green. We rebounded nearly 300 points from the day's low, and the breadth, which was looking extremely difficult at one point. In fact, the Nifty 50 breadth was just 4 stocks sitting in the green versus 46 sitting in the red. Completely reversed. At close, we had nearly 30 stocks in the green and just about 20 in the red. So that was the kind of recovery we saw in the last hour and a half of trade. So fantastic day, right? Now let me talk about the leaders of the day. We saw IT and pharma really lead, especially where the benchmark is concerned. And some of the IT stocks from the lows have done extremely well. You saw Hero on an otherwise difficult day of trade stay perked up in the green pretty much all through the day. So that was the one that really stood out. And then you had the pharma basket, which rebounded decently well, but the IT basket was the one which you really need to look out for. It rebounded nearly 2% from the day's low. So fantastic day where IT is concerned. Now, in terms of the breadth overall on the index, that was broadly the trend across the board. So that's what you'll see even on the advanced decline, which closed nearly 1:1. At one point of time was 5:1 in favor of the declines. Closed nearly 1:1, so fantastic day there as well. You saw the Nifty mid cap as well as the small cap indices also do fairly well for themselves. From the day's low, we saw good bounces back, 1.2%, nearly 1.2% from the day's low for the Nifty small cap. The Nifty mid cap also rebounded nearly 1% plus from the day's low. So across the board, the day was a day of recovery. and whether it's short covering or otherwise or expiry day, that we'll of course have to wait and watch whether this is sustainable or not. But otherwise, it's a fantastic day nonetheless.
Right, and as the markets take a dramatic U-turn, Prime Minister Narendra Modi has taken a firm stand on the US pressure of tariffs, stating that India will not compromise on the interest of its farmers, livestock holders and fishermen, no matter what. His response comes after US President Donald Trump imposed an additional 25% tariff on India for continuing to import oil from Russia.
Indian officials have said that there are other countries that are buying Russian oil.
It's okay.
Like China, for instance,
It's
buys
okay.
more.
Yeah.
Why are you singling India out for these additional sanctions?
It's only been 8 hours, so let's see what happens over the next.
More secondary sanctions
you're going to see a lot more.
So this is a taste of
You're
what's
going to
to
see a
come.
lot more. You're going to see so much secondary sanctions.
साथियों, हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है। किसानों की आय बढ़ाना, खेती पर खर्च कम करना, आय के नए स्रोत बनाना, इन लक्ष्यों पर हम लगातार काम कर रहे हैं।
In fact, we were joined by Sameer Arora, Nilesh Shah, Ajay Sahai and Jayant Dasgupta, who weighed in to talk about the strategic and economic implications of the recent trade disputes between the US and India. Let's listen in.
There is this little bit of moving away from US, and if that happens and continues, then because US is 70 and the rest of the world is 30 or 68 or whatever, and you reduce 3-4% from US, we mean all collectively, and that 3-4% goes to the 30% base, everybody gets more money. And in that, India has a strong case. So India money, I think the overhang of selling has already gone away 1 or 2 months ago, according to me.
They believe better senses will prevail and US will recognize that European Union, US itself have been trading with Russia. It's not just the Russian oil which funds Ukraine war effort. It is also the Russian gas which Europe is buying. It is also the Russian chemicals, fertilizers, which America is buying. So market is hoping that better senses will prevail. The strategic interest of India and US will overcome current challenges.
You cannot move to a new market overnight. It takes time. And therefore, in medium to long term, for de-risking also, they are looking into the other market. The FTA has offered them an opportunity. I think UK will be a good big market once the UK Parliament approves the FTA. The early harvest with UK, with the EU will also help, and so with other GCC's countries. But these are in medium to long term.
You know, looking at new markets and developing contacts there and starting to export to those markets is not going to be easy. As far as our established markets are concerned, the European Union, which is one of our largest markets, China, which imports very little from us and could import a lot more. So these are some of the areas where we can focus on behalf of the government as well as the business.
And amid all this, the most vulnerable segment seeing the impact of heightened India-US trade tensions are Indian exporters. NDTV Profit brings to you a ground report speaking to multiple exporters from engineering, steel and textile sectors, encompassing the challenges that businesses are facing. Take a look.
As trade talks between US and India seem to have hit a roadblock with no sort of deal in sight, and the threats and the renewed threats rather of the Trump administration to impose more and more tariffs have left one segment of the Indian trade ecosystem very vulnerable, and that is Indian exports. Indian exporters are facing the brunt of these tariffs and these uncertain conditions that come along with it. NDTV Profit speaks to exporters on the ground to get you an insight as to what these exporters are facing and what the impact of such conditions is on their businesses. We first spoke to Azad Engineering Works, an MSME exporter of phalanges, which is a major engineering export. This is located on the outskirts of Ghaziabad, and here we spoke to the MD to understand the impact of tariffs.
Our impact is much more than the 25% plus penalty thing. Steel and aluminium has already been covered by the US government by a 50% tariff. It is basically subsidizing the industry and preventing it from collapsing in the immediate term. I expect the political class and the executive class to be more rational and more open their bags of money.
Another sector that's feeling the heat is the textile sector, and we're here at BK Fashions to understand more about the uncertainties and the impact of tariffs.
So the future orders is being on hold from the customers because they are still don't know what's going to be the next future for Indian tariff plan. So currently we are in a very bad situation. We expect some percentage to be, fulfilled by the government and take this difficult situation in consideration, to negotiate, because buyers are negotiating on the prices. They want us to give the discounts. Buyer are, they are getting the better tariffs from the neighboring countries, so they have better margins there.
Right. Yet another garment exporter that has been impacted is BK Garments, based here in Noida's industrial hub. We also spoke to them about the uncertainties on the tariff front, as well as the orders that are coming in from external geographies.
They are also uncertain about what will happen next. So they can't also finalize how much discount they have to demand from us. If something happens, our government will help. That is our hope. Our government policies will certainly be helpful to the exporters to maintain the export momentum.
Is there any outreach from the government so far?
So far, nothing happened yet. We are waiting for what the government policies are finalizing.
You've heard from the exporters directly. The uncertainty is unbearable and business is getting impacted. What the request from the government is for immediate action, is for policy and monetary support.
Right, and as Trump's tariffs continue to make exporters apprehensive, there's still a segment in the Indian stock market, some stocks, some companies that are likely to be less effective by Trump's tariffs. They are tariff proof, that's what we call it. But to know which ones exactly those are, let's go across to my colleague Samit.
Well, yes, Trump has announced a 25% tariff on Indian exports that we are doing currently, and additional 25% will get implemented after 21 days. But for the current 25% which gets implemented today, as per analysts, this tariff impact will have earnings impact of nearly 5% on the MSCI India earnings. But if additional 25% comes in, then this could be around 10%. And when it comes to the GDP growth number, that could get impacted by around 30 to 50 basis points for the 25% which is getting implemented from today. And if additional 25% comes in, then as per analysts, this impact could be anywhere between 40 to 80 basis points on the GDP growth number. Now, multiple sectors get impacted. There is auto, there is chemical, there is textile, there is oil and gas which could get impacted because of the ban of Russian crude. Then there is new energy and seafood which also get impacted because of this ban. But there are multiple other sectors which actually get least impacted because of this Trump tariff coming in. And these sectors are banking, NBFC, insurance, cement, consumption, hospital, real estate, telecom, power, and these are all domestic focused or domestic centric companies, so they get less impacted because of this tariffs that has been implemented by the United States of America. Now if we look at the stocks, now these are the stocks, obviously this is not an exhaustive list, but these are the stocks which get nearly 90 to 95% of their revenue from the domestic market, or at least 90 to 95% of their SOTP, that is the target price value, comes in from the domestic market. When it comes to banks, it's HDFC Bank, ICICI Bank, Axis Bank, Kotak Mahindra Bank. Again, this is not an exhaustive list, but these are the top companies which get least impacted because of the Trump tariffs. When it comes to NBFCs, there are NBFCs like Bajaj Finance, Shriram Finance, Chola Finance which get least impacted. In insurance, there is LIC, HDFC Life, SBI Life, ICICI Pru, ICICI Lombard in the general insurance side. When it comes to cement companies, it's names like Ambuja, Ultratech, Shree Cement, Dalmia Bharat. In consumption sector, there is stocks like Zomato, Trent, Titan, United Spirits, Page Industries. Again, there are more consumption-focused companies that get less impacted because of this Trump tariffs. In hospital, it's zero impact. Apollo Hospital, Fortis, Max Healthcare all derive nearly 100% of their revenues from the domestic market. When it comes to real estate, all of these companies generate 100% of their revenues from the domestic market. That's DLF, Lodha, Phoenix Mill, Godrej Properties. In telecom, it's Bharti Airtel, which derives nearly 90% or more than that of its SOTP value from the India market. Bharti Hexacom 100% India market. Industars again 100% of its revenue comes from the India market. Apart from that, in the power sector, there is Adani Power, Adani Transmission, Power Grid, NTPC. In auto, most of the auto sectors do get impacted, mostly auto ancillaries, but then there are few auto companies which generate nearly 90% or more than that of its revenue from the domestic market, and those are Ashok Leyland, Hero Moto, Aisha Motors and Escorts as well. And lastly, when it comes to the travel and tourism sector, it's Indian Hotels, Lemon Tree, IRCTC, which generate nearly most of the revenue from the Indian market, and they also stand to get least impacted because of this Trump tariff. Obviously, if there is a big GDP slowdown, then each and every Indian companies might get impacted, but at least because of the Trump tariffs or the tariffs that are getting implemented on exports, these companies will get least impacted because of that.
Right, thanks for that. And India's IPO market remains lively with several offerings lined up this month. One notable IPO opening today is JSW Cement, led by Sajjan Jindal, aiming to raise about 3,600 crore rupees through a mix of fresh issuance and offer for sale. My colleague Sajid spoke with Parth Jindal, MD JSW Cement, about the company's IPO and the future prospects. Let's hear in his perspective.
Parth, your IPO is coming on 11th. Can you take us through the entire proceeds which you're going to raise? It's the 3,600 crore IPO, and I think the second one in the last couple of years after JSW Infra, which came out with an IPO. How are you going to use the proceeds?
Sure. So the IPO opens on the 7th and closes on the 11th. And like you rightly said, we're raising 3,600 crores. 2,000 crores is an offer for sale where the private equity investors in JSW Cement, Apollo, Synergy Capital as well as State Bank of India would be partially offloading their stake. And the 1,600 crores is getting infused into the business as primary. We've disclosed that about 520 crores of that is going for debt repayment. About 800 crores of that is going towards building our integrated unit in North India at Nagaur in Rajasthan. And the balance is being used for general corporate purposes. So the purpose of this IPO is really to enter the North Indian market as well as to become a pan-India cement player. And this is the first step in our journey from 20 million tons where we are today to 42 million tons, which we would like to get to over the next 3 to 5 years.
Do you see the this IPO being also an exit for some of the investors who came in 2021 because your valuations have more than doubled since the time they came in? I think, if I'm not wrong, 1600 crores for 19%, and now we are looking at 19,500 crores for the upper band which is there. So is that also one of the reasons?
Yeah, so the upper band is at 20,040 crores, and you're right. They came in at lower valuation, and they would be partially exiting, but they will still retain about 7% of the company even after the IPO. So yes, every fund has its strategy. So I'm sure they are looking at they are partially exiting, and partially they would remain in the business. And they came in at a very timely time for JSW Cement. That 1600 crores that they invested in 2021 has really allowed us to expand and become the 20.6 million ton company that we are today. So we'll always remain grateful for their participation, because without the capital that they provided in 2021, we would not be where we are today.
And TCS is set to roll out wage hikes to nearly 80% of its employee base from the 1st of September. This comes weeks after the IT major announced that it will be cutting about 12,000 jobs in the current financial year. We have Jasmeet with more on this. Jasmeet, who's eligible and what's the expected hike?
Well, right, yes, thank you for that. Now, TCS, as per our sources, should soon announce the wage hikes. Now, this news comes after the latest news where it plans to cut 12,000 employees going forward in FY26. Now, when you look at the Q1 FY26, the management had added 5,000 odd employees, and as per the commentary, the added employees could not pan out as planned and was creating a pressure on the margins. Now, giving the latest update, as per the sources, the wage hike to set in from September 1st, and they could impact the margin in the Q2 as well as in the Q3. Now, talking more about the wage hikes, the company is looking to provide a 2 to 4% hike for the employees available on onshore basis, while to provide 6 to 8% hike for the employees available on the offshore basis. Now, nearly 80% of the employees of TCS to get the wage hike, while that would be roughly 4.5 lakh employees. While this wage hike is particularly categorically distributed for employees between C1, C2 and C3 category. This is a category where the employees come between a salary range of 15 to 35 lakhs. So it's something to watch out for going forward. When would company come forward and make an announcement of this?
Thanks, Jasmeet. Now, a massive tax fraud has been uncovered in India involving salaried employees from various sectors, including the armed forces, the police, PSU, schools, and as well as MNCs. The Income Tax Department discovered that these individuals had claimed false deductions and exemptions in their income tax returns, resulting in wrongful refunds. To give us more details into the case, let's go across to my colleague Shrimi Chaudhary.
Yeah, quite a shocking revelation from CBDT coming in, uncovering large-scale tax fraud involving salaried individuals from multiple sectors, including Armed Force, Police Department, PSU, MNCs. And in fact, this emerged after the July 14th verification drive, where the intermediaries who were suspected of facilitating this fraudulent claims in income tax filing were caught. And in fact, they admitted under oath to have filed these kind of returns, faking exemption and allowances in exchange for commission. And this is what the letter assessed by NDTV Profit, where CBDT has now saying that the verification exercise, showing a significant number of salary taxpayer who avail bogus deduction and exemption, often without, supporting documentation. And this is quite prevalent in these sectors. Such claims included, fraudulent entries under various sections of Income Tax Act, such as investment, housing loan, medical expenses, and other exempted allowances. Now, CBDT has issued urgent instruction to take up the matter with the respective organization, because we are talking here about, armed forces, police department, most are the PSU's department, and they are taking it up and trying to sanitize the respective employees, the respective offices to, make them understand that this is not how the exemption and allowances in the tax filing could be claimed. And this is also interesting because this is coming ahead of the tax filing deadline. Remember, for salaried individual, the deadline is September 15th, and for businesses subject to audit is October 30th. So this is very important instruction coming, and the verification process is of course the part and of the broader exercise where department has been witnessing such kind of cases where the bogus claims of exemptions and deduction have been widely used and widely misused actually.
And big national story this evening. The death toll in Uttarkashi cloudburst has touched 5 and about 59 people are missing. 190 people have been rescued so far. Uttarakhand's Chief Minister Pushkar Singh Dhami has taken stock of the situation, visiting the flood-hit areas of the district. Efforts are underway to rebuild the structure of the bridge that collapsed in the flood. A temporary road near the village has also been reopened to aid rescue and relief operations, but the weather forecast adds to the concerns. The IMD has issued a warning for very heavy rainfall in both Himachal Pradesh and Uttarakhand from August 10th to 13th. And that's all the time we had on this edition of Profit 360 viewers, but do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the action.
Hello and welcome. You're watching KYC, Know Your Company. I'm Harsh Saita, and today we're going to be talking about Blue Star. Now, there's been, while the numbers weren't entirely impressive at the face of it, they were a bit of a beat versus the consensus, and Q1 was expected to be a softer quarter in any case, given the fact that we've seen the monsoons coming in early, and that has impacted demand for air conditioners. And therefore Blue Star in focus. I'd want to know as to whether they can actually try and recover the lost demand of Q1. Is that a case of demand deferred or demand lost? That's what I'd want to understand. The second piece is with regard to channel inventory. Now, channel inventory and the view on the full FY26 in terms of FY, because if Q1 gets impacted, does that impact the full FY26 numbers, is the second piece I'd want to understand. The third piece is with regard to the key trigger, which is festive season. Going forward, that's possibly the only trigger that we are seeing. Can festive also possibly be a disappointment? Will it likely exceed expectations? Will there be a bit of a demand cover up in the festive season, given that we've lost some demand, is the key piece I'd want to understand. The fourth piece is with regard to market share. They've guided for a 15% market share by FY26. 14% was the number FY25. Can they achieve that? And at the moment, at least in the segment which has been impacted the most, which is room air conditioners, we are seeing them gaining market share despite the fact that the numbers were softer. Now, let me talk about prices, because that will also determine where margins go. So, is there an ability, is there an appetite to raise prices further that we can see? The sixth piece is with regard to backward integration and cost control, because both of those will also impact margins, and therefore the next obvious question will be the margin inch up. They've guided for an inch up in margins. Margins have come off, unfortunately, because the top line has been pressured in Q1. But can it inch up is really the question, and how quickly can it inch up? And I will also have my eye on capex. They are likely to do nearly 1,000 crore of capex over the next 3 years, 300 crore to 400 crore kind of clip. A lot of that will be funded from internal accrual, so no concern there. But is there a change with regard to that stance as well? So you'd want to keep that in mind. But let me quickly also, try and sum up that Blue Star is in 3 major verticals, right? One is, of course, their room air conditioning business. The second business that they majorly do is commercial air conditioning. So room air conditioning is unitary products, commercial air conditioning is the other piece, and then there is electromechanical projects. So all of those is what they focus on as a company. But let me bring in Mahima Vashajani, who covers the company as well as the sector very, very closely. And Mahima, about the company. Take it away.
Right, Harsh, thank you for that. It's a very old company, to say the least. It commenced its operation in 1943, even before India got independent. Yeah, independent.
Yes.
So that's the year of commencement of operations, and air conditioning, refrigeration and MEP solution provider is basically what Blue Star does. It maintains 2 million tons of air condition and refrigeration equipments. So that's the extent to which the overall equipment stands. Plus Blue Star manufactures air coolers as well as water purifiers, cold storage as well as specialty products. The company also offers turnkey solutions in MEP projects. That's your mechanical, electrical and plumbing and firefighting projects. It also has the largest after sales services as well in terms of where AC stands for the country. So that's also a segment of revenue for them. In terms of where the business segment stands, as you rightly mentioned, electromechanical is the first one, which is largely into central AC, ventilation projects, firefighting projects, as well as your water projects, plumbing, electrical and railway electrification. In terms of where commercial AC stands, I mean everybody knows what Blue Star does exactly in terms of where AC stand. Then we have unitary products, that's your AC coolers, air coolers, water purifiers, as well as commercial refrigeration is also a part of their business. And lastly, professional electronics and industrial systems. That majorly includes your specialized technology solutions, turnkey projects, as well as value enhancing services that the company provides.
Sorry, if we can just pause here for a minute, right? So it's across the value chain, right?
Correct.
One is it does B2B core, which is more for capex intensive projects. Then you have B2B for commercial ACs.
Correct.
This office itself could be one of those potential clients. The third one is unitary products, which is sells to you and me.
Correct.
Which is residential ACs, plus it does water purifiers as well for home, and it does for offices as well, where you have those water stands, which are largely done by something like a Blue Star. And then there is more government or pseudo-government type projects which they take up. So they're across the value chain. Just wanted to kind of put it out there.
Correct.
Anyway,
and then also into after sales as well. Once they sold the product to you, after sales is also a big chunk of their revenue.
Yes.
In terms of their overall network also, the key end markets, as Harsh mentioned, it's residential, commercial, industrial, as well as infrastructure based. In terms of manufacturing facilities, it currently has around 7 manufacturing facilities and 4,000 plus channel partners. It's present in 18 plus countries, and there are plans to strengthen their presence in the international markets as well. In terms of the business model, just to give a perspective, what we were mentioning earlier, they're present throughout the supply chain, because from R&D to manufacturing to trading to being an EPC contractor as well as after sales, everything is done by Blue Star. In terms of the revenue breakup quickly, around 95% is from the domestic revenue and around 4.5 to 5% is from exports right now. And segmental revenue, so your electromechanical projects and commercial conditioning system is roughly 45%, unitary products is 51%, and the remaining professional electronics is around that 2.3% mark right now. So that's whole and soul of where Blue Star stands.
Well, yes, and we'll speak with the management. Veer S. Advani, who's the chairman and managing director, he'll be with us in a few minutes. Just one piece that I'd want to add to this. They use raw material, and that the prices of that pressures margins sometimes. So you need to be mindful of that. Copper, aluminium, inverter drives, electronics, all of those components used within the products that they sell is something that you want to keep your eye out on, because pricing of those could pressure the margin numbers as well. And there is commodity price risk there, especially where copper and aluminium are concerned. They're trying to hedge that, but not entirely successful there. Let's look at the 8 key metrics which we will track with regard to a Blue Star. We'll start with income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of that And let me allow Mahima to start with the income statement.
Right, so income statement is a thumbs up for sure. I mean, let's take a look at the 4 metrics that we always consider. Revenue has seen a CAGR of 25% in the past 3 odd years, from a 6,000 crore in FY22 to almost touching 12,000 odd crores in FY25. In terms of the overall EBITDA, the CAGR growth has been 36%, from a 347 odd crores to almost doubling, or more than doubling, to that 880 odd crores. Even in terms of margins, overall margin trajectory, if we take a look at the past 3 or 4 odd years, that's been in the range of 6 to 7%. So that, as Harsh was mentioning earlier, key raw materials that they use is putting pressure on margins. That's why margins have not been able to expand in the past few odd years. Net profit again has grown fourfold, from 170 odd crores to over 600 odd crores, and a CAGR growth of 52%. So considering all of this, we've given it a thumbs up. In terms of where quarterly performance stands, year on year revenue has seen a growth of around 4 odd percent, EBITDA saw a degrowth of around 16 odd percent, but this quarter was largely also impacted by early monsoons, unseasonal monsoons, and plus 10 or 15 days odd in the quarter were also lost because of geopolitical reasons, the India-Pak war to be specific. Even in terms of margins, they've taken a hit, and net profit has seen a degrowth of around 28 odd percent. So that's, with regards to where the income statements stand, but because from a longer term perspective and a longer term picture looks promising, we've given it a thumbs up.
Well, yes, it does. Q1 FY26 was a tough quarter, and the base quarter was also a stronger one. So those numbers not really impressive due to that. Let me talk about the balance sheet now, and sorry, just the income statement for one little piece. 6,000 crore was the top line in FY22. Now I'm just thinking back. 1943 based company in FY22 has done 6,000 crore of PAT. So it's taken them nearly 80 years to get there, and then thereafter the pickup, it's doubled in the last 3 years.
Correct.
So just trying to explain that the opportunity size which they're tapping into, fairly large, right? So sorry, just wanted to kind of put that out there. Balance sheet, equity 40 odd crore, other equity which is profits and reserves around 3,000 odd crore, book value is roughly 3,065 crore, market cap is 35,000 crore, trades at 12 times book. You're looking at borrowing number which is extremely small, frankly, and it's all short term, 200 odd crore, really not as relevant, and you're looking at a bank balance which stands at around 400 crore. This will be important because they're doing a lot of capex. They're doing 300 odd crore of capex for the next 3 years, likely to be around 1,000 crore of capex cumulatively. So a lot of the EBITDA which comes out of the company, which is roughly around 800 odd crore annually, will go into this, into funding some of the incremental capex that they do. So something to keep in mind. Cash flow, Mahima.
Again, strong set of numbers here, because cash flow from operations has improved quite significantly, from a 243 crore in FY23 to a 688 crore. So nearly, 3 times. In terms of the metrics of cash flow to EBITDA, that has also improved quite significantly, 78% as of March 2025. And in terms of net cash flow position, that has also strengthened year on year and has been at around 63 odd crores in FY25. So a thumbs up here as well.
Yeah, and typically the cash flow is difficult for something like a Blue Star, because they add up on inventory at the end of every financial year, because you are at a stage in the season where you will require a large inventory holding, and therefore you will see that build up in inventory every single year, and that's exactly what they are witnessing. We're just cautious because we're starting to see an inch up. I'd want to understand whether this is just normalized operating cash flow to EBITDA. Is that what one should expect, or can there be an improvement on this metric? Because clearly 45 to around 75%, not the kind of number we would expect from the size that Blue Star is. So that's with regard to cash flow. Let me now talk about the return ratios, and very, very impressive where the return ratios are concerned. Just look at the way in which return on capital employed has gone. FY21, I'd discount that to some extent because of COVID and probably the bounce up from COVID. But you look at FY22, 23, 24, 25, very steady trend with regard to ROC, no concerns there. But shareholding, Mahima.
Right. So, fairly well-held company. Promoters have slightly decreased their stake from that 38.8% mark in 2022 to around 36.5%. But FIs have increased their holding from a 12% to 16%. DIS slightly inched up from 22 to 23 odd percent, and public shareholding has slightly come down from the 27% mark to 24% mark. So overall, taking a conservative approach here, we've given it a neutral rating so far.
Yes.
And slight promoter downtick as well.
Yes. No, the promoter downtick was because of a fresh issue of capital. If you remember, they'd done an equity raise to do the to ensure
correct.
that they have enough funds available for the capex that they are planning to do. So I may not completely blame promoter ownership, but just the fact that it's sub 40%. We generally look at metrics from a more than 50% standpoint, that the promoter holds the company in a far larger fashion, and therefore we've given this a neutral. No particular concern there. You look at street cred. 1 month the stock is down 2%, 6 months down 12%, year to date down 21%, 1 year performance is up 10%, largely not showing too much of exuberance. But you look at the 5-year number, it's up 7 times in the last 5 years, strong outperformance, and therefore thumbs up from a long-term perspective, thumbs maybe down from a short-term perspective, and therefore we've given this a neutral. Valuations, and I'll take valuations and I'll allow Mahima to take up analyst recommendations. You look at the price to earnings currently, FY26 trades at 50 times. Its 5-year average is 64 times. Its competitor Voltus trades at 43 times, and the 5-year average for Voltus is 110 times. So maybe not the best looking picture from a valuation standpoint. It trades at a discount of around 20%, but look at Voltus, it's trading at a far larger discount and at a discount to Blue Star as well. So you want to keep that in mind. Very marginal discount, but nonetheless, that's the valuation picture. Analyst recommendations, Mahima.
Right, so there are 11 buy calls, 10 hold calls, and just 2 sell calls, and not much in terms of where the return potential stands as to where Bloomberg estimates are concerned. So that's with regards to where street coverage stands.
Perfect. Let's quickly stack up all of our ratings and give the final rating on KYC for a Blue Star. That's how it stacks up, and Blue Star gets a healthy 5.5 on it with no thumbs down. That's the one which really stands out for me. Now, let's go across to management. We have Veer S. Advani, Chairman and Managing Director at Blue Star, joining us. Great having you, Mr. Advani. This is Harsh here. Let me start off with Q1. Is Q1 a case of deferred demand? Is that what we're going to see? Are we going to see an impact of that on full year FY26? I wouldn't envy you if I were answering these questions, sir, but do give us that perspective.
Yeah, good. Thank you, Harsh. Thank you, Mahima. First of all, that KYC was excellent. I learned a lot about our company through that. You've done a lot.
Thank you so much. That means a lot.
And largely on the ball, so I appreciate that.
Thank you.
Q1 you're asking about, I think you'll agree with me. This is just postponed purchase. It's very clear that an air conditioner is on top of everyone's purchase list. However, it's a big purchase decision, 35,000 rupees plus. And in many cases, it becomes a multi-season decision because not everyone has that kind of purchasing power to just go out and buy it the first time they want it. This is deferred. This is not lost. And we're quite hopeful that there will be strong demand coming back in the second half of the year. And as we go forward, I think long-term outlook for air conditioners is very strong. We expect a CAGR of 20% for the industry, and that stays as it is.
Mr. Advani, in terms of your market share guidance, does that stay intact? Or from what I understand right now that your close competitor has been losing market share slightly. Do you think that that 15% guidance can still further go up?
We just crossed 14% this quarter. So even though the market degrew, I'm happy to report that Blue Star's degrowth was lower than the market. I think when you do channel checks, you'll see that as well. Tertiary sales have also been strong. Even our inventory in the field is lower than our competitors. So many things right, which gives us confidence that we should be able to inch up on market share. We're not changing our guidance of 15%. I think we'll keep it at that because we need to get there first before we set the next target.
Understood, Mr. Advani. What's keeping you on the ball there? Because gaining market share in a tough environment is especially difficult. So what are those levers which you're using to stay ahead?
Yeah, so it is our long-term strategy, which we started 4 years ago. It is investing in the product. So product is the king. We believe that we have the market-leading products available that customers want. We invest in R&D, we invest in our supply chain, we backward integrated. We're building everything in-house, which also, by the way, has allowed us to be flexible on our inventory position in the market. So a lot of investment done, we believe, into the business, both the product as well as the delivery mechanism. And that is what is allowing us to win in the market. I think customers, even though they are first-time buyers, they're looking for value, they're looking for credibility. And I think Blue Star is able to give them that in this category where we've been around for 80 years, as you said.
Mr. Advani, where does pricing stand? Because no matter what, competition is there to stay. What is the common trend that you're observing? Are you able to, slightly increase your prices when it comes to the selling pattern, or do you have to be really cautious when it comes to your price increases?
So you may know we raised prices before the beginning of the financial year, April 1. So that was done, which partially helped us in our EBIT that we delivered. We have not rushed to give discounts and clear inventory because, as I mentioned to you, we don't have as much of an inventory problem. So we've been able to keep steady prices. I think in a tough market like this, that itself is a positive. And we're able to command that kind of price position because I think the channel and customers believe that we are a steady price operator. So I think that comes to our benefit in a tough market like this. We're not as nimble to react to market changes with pricing, and I think that's something that's appreciated by the trade.
Got it, sir. So let me ask you a question which is likely going to be the golden question. Margin inch up. You've spoken about it in the past that you're expecting an inch up in margins. You've not given us timelines, but give us a perspective. Directionally, it should go up, of course. Maybe in the next 3 years, if you were to put a number to this, what would that likely number be?
So you're putting me in a tough position, Harsh. I'll put it to you this way. It's about mix of business and then it's about profitability of each business. What I want to convey is that, segment 1 is expected to grow at about 15% a year is what we've been talking about. We expect segment 2, which is the unitary cooling products business, to grow faster. So if that happens, that the unitary cooling products EBIT margin is higher than our B2B business, and therefore we should see that business mix improvement on an aggregate Blue Star basis. Having said that, it's a hyper competitive industry. And as this category grows, there'll continue to be pricing pressure, and therefore we have to keep working on cost management, which is something that Blue Star does well. So net, difficult to give you a number, but we've been looking to improve our EBIT by at least 100 basis points, over the next few years, and we're confident of delivering that.
That 100 basis points is over 7% or 6%?
So this quarter doesn't count. I think we take full year last year as the number because this is just an anomaly. I take last year and then look at improvement.
Okay. In terms of your channel inventory buildup, because that would have happened this particular quarter because of unseasonal monsoon, in two next odd quarters, that should not be a concern, correct?
Yeah, I'll give you some numbers. We're currently holding about 75 days of inventory between our warehouses and our channel. That should have been 45 days in a normal summer. I'm not talking about a blockbuster summer. In a normal summer, we end the summer with about 45 days of inventory. That's about 75. So there's 30 extra days of inventory, which we are not too worried about. We think it'll get cleared out soon. There's a Bureau of Energy Efficiency table change coming January 1, 2026. And that tends to therefore lead to advanced buying of the existing table typically. So between the inventory that will get cleared out and production that will restart, I think we're comfortable with inventory over the next couple of quarters.
So, sir, if I were to look at Blue Star as an investor, right, you're at roughly 12,000 crore of top line at the end of FY25. Let's keep Q1 out. It's a washout quarter.
Yes.
FY26, 27, 28, 15% top line growth. Is that something that one can reasonably expect you to do?
I think so. That would be our, I think that's doable. We would like to do more. We have ambitious plans internally, which may be higher than that. But I think as an investor looking at Blue Star, 15% CAGR is very reasonable.
Any change in the capex guidance that you've given so far? And this is more likely in the backward integration aspect, correct?
So we have three areas of capex. We have backward integration and capacity expansion, which is in manufacturing. We have R&D capex because we are a heavy R&D user, and then we have our digitalization program. So across those three, we expect to spend around 1,000 to 1,200 crores over the next 3 years in capex, which is what we've been doing over the last 3 years. So it's not a further increase, but it is a step change over sort of pre-COVID that you've been seeing.
Completely out of time on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, if you've been watching NDTV Profit through the day, you will know that Donald Trump, the President of the United States, levied an additional 25% tariff on India. The purpose or the reason behind that was because India is buying Russian crude. That's not something that makes Donald Trump very happy. Now, these tariffs don't come into play immediately. India has 21 days to talk to the US and figure things out. At least that is the interpretation. But then everyone's focused on what the implications could be for the Indian equity markets, for the Indian economy, for Indian companies, and ultimately for you, the Indian investor. So that is a question that we're asking on Your Money Matters today. Joining me is Vijay Mantri, investment expert and someone that you've seen quite often on this program. Vijay, thanks so much for taking the time. How much attention are you paying to this, and do you think that individual investors should worry about this?
So two factors. One is that I was reading the book of Neil Chaudhary, Indian Prime Minister. In that book, there's a reference of Mr. Vajpayee conducting nuclear tests in 98-99. And one of the questions was that will US put sanctions against India? And at that time, Bill Clinton was leading the non-proliferation treaty, and he was the president of the United States. But India went ahead with nuclear tests and was sanctions imposed against India. But very interestingly, at that time, Mr. Yashwant Sinha was the finance minister, and Mr. Doval was the NSA. And they came and told PM that we are very comfortable because we have $50 billion of foreign exchange business. There was 98-99, we have a close to $16 billion forex reserve. So, and India is no longer India of 98-99. So that is the one part of the equation. The second part of the equation is, are we looking at selling our real estate? Are we looking at climbing down a business expansion plan? Are we looking at not continuing our investment in insurance or not doing bank FD? Why the entire focus comes on equity market and SIP, where allocation is only 5% of household savings. So there is a one question investors need to ask: why every time you come and look at the equity asset? That is the one thing part. Third part is that no big money ever made on the path of certainty. And in this market, we believe that it is a great market to start relooking, continuing your SIP, relooking more allocation over next 6 to 12 months, because all these uncertainty will disappear. But whenever these kind of situation or challenges come, they look very daunting at that time. But once the event get past, we always regret, past मैंने उस time पैसा डाल दिया होता.
The wisdom of retrospect is flawless. Vijay, to the second point that you make, let me play devil's advocate and argue that the volatility of equity market and prices of shares is significantly higher than the volatility in gold, in real estate, in fixed deposits don't change, and so therefore the tendency, because you are experiencing a loss in that moment, of course it's notional, and if you book it at that moment it becomes real, but the tendency is to feel anxious when you are witnessing that notional loss.
That's why very few people end up making money in the equity. You don't lose money in the gold, you don't lose money in the real estate because of price movement, because your holding period is forever. And patience capital come into these assets really. Unfortunately, patience capital does not come into the equity. When people invest in equity, the expectation is that it is a multi-bagger. The expectation is that it will generate fabulous return. The expectation is that these returns will be linear. Like it will go like FD, it will go at 12 to 15%. And if you come with wrong expectation, and this is the challenge. So if you look at Indian equity market and particularly look at Indian equity mutual fund, which now have more than 30 years track record, fabulous wealth has been created. But I just take one fund's illustration because I track that fund and I work with that fund house in NDTV Flexicap. Now that fund has grown investors' wealth 180 times in last 30 years. And that fund's average NAV fall 10% every 6 months, 20% almost every year, 20% almost every 4 years, and 50% almost every 8 years. If you are coming in equity market and look at the history, but when you look at the history, just don't look at last 1, 3, 5, 10-year return, but also important to look at how this return has arrived, what is the journey. And if this is the kind of money you need to make, then this is the journey you will take, your portfolio will take. There's no other way the wealth in equity will be created.
Okay. At this juncture, given what we know and the kind of uncertainty that's playing out globally, now there are some estimates that suggest, Vijay, that there will be some impact. There will be some impact to economic growth, not to the extent that some people might think, but maybe 30 basis points or 40 basis points. We are still the fastest growing economy in the world, and domestic facing companies, domestic facing businesses are insulated because the Indian economy, let's face it, is more domestic driven than anything else. So would you say that you adjust your investments accordingly just during this period of uncertainty? For example, a pharmaceutical fund that could be impacted by tariffs, if you have an oversized exposure, do you take that into account, or do you say, no, wait, I'm going to take a contrary bet, eventually things will turn around, and when the chips are down, IT for example, when the chips are down, you will invest in that moment so that you get the best price?
So, one of the best sector or thematic investing should be done when the immediate prospects are not looking good and the headline news is all negative. This is what we witnessed in year 2001, 2021 about PSU equity fund, and this is what we witnessed right now we're witnessing in IT consumption. In my opinion, if any investor who have patience, who have like 10 to 20% ability to withdraw some of the volatility, I think value is emerging in healthcare and tech thematic fund. But one need to consult their own asset allocation and decide. So that is the one part. The second part of the equation is that if GDP is going to take a knockoff of maybe 30 basis point or 40 basis point, also remember everything is interlinked. The money is made in the market on the basis of corporate earnings, and corporate earnings dependent on GDP growth. And real estate is also get impacted to that extent. So when your business get impacted, corporate profitability get impacted, and also assume that your real estate portfolio may not deliver kind of return you expected. So everything is actually linked. So I don't think people's expectation will be reset based on the new data. So it just is a passing phase in my opinion, and it is a great time to relook some of the sector which are completely ignored or being completely ignored. Continue with your SIP, and if you have a staying power, increase your allocation over the next 6 to 12 months in Indian equity market.
Since COVID-19, Vijay, people have gotten used to the concept of buy the dip. And we saw this early in the year. I saw a few memes on social media. I saw a few social media posts where people are saying buy the dip, but with what? Because they've already deployed everything. And so when the markets fell after that 10%, they could not deploy because they didn't have dry powder. So would you say that in these volatile times where things can flip on the flip of a coin, do you keep some dry powder ready, available for you to deploy in ideas that you like?
Yeah, the question is that is your money finite, which is like, don't you have monthly earning coming in? Don't you have anything else? So how does people buy real estate and continue to buy gold and continue to put money in deposit? So it's a false narrative being built around that. Where is the money to invest in? People have money, and if you look at average cash holding of Indian investor, there's enough money available on the table, and that's why we have this thousands coming in. I would look at investing and always, keep it very simple. Don't complicate things. Next 3 to 5 year of your household expenses, don't keep in debt and debt-oriented products, and don't take any risk on that. Beyond that, start putting money into equity. But whenever you put money into equity, be mindful that your portfolio may go down 10%, 20%, any point of time. In this market, if you ask me, I don't see beyond double-digit kind of dip happening. And the market may test you for next 6 to 12 months, but that is the beauty of equity investing. Alex, in the beginning of 2025, I put my note that 2025 is going to be year of accumulation. This year will not generate significant returns. And I continue to believe that accumulation phase, if you stay through the accumulation phase, then only you see the growth phase. Else you will not see the growth phase.
Yep, you said it. Vijay, thanks so much for joining in. Appreciate the perspective that you brought today. Keep it simple is the message coming through from Vijay Mantri once again. And 2025 is the year of accumulation. Use this opportunity to build up on your portfolio so that you can reap the dividends down the line. The largest scheme category in the actively managed equity mutual fund space is, and I know that a lot of you know this, but I'm going to spell it out. It's a sectoral and thematic category. It wasn't always the case. This is something that changed last year. It used to be the flexi cap category, but the interest that retail investors have in the sectoral and thematic category is such that it has grown to the proportions that it is at right now. And a lot of people get into these concentrated investments thinking that it's going to give them significant alpha. What we're going to try and do is find out whether this has been the case since COVID-19. And joining me now is Kaustubh Belagpurkar, who's Director of Fund Research at Morningstar India. Kaustubh, thanks so much for taking the time. The first question, of course, is how have these schemes done since COVID-19? That's the operative question.
Yeah. Hi, Alex, and thank you so much for having me in this conversation. Very, very interesting, and I think a very timely conversation to have, because, like you rightly said, the past couple of years we've seen an immense amount of interest in sectoral thematic funds. Mind you, obviously there are various sectors and themes within the space, but this is the largest, about 15% of the overall open-ended active equity AUM as things stand today. So that's a pretty significant chunk, and this wasn't the case a couple of years back, right? So if you just look at 2024 by itself, you had fresh inflows of about 1.55 lakh crores in sectoral thematic funds, both in existing and new fund offers, which have also been quite a few over the past couple of years. So it's been a gush of investor money that's come in, right? But I think obviously the pertinent question to think about is, what have these funds done, and are they suitable for all investors, right? So let's just unpack this, in various segments. So one is obviously when you just think about it, from the start of 2020, just in the previous period to COVID, the number of sectoral thematic funds that existed at that point of time, as opposed to today, it was much smaller numbers. If we just look at the number, then it was about in the ballpark of about 85 funds. And from those 85 funds, if I just purely look at point-to-point returns, right, when we think about how these funds done, from those 85, almost 2/3 of these on a point-to-point performance from 1st January 2020 up until 31st of July 2025, 2/3 of these have outperformed, say, the BSE 500 total return index. So at the face of it, it looks great, right? That you had a good 2/3 chance of getting a sector or theme right amongst the fund bouquet, and you would have made money obviously over a reasonably long time period, about 5.5 years, in which you've seen several market cycles, including the COVID crash of Feb and March 2020, right? But if you break this down, right, so the funds have done what they've done. Have investors actually made money? I think that's a question that's very important to ponder over, because what we've seen, and this is not just an India phenomenon, investors tend to do a lot of revenue mirror driving when it comes to it, because sectors and themes tend to have extremely lumpy returns, right? So even if I look at this last 5.5 year period, different sectors or themes have come to the fore over that period of time. If I again just break that down, if you think about 2020, 2021. Technology was amongst the best performing sectors at that point. Healthcare did really well in 2020 and 24. In the more recent times, you've had the PSU pact, or you've had the cap goods. The infrastructure theme sort of do well over the last couple of years. So sectors and themes come to the fore at different points of time, and investors more often than not find it challenging to get this timing right, because it is hard, right? So I think that is the thing that needs to be kept into context when you think about the success rates over a point-to-point period for sectoral thematic funds.
We'll get into that.
Yeah.
But just to delve a little deeper into this 2/3 number, which is quite substantial. If you actually look at the rolling returns of mid-cap funds, you look at the rolling returns of small-cap funds, and of course this is point-to-point returns, so perhaps the rolling returns will tell you a different story because of the lumpiness of these schemes. But it's not as substantial, right? So the winners in the mid-cap category and the small-cap category are not as substantial. Does that tell you something?
So I think obviously when we're comparing here versus broader market, diversified market benchmark, and when you look at mid caps and small caps, you tend to compare it from the context obviously of that particular capitalization benchmark. So yes, you're right that the success rates have probably been lower. But if I were to compare it against a broader benchmark, if you just think that the BSE 500 was your target segment, then also from a similar lens, you would see that small and mid caps, significant proportion would have outperformed intuitively. I don't have the number on hand, but yeah. But I think a very important thing to point here, right? When you even think about 2/3 that have done well. And this is a study they've been doing for many years, where we break down this outperformance of funds on a monthly time series basis, right? You look at which were those best months of performance for a particular fund. And what we found, and this is a staggering number, right? So you're looking at a 67-month period since 1st of Jan. On an average, only 5 months accounted for the entire outperformance of a sector thematic fund versus the broader benchmark. That means if you as an investor were not invested in those 5 months, which is less than even 10% of the time periods, you would have actually underperformed the BSE 500. So it's very, very hard from a timing perspective to get your entry and exit right in sector thematic funds. And the lumpiness comes in from just these 5 great months of returns over a 5.5 year period.
Which is why what you were saying is that you take this with a pinch of salt, because yes, there's been 2/3 of an outperformance, but investors have not made money. And if somebody heard that in isolation, they'd be like, what? Kaustubh, kya bol raha hai? And they would be like, no, that can't be true. But the point is that if your sector benchmark or if your sector fund has dropped 20% in a month, then you'd have had to have the gumption to hold it through that period of tough time, and then ensure that you held while the stock it was going up as well. And you absolutely need to be correct on both counts, right? On the entry and on the exit, more so than any other diversified fund. Do you agree with that?
Oh, absolutely. I think we all talk about time in the market versus time in the market, but here, in a sense, for sector thematic funds, if you get the timing wrong, and data has shown us that majority of the investors have actually got their entry wrong into these strategies. I'll just take a classic case of, say, technology. I spoke about 2020, 21. You had, I think, the index run up something in excess of 70% each year, right? So staggering returns in that sort of post-COVID period. But the money that came in all post 21, in 22, 23, when we all know IT's gone through its own challenges. So investors came in looking at, kind of the past returns and said, hey, the sector is doing really well, let me come in. But their experience was actually polar opposite to what the funds. So even if I look at a 5-year print of technology funds, they're actually pretty good CAGRs. But what an average investor in those funds would have made would tell a very, very different story. And I think that is the challenge of getting entry and exit into these sectors. Very, very challenging. I think even the best professional money managers will not try to take binary calls on sectors like, and that's why we think that diversified equity funds are such a huge, huge positive for most investors. You're not taking that binary call in a particular sector or theme, right?
Yeah. So, okay. So a few of the questions that I've asked you and that you've shared data for will actually elucidate these points further. So, Kaustubh, I asked you whether there's a significant deviation between the top performing, the worst performing fund in a particular sector. And some of these become so popular that everybody's got a scheme out, right? Obviously, a financial sector fund, a lot of offerings in that, or thematic fund, or a healthcare thematic fund. There are quite a few options to choose from. So has that been something that you've noticed?
Yeah, absolutely, Alex. I think, I wouldn't leave that only to sector funds, but it probably gets a little more exacerbated in sector funds or thematic funds, purely because, it tends to be a little more concentrated. You might have top heavy names. So depending on the way these active managers would weight, some of the benchmark or off benchmark names, you can have significant divergences in, if I just purely looked at, say, the best performing versus, the absolute bottom of the pack, you can have differences over a 5-year period of as significant as even 10, 12% in, several of these sectors. So the experience for investors, even across funds within a sector theme, can be quite dramatic. And I think that's also kind of underpins the point, not just that it's very, very hard to take exposure, but also how do you take exposure becomes the other question that investors need to think about if they're willing to take that exposure in the first place.
Okay. The other question that I asked was whether passive funds have done better. And for me, I've looked at a few of these sectors, and defense is a prime example where the defense index itself has done significantly better than the actively managed fund.
Yeah, and Alex, this is a very interesting sort of question to look at why this is the case, right? So if you think about some of the more, obviously indices are constructed. There is a mechanism, the way it's constructed, and the passive will look to mirror that. But, your index heavyweights, and especially for sector themes, you will tend to have very, very heavy index, top heavy names. So your top 5 constituents would typically be in excess of anywhere between 50 to 75%, depending on the sector of the theme. Whereas an active manager will tend to take obviously off benchmark bets or not take sizable exposure to, say an index heavyweight, which is say 25, 30% in that index by the virtue of the way it's constructed on, a market capitalization basis, right? So that can lead to 2 outcomes, right? So one is if it's a very narrow sector and theme, if the top 2 names in an index do really well. Like for instance, you spoke about the defense index. Obviously, the heavyweights have done very well over the period of time, and their allocation in the index has only gone up. That's where the actives perhaps struggled because they didn't hold that index name in that much of a proportion. But the same can happen on the contrary if the index heavyweights were to underperform over a period of time, right? But in more broader sectors, when I say broader, that there is an opportunity set that lies outside the index heavyweights. Let's take, for example, technology or healthcare. When you look at some of these, you would see that actually the active managers have added a fair bit of alpha because they could have gone into segments, maybe down the capitalization curve or weighted some of the index names differently. Yeah. So I think it needs to be looked at from the context of that and not just painting it in an active versus passive debate because it could be very different exposures that you could gain depending on the narrowness or the broad sort of sector theme that comes into play.
So we have a few more minutes to talk about these very important subjects, so we'll have to run through it. The important question, has a SIP approach worked? So a SIP approach in thematic sector funds?
Right. Okay, now I'm going to play a little bit of devil's advocate because obviously we love SIPs, right? Yeah. And it's been the backbone of investor sort of investing. But when I think about a SIP approach with sector thematic funds, while it's probably still the best way to take exposure to sector thematics because we spoke about the lumpy nature, so you avoid the timing risk. But when you look at the SIP returns of sector thematics, because of this lumpiness, and you compare it with some of the well-managed diversified equity funds, you'd actually see that the SIP returns are almost tending towards some of these diversified equity funds, purely because you've had this crazy months of volatility in between, so you'd come at different varying entry points, whereas the diversified equity fund will have a much more balanced approach, and you'll have much more better outcomes from your SIP, even though the point-to-point returns for that sector or theme look much better, say on a 5-year basis, right? So I think that really brings to point that how do you take exposure? And to my mind, like I said, probably most investors are better off just sipping into diversified equity funds, your outcome won't be too different from a sector thematic. You only take exposure to a sector thematic if you really want to express a very specific view where you can get the entry and exit right, because that is very crucial. Right? You need
tactical.
you come in early, and get out, when it's at high.
Yeah, so tactical allocation. Is there a way to understand whether people have made money in sector thematic funds? You've actually identified investor return. How do you get that, and what does it tell you?
Yeah. So the investor return is a very powerful study which tells you that, what is the return that an average rupee invested in the fund has made, right? Because if a fund, say, for instance, returns 30% over a 5-year period, only the investor who came in on day 1 and stayed at the end of day 5 will make that 30% return. But like I said, investors come at different points of time. They often come after the good time for a fund has already delivered its returns, and they actually get suboptimal returns. So what we saw, and this is again a global phenomena, that investor returns in very narrow sector thematic funds actually is significant. So if you look at some of the popular funds that have done well, and this is data which is slightly dated, which is end of last year, so December 24. But when you see two funds, we looked at a technology fund and infrastructure fund, the investor gap. So the fund, for instance, a technology fund did about close to 30% CAGR over a 5-year period. But the average investor made only 17.8%. So that's a staggering 12% sort of gap between the fund return and the investor return. In fact, in the infrastructure fund, it was almost 17% gap on a 35%. So half the investor returns were lost because investors just made poorly timed entry and exits, and they lost most of the fund returns. So while the fund returns on paper look great, investors haven't had, large part of investors haven't had the same experience in these strategies.
And so the trick, therefore, is to stay invested and also to time your exit as hard as that is to do. Kaustubh, thanks so much for joining me today. Important data points that we've laid out, and hopefully that will help people make the right investment decisions. Thanks so much for taking the time.
Thank you.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for watching. This is NDTV Profit.
अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
Behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
I'm here joined by Dr. Ashutosh Raghuvanshi, who's the MD and CEO of Fortis Healthcare. Dr. Raghuvanshi, welcome to the show and pleasure to have you and congratulations on a good set of numbers. So,
Thank you. Thank you for having me.
Thank you so much. Pleasure to have you. My first question would be, you've seen a strong margin performance when it comes to Q1 FY26. What's your outlook for maintaining or further enhancing, these margins in the coming quarter, especially considering the new O&M agreement that you have signed? Because I remember you talked about, a 2% growth when it comes to EBITDA margin. So your view on that?
Yes, so our performance has continuously improved, and both the volumes as well as the realization have been good. As you pointed out, the RPOB as well as the occupancy saw growth. So these two factors have been main factors to improve our performance. But I think this performance has been consistent for last many quarters and in line with our commentary on this. So we expect this to continue. As far as the O&M of clinical 700 beds, which we are going to be managing, is going to be accretive. That revenue we will not be taking, but there would be an O&M fee, which would be 3% of their top line. So that would be accretive to our bottom line.
Understood. So on the margin side, so the margins were at 22.6%. Now, any scope of further enhancing these margins when it comes to whole year FY26, or I would say, what is the margin outlook that you have for FY26?
Yes, so we have consistently said that every year we expect 2 to 3% of increase in our EBITDA margin till we reach a level of about 25% or so. So there is a further scope of improvement which we will get, because this year we are also adding about 900 capacity bed, which includes the newly acquired hospital in Jalandhar, which is about 283 beds. And these beds, at least 50% of them will be operationalized within this year. So that will also contribute significantly to both our top line as well as bottom line. But since some of these capacities are going to be new, so we expect that gradually over the next 1 or 2 years, we should reach the figure of 25%.
Understood. Dr. Raghuvanshi, when it comes to RPOB, it grew 10.2% and the occupancy also increased to 69%. Now, what specific initiatives or the patient mix shift contributed to most of the RPOB growth, number one? And what is the target occupancy when it comes to FY26? Because I remember you had a target of 70 to 71% of occupancy. So your outlook when it comes to occupancy and also RPOB?
Yes. So RPOB mainly grew because of the case mix change. If you would look at the different segment of service lines in our hospitals, oncology has grown much faster than other specialties, though all specialties have grown. But oncology has become the the largest of the service offerings. And that has typically a higher RPOB, and that has led to a case mix change, which is favorable towards increasing the RPOB. So we don't expect the RPOB to increase in the same manner in future. It will get slightly moderated. However, the occupancy numbers we are targeting, as we had said earlier, above 70%. So hopefully we should achieve that within next 2 quarters.
Sir, any reason for moderation of RPOB growth?
So because right now we are seeing a case mix change. And we have not done any significant pricing interventions, and we believe that in healthcare, pricing changes is the lever which should be used as a last resort. So we are only basing our RPOB growth on the case mix change. So more complex cases, we are doing more robotic surgeries, we are doing more complex procedures.
Professors, faculties, and my brilliant young friends. It is both a privilege and a responsibility to be here today at IIM Lucknow. A privilege because I am speaking at an institute that represents the finest of among India's intellectual capital. A responsibility because I am not just speaking to students of management. I am speaking to the potential architects of the new India. My dear students, जब मैं आपको देखता हूँ तो मुझे संभावना दिखाई देती है। एक विकसित भारत की संभावना। मुझे एक सपना नजर आता है, सर्वश्रेष्ठ भारत का सपना, और मुझे विश्वास महसूस होता है उस भारत पर विश्वास जिसे कोई रोक नहीं सकता। लेकिन ये संभावना, ये सपना और ये विश्वास आज की मुद्रा नहीं है, ये भविष्य का भरोसा है। And it is about this belief in the future that I want to speak to you. My journey has taught me that the future never unfolds as neatly as it appears in a classrooms. The future is messy, uncertain, and often brutal. And this is what you must be prepared to face. I have learned and still continue to learn that the real world is made up of moments that have no precedents. And when these unprecedented moments come, where the data is ambiguous, where the business models break down, and where the road ahead is unmarked, I have come to realize that success is not defined by how well you studied your business cases. It's defined by you being able to make your own story a case study. History is not made by how well we execute existing models. It is made by our courage and leadership to build a new pathways. वक्त की रेत पर चलने से इतिहास नहीं बनते। इतिहास वो बनाते हैं जो अपनी राह खुद तराशते हैं। So I stand before you today not to hand you a map, but to invite you to redraw the map itself, to challenge your very definition of leadership, to urge you to adopt a philosophy that dares to choose conviction over caution, consequence over comfort, creation over conformity, and conscience over convenience. ये सिर्फ नारे नहीं है, ये वो फैसले हैं जो मेरी असली लड़ाइयों, साहसी दावों और बेहद नीची क्षणों से आकार पाए हैं। और अब मैं आपको हर एक फैसले के पीछे की कहानी सुनाऊंगा, वो जो मेरी राह की अग्नि परीक्षा बने और मेरी पहचान गढ़ी। My dear students, looking back, I can tell you that every meaningful journey I have taken has almost always faced moments where my resources ran dry and my support systems failed. Only one thing always remained with me: the burning convictions that my bold dreams were worth the struggle. I have always believed that anything worthwhile achieving will test you. It will strip away your safety nets, challenge your assumptions, and ask you to bet on yourself when no one else will. But then I've also learned that the most extraordinary lives are never built on easy choices. They are built with comfort being surrendered in the search for meaning. असली विकास वो नहीं जो सुविधा में पले, असली विकास वो जो संघर्ष में तपे। Real growth happens not when the path is clear, but when you choose to keep searching and walking, even when the destination seems beyond your reach. It is in those moments when passion becomes your guide and purpose becomes your strength that you begin to walk not with certainty but with faith. not because the path is visible, but because the dream is. क्योंकि हर महान निर्माण की नींव रखी जाती है एक ऐसे सपने से जिसे कोई देख नहीं सका और एक ऐसे विश्वास से जिसे कोई समझ नहीं पाया. So let me walk you through some of the very moments in my life. My entrepreneurship journey began at the age of 16 when I left my home in Ahmedabad and moved to Mumbai to work in the diamond trading business. It was my first real exposure to risk, relationships, and the power of global networks. In about 3 years, I was called back to Ahmedabad to help manage my brother's polymer factory. It was here that I first understood the importance of scale, logistics, and end-to-end supply chains. These insights would go on to shape my entire approach to business. Then came a moment of national transformations that put India on a different growth trajectory. As India began to liberalize under Prime Ministers Sri Rajiv Gandhi and Sri Narasimha Rao, I saw a once-in-a-generation's opportunity unfolding in what until then had mostly been a supply-constrained market. I made a massive bet and stepped into a trading business with aim of building India's largest trading house. We did so in a matter of just 3 years, and by 1994, at the age of 32, I had taken the company public. Today, that company is Adani Enterprises. But even with the success in 1994, I had a realization that I did not own any physical assets. And in a country at the start of an infrastructure revolution, it felt to me like an opportunity waiting to be corrected. I therefore decided then that my next step would not be just about trading, it would be about building infrastructures and participating in India's growth story. But when I first announced my intention to build a port, most people thought I had lost my mind. Not just because I had never laid a single brick in my life, but because I chose to build the port in Mundra, one of India's largest marshland in the Kutch region. I still recall that when I presented the idea, some of the bankers laughed and asked, "Mr. Adani, how do you expect us to finance a land that is under the water. And they were not wrong. Mundra had no access, no industries, no precedent. And that is precisely where my first philosophy of conviction over caution came into play. Because my convictions was not about asking the bankers to fund a piece of land. I was asking them to fund a possibility no one had explored. Maps will only take you where someone has already been. But to build something truly new, you do not need a map. You need a compass that points to the possibilities. दिशाएं केवल वहां तक ले जाती है जहां कदमों के निशान पहले से हो, लेकिन दृष्टि वहां ले जाती है जहां किसी की कल्पना भी न पहुंची हो. And my compass of conviction pointed me to Mundra. Today that marshland is India's largest commercial port. And Mundra has gone on to become a nucleus that anchors our network of 21 ports and terminals spread across 17 domestic and 4 international locations. Adani Ports now handles nearly 30% of India's seaborne cargo and also powers India's largest industrial special economic zone, spanning over 40,000 acres of land. Looking back, I can tell you that the first project is always the hardest because it demands not just skill but belief. But once that first impossible dream is brought to life, something shifts. You stop asking, can it be done? And start asking, what else is waiting to be built? जब दुनिया कहे कि यह संभव नहीं है, वहीं से इतिहास रचने की कहानी शुरू होती है. For me, Mundra became the start of the journey that shaped the Adani Group, where complexity was not my challenge, it was my calling. A calling where the extraordinary was not the exceptions, it was the principle. That confidence led me next to Queensland, Australia. Queensland was the manifestations of my second philosophy, consequence over comfort. It was not that India did not have a coal, but India was short of good quality of coal. Hence, this project was not born out of ambition for coal. It was born out of a consequence to provide India with a better quality coal It was born out of a consequence to reduce carbon emission as well as to secure India's energy independence. Little did we realize then that the Carmichael coal mine would become one of the most contested energy projects of this century. And this was not even in our own backyard. We are building in Australia, in a country where we had no political capital, no historical presence, and no institutional support. The resistance was relentless. Global environmental lobby groups mounted a massive campaigns against us by organizing protests across continents. International media made us a villain. Banks withdrew financing under their pressures. Insurance companies refused to underwrite us. Activists blocked the roads, filed legal challenges, and even tried to physically disrupt our operations. We were accused in the courtrooms, debated in parliaments, and criticized in headlines. Our people on the ground faced harassment. Our permits were delayed. Our railway lines questioned. And our right to even exist on that land was challenged. Everywhere we turned, the message was clear, back up. But we did not. And today, our Carmichael project powers industries with a cleaner coal, support several thousands of livelihood in Australia, and is built on Indo-Australian corridor that is both commercial and strategic. For me, the Carmichael coal mine has never been about being a monument to coal, as we had been accused of. It stands as a monument to our resilience. It stands as a monument to the energy security of our nation. And it stands as a monument to our choice of choosing consequence over comfort. And it is with this resilience that I turn to Khavda, the testimony of my third philosophy of a creation over conformity. If Mundra was a marshy land under saline water, Khavda was a saline water under marshy land. In fact, Khavda is such a desert that I was told that even camels refuse to walk on it. And our initial studies show it to be impossible to build any stable structure on this land, let alone the massive 700-ton wind turbine that we had planned. And yet, we declared that we would build the world's largest single-site renewable energy park spread over 500 square kilometers, generating 30 gigawatt of green power at these very locations. Once again, we were told impossible, unlivable, unbuildable. But we choose not to believe in the limits and instead adapt the desert and create from our own convictions. बंजर वो नहीं जो सूखा है, बंजर वो है जहाँ कोई सपना न बोया हो। दृष्टि है तो वही धरती जो कल निराशा थी आज भविष्य की सबसे बड़ी उम्मीद बन सकती है। Because a Khavda for me was never just about building in the desert. It was about reimagining what the desert could become. And today, I can proudly say that we have already commissioned the first 5 gigawatt of a green power and are well on our way to setting a global benchmark in an energy transition that will see us produce the world's least expensive green electron. Finally, came the hardest project of all, redeveloping the slums of a Dharavi. Dharavi is Asia's largest slum. It is also one of the world's most complex social, economic, and political ecosystems. Every time I flew into Mumbai, the slums below disturbed my conscience because no nation can truly rise when so many of its people live without dignity. Everyone told me Dharavi is too political, it is too risky, it is unmanageable. And that is precisely why I said we must do it. And redeveloping Dharavi is not about laying bricks or yet another slum redevelopment project. It is about rebuilding dignity for those 1 million people who helped build Mumbai but never benefited from it. विकास वही सच्चा है जो मानवता की बुनियाद पर खड़ा हो, नहीं तो वह केवल विस्तार है। मेरे लिए धारावी ईंट और सीमेंट का प्रोजेक्ट नहीं है, यह सुविधा नहीं संवेदनशीलता का प्रोजेक्ट है। यह हमारे राष्ट्र के आत्मा के सामने रखा गया एक आईना है जो हमसे अंतिम प्रश्न पूछता है कि क्या तुम आके फेर लोगे या आगे बढ़कर हमारा साथ दोगे? Will you turn your eyes away or will you step forward and show that you care? All these projects have now become our playbook at Adani, a playbook of our grit, our determinations, our purpose, our attitude and our beliefs. अगर मुंद्रा था प्रकृति का चुनौती देने का सपना और ऑस्ट्रेलिया था दबाव के तूफान में अटल रहने का वचन, अगर खावड़ा था वीराने में जीवन के दीप जलाने का संकल्प, तो धारावी है जहां हमने इंसानियत की आवाज़ को सुना। My dear friends, let me now switch gears and speak about the elephant in the college rooms of today. In this age of artificial intelligence, algorithmic decision making, and global uncertainty, what is the true value of education? Frameworks that you study, like a DCF model, Porter's 5 forces, and a SWOT analysis, have their place in the world of business. But these are built on assumptions, how to minimize risk, but not maximize the future, because the future will never belong to those who play it safe. It belongs to those who maximize possibility, and maximizing possibility means stepping into unknown territory, building before the market signals it's ready, and trusting instinct when the data runs dry. Because that is how the future is shaped, not through predictions, but through courage. Our acts, from the marshland of Mundra to the contested lands of Australia, from the dry salt plains of Khavda to the denied gullies of Dharavi, these are not just a business venture. They are acts of imaginations, of refusing to accept the world as it is and daring to see it as it could be. Business frameworks offer you a canvas pre-measured, pre-marked and safe. But India does not need more painters who fill in the blanks. It needs those who can question the canvas itself, those who can paint with colors not yet imagined. And this, right now, is your moment, because India is the canvas that is standing at the edge of something extraordinary. The winds of destiny are on our back, and the lift is coming from four unstoppable forces. First is a demographic. We are the youngest, hungriest, and most ambitious working population on the planet. A billion dreams ready to build. Second, demand. We are racing to become the third largest economy by 2030, not just by consuming, but by creating markets for the world. Third, digital infrastructures. No country has built what we have like Aadhaar, UPI and ONDC. These are not just the platforms. These are launchpad for inclusion, innovation and scale. And fourth, domestic capital. For the first time in our history, Indian money is backing Indian ideas with courage, conviction, and an urgency we have never seen. What I can state with confidence is that your most productive years will coincide with India's most powerful years. Your career and our country will rise together. You will not be looking at a $5 trillion or $10 trillion economy. You will be looking at an India that would be a $25 trillion powerhouse by 2050. The global center of gravity will shift, and it will be towards you, towards India. And while you may have studied from books authored across the world, remember that there is something deeper and something very Indian that no textbook can ever teach you. In a world fractured by a war and torn by the hunger for dominance, India stands tall by its restraint. Where others impose, India uplifts. Where others take, India gives. Quietly, consistently, and with a dignity. No nation can claim this moral high ground with the authenticity of India. And you, the children of our nation, must carry forward this responsibility. Learn from the world, yes, but never let the world define you. You are not just a student of globalizations. You are the children of our civilizations. So here is my call to action. First, choose character over cynicism. The world will generally tell you, don't get involved. Don't care too much. Just look out for yourself. But that is not who you are. When you see something wrong, feel it. And when you feel it, face it. And when you face it, fight it. I did so on Dharavi. Because character is about refusing to stay silent when silence feels safer. Your character is what will be a fundamental to your ability to stand up and fight for your beliefs. Second, choose contribution over convenience. The world will ask you, where can you succeed the most? But ask yourself instead, where am I needed the most? Go where the problems are hard, where the odds are long, where others hesitate, and make your mark there. I did so in Khavda. Because true purpose exists not where the things are easy, but where your effort can create a real change. This is the attitude that will allow you to build what has never been built before. And third, choose courage over comfort. Your talent will open many doors, and therein lies the challenge. The safe job, the high salary, the well-lit path, all of this will be within your reach. But the easy road rarely builds extraordinary lives. It is the bold path, the one filled with risk and resistance, that shapes the leader the world remember. I did so in Australia. So don't just choose what feels secure. Choose what makes you come alive. This is the only way you can look back and have no regrets about the path you walked. And so, in closing, my young friends, let your journey prove that dreams born in Indian soil can shape the world. बहुत से भारतीयों ने विदेश में सपने पूरे किए। अब समय आ गया कि भारत की मिट्टी में जन्म लिए हुए सपने भारत में ही साकार हो। फॉर इंडिया, इन इंडिया, विथ इंडिया। क्योंकि भारत कोई प्रश्न नहीं जिसे तुम्हें हल करना है। भारत वह उत्तर है जिसे तुम्हारे माध्यम से दुनिया तक पहुंचाना है। यह वही उत्तर है जो बुद्ध की करुणा में था, विवेकानंद की वाणी में से जगा और गांधी के सत्य में चला। यह वो भूमि है जहाँ विचारों ने धर्म का रूप लिया और आत्मा ने राष्ट्र का स्वरूप। भारत एक जीवंत चेतना है और अब ये चेतना तुम्हें पुकार रही है, यह कहकर कि उसे जियो, उसे गढ़ो और उसे गौरव बनाओ। सो व्हेन द वर्ल्ड आस्क वेयर इज द फ्यूचर बीइंग बिल्ट, let your proud answer be here in India. जाओ, निर्माण करो, नेतृत्व करो और गर्जना करो। भारत तुम्हें पुकार रहा है। इंडिया इज कॉलिंग यू। धन्यवाद। थैंक यू। जय हिंद।
अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is Parth Jindal, MD of JSW Cement. Parth, your IPO is coming on 11th. Can you take us through the entire proceeds which you're going to raise? It's the 3,600 crore IPO, and I think the second one in the last couple of years after JSW Infra, which came out with an IPO. How are you going to use the proceeds?
Sure. So the IPO opens on the 7th and closes on the 11th. And like you rightly said, we're raising 3,600 crores. 2,000 crores is an offer for sale where the private equity investors in JSW Cement, Apollo, Synergy Capital as well as State Bank of India would be partially offloading their stake. And the 1,600 crores is getting infused into the business as primary. We've disclosed that about 520 crores of that is going for debt repayment. About 800 crores of that is going towards building our integrated unit in North India at Nagaur in Rajasthan. And the balance is being used for general corporate purposes. So the purpose of this IPO is really to enter the North Indian market as well as to become a pan-India cement player. And this is the first step in our journey from 20 million tons where we are today to 42 million tons, which we would like to get to over the next 3 to 5 years.
Do you see this IPO being also an exit for some of the investors who came in 2021? Because your valuations have more than doubled since the time they came in. I think, if I'm not wrong, 1,600 crores for 18-19%, and now we are looking at 19,500 crores for the upper band which is there. So is that also one of the reasons?
Yeah, so the upper band is at 20,040 crores, and you're right. They came in at a lower valuation, and they would be partially exiting, but they will still retain about 7% of the company even after the IPO. So yes, every fund has its strategy. So I'm sure they are looking at they are partially exiting, and partially they would remain in the business. And they came in at a very timely time for JSW Cement. That 1,600 crores that they invested in 2021 has really allowed us to expand and become the 20.6 million ton company that we are today. So we'll always remain grateful for their participation, because without the capital that they provided in 2021, we would not be where we are today.
Do you see the environment also very challenging because there's a consolidation happening? Two major players are emerging, and you're also one of them which has come in the last 10 years. And there's a hyper competition which is now for consolidation as well as for market space. Do you see that as a big challenge for you as you look to get into the northern markets?
No, I think there is no doubt that the number one and number two players are extremely strong. In fact, a bunch of the cement companies are very strong, whether you look at Ultratech, you look at Adani, you look at Dalmias, you look at Shree Cement, you can look at JK Cement, Ramco, Nuvoco. Everyone is extremely strong, aggressive. Many of the companies that I mentioned have no debt on their books, and all are expanding. So in this backdrop, yes, it is challenging to be a new player. It is challenging to grow in this market, and it is challenging to take market share. But I think we bring a lot of differentiation to the industry because we are fully backward integrated. The waste product that comes out of the steel making process, the waste product that comes out of the thermal power making process, that is our raw material. So the blast furnace slag or the fly ash, synergies are there with the group. We're also able to leverage the JSW infrastructure, ports and rail facilities to lower our logistics cost. And the JSW Steel sales and marketing and distribution network, because TMT rods and cement are always sold together, and hence we are able to leverage the power of the JSW Group brand and the various synergies that I spoke about. So this gives us a competitive edge over our competition, whether it's in distribution, whether it's in raw material cost, whether it's in manufacturing, setting up new capacities cost. All of our numbers are substantially lower than our industry peers, and hence we are able to expand and grow. So we are very bullish. I am very bullish of the growth path that this company is on. We have been the fastest growing cement company over the last 10 years. And I expect us to continue to remain the fastest growing cement company over the next 10 years.
No, the reason why I was asking this question was, you have strategic advantages with respect to group companies, and that brings in synergies for you. But at the same time, when we saw in FY25, pricing was depressed, volumes were not growing. We saw your cash flow from operations dipping from 1100. Your EBITDA came down from 1100 to roughly around 800 odd 864 crores, which came down. So the sensitivity to the external environment seems to be very high for your cash flow from operations.
Yeah, of course. I think, apples to apples, given what happened in the industry last year, relatively JSW Cement did much better because we have the strength of the group, strength of GGBS. But having said that, we are present in as of now, we are present only in 3 regions: the south, the east, and the west. So if there is heightened competition or heightened volatility in any one of these 3 regions, that impacts JSW Cement. And hence why we are looking at expanding into the north and into the central, so that as a company we are naturally hedged. If the price in one geography is depressed, it won't have a significant impact on our overall performance because the other geographies will do well. And that's what we saw with some of the pan-India players last year. Even though the regional players suffered, some of the pan-India players who had higher presence in the north or central, they did extremely well. And that's why as a company our strategy is to have 2 planks. For the cement side, be a pan-India player and continue to focus on penetration and volume growth of GGBS, where we are the clear market share leader.
And that's also an advantage for you in that sense, because that's a unique product, because you have a market share of 84% or in that market there. But do you see that can be replicated in the northern markets when you expand from 20 million odd to 41.8? That's the plan over the 3 to 4 years for you. Do you think that you'll be able to replicate the same success there?
Yeah, so GGBS as a product, we will continue to remain focused in the existing geographies only, which is the south, the west, and the east. We have no plans of taking GGBS to the north or to the central part of India because there are no steel plants in these parts of India. So there our strategy will be purely conventional cement strategy, where we will be making fly ash based cement, whereas we are very bullish on the growth potential of GGBS within the existing geographies itself. So while we are expanding from 20.6 million to 42 million, roughly about 8 million tons of this expansion is dedicated to GGBS, which would be happening in the zones of the west to cater to the MMR region, as well as in the south, where we will be catering to the growth of Andhra Pradesh, Karnataka, Tamil Nadu, Kerala, and Karnataka.
How do you see the entire environment with respect to volume pickup in southern market and the western market, and the pricing? Because both of them saw impact of pricing and volume last year.
I think last year was an aberration. The volume growth was only 1% in our geographies, and a large part of that was due to the general election being there, as well as a series of state elections being there. So the political uncertainty or the time taken for the new government to actually form and establish and restart government infrastructure took a little bit of time, and it's only from December of 2024 that we really saw government infrastructure spending pick up again. This year it's a more stable environment, and the start has been very strong, both as on the volume front as well as on the price front. We saw recovery. Volume growth, in our geographies has been about 4%. Whereas pan-India has been about 5%. I expect all India cement demand to grow at about 6 to 7% this year. Whereas prices have recovered. So the lows of FY25 have gone away, and there's been a
8% odd.
Last year prices dropped nearly 10%. We've seen prices recover.
Fully recovered?
It's fully recovered. It's fully recovered. In some markets, it's gone even above FY24 levels. So we see stability, and I'm very confident with the great monsoons that we've had, that the second half of the year will be even stronger, given good government spending, good focus, as well as great monsoon. So I expect that's why I expect the first half I expect 4% sort of a growth, but I expect all year growth to be around 6 to 7. So about 8 to 9% growth I expect in the second half of the year.
from 21 million tons to 41.8, you want to expand over the next 3 to 4 years, and that would need a lot of cash flows and maybe debt on the books as you head towards that. How do you plan to bring in the cash and the debt? Because your leverage is already at 3.2, if I'm not wrong. So how do you plan to do that?
Yeah, if you look at our overall leverage of our 4,200 crores, about 1,500 crores of that is already gone towards our expansion projects. We're getting 1,600 crores by way of this IPO.
Yeah.
So that was going to really help us fuel this expansion. Plus, over the next 3 to 4 years, there are going to be substantial internal accruals that come. So our expansion plans are going to be funded by a mix of internal accruals as well as debt. At the same time, we don't want our net debt to EBITDA post IPO will drop to about 2.57. We want our net debt to our goal as an organization is to keep our net debt in and around 2.5 times over the medium term. So the way we'll be able to manage that is because of the improved internal accruals that we are projecting to generate through these projects.
And the two line items which are there in expenses, one being the fair value impact and the other being the ESOP charges, will that go off from FY26 onwards, and that will improve your EBITDA as well in that sense?
It won't have an impact on our EBITDA, but it'll definitely have an impact on our profitability, on our PAT.
Yeah.
And
because you were loss making in FY25.
Yes, both these charges go away from the time we IPO.
And how do you look at the volume growth? You give me a brief idea about 6 to 8% of volume growth for the industry.
Yep.
Does this IPO also brings in the ability to have more currency in terms of any expansion or capital that is required going forward?
Yeah, definitely. I think this gives us a lot of flexibility. It allows us to compete for any acquisition if any such opportunity comes. But like I mentioned earlier, the cement industry is filled with very strong players, entrenched and cash-rich players who have stronger balance sheets than JSW Cement has. And as a result, any acquisition fight would be very expensive for JSW Cement. So for the medium term, we are very focused on our organic growth journey, which is to grow from 20.6 million to 42. We are not considering any acquisitions for the medium term.
But the group as a whole is very aggressive in acquisitions, right? And you were saying that I'm focused more on organic. Why is that actually? And you've been very quiet in the inorganic front in the last 2.5 years when there has been a lot of inorganic activities happening in this sector. Why is that actually?
Yeah, I mean, I mentioned the reasons. I think it's difficult to compete for JSW Cement with some of the larger players. While as a group we are very ambitious and we are very aggressive, if you look at the acquisitions that we have made, we've always made it based on the strength of that company's balance sheet. So when JSW Steel acquires something, it's because JSW Steel balance sheet can acquire. Similarly energy, similarly infrastructure. Paint was the first time where we acquired a bigger company with group support.
Yes.
But that was a very big opportunity which we didn't want to lose out on. We tried the same in cement with the Wholesome acquisition when we put in a bid. But that was again not JSW Cement acquiring it, it was the group acquiring it. Now when it is, when I am building this business and I'm on my own, I can always go to the group if some very exciting opportunity comes. But as of now, there's no exciting opportunity in my mind on the anvil.
Because Mr. Sergeant General is a very aggressive person from a business and expansion point of view, and we are seeing some of the businesses also taking that outlook. But cement has been very quiet in that sense. That's one of the reasons why. Now, finally, my question is on the valuation part of it. You're coming at this around 20,000 odd crores valuation. How do you put this valuation in perspective for the investors? Because from a top line point of view and the EV bar EBITDA multiple, you're coming almost at par or slightly expensive to the existing players which are there, the top tier 4 or 5 players. How do you put that into perspective?
No, I think I wouldn't like to make any comment on that. I think the individual investors, the retail investors and the HNIs as well as the qualified institutional buyers. We have seen a lot of interest in this company and everyone should make their own decision. What I can say is that we will be working very hard and double time to try and make this company a very big success like some of the other JSW group companies, and each investor should read our documents and take their own decision.
Do you think there's enough on the table for them to make money on listing? Because you will be listing a day prior to the Independence Day, so will there be enough money on the table for them?
I mean, as the largest shareholder of this business, we are very excited about the future, and that is why in the offer for sale, the family is not giving up even one share, because we believe that this company is a very exciting company to be a part of.
Parth, thank you very much for joining us today on NDTV Profit.
Thank you very much. Thank you.
भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome. Good afternoon. You're watching Market Express and I'm your host Malika Mishra. Let's get straight into the show. Markets shrug off Trump's tariff threats, end the day in the positive territory. HDFC Bank, Eternal, Hero MotoCorp contribute the most to the indices. HUL and M&M amongst the top sectoral loser. Nifty manages to end near day's high. Sectoral action remains mixed. Nifty, Media and IT end as the top sectoral gainers. Bitter day for the Nifty Defense and Realty. US President Donald Trump imposed a 50% tariff on Indian goods, apparels, textiles, diamonds and chemicals face the biggest hit. Knitted apparel exports could see a 63.9% tariff. Textiles and diamonds also face over 50% duties. The tariff effective August 27 targets India's Russian oil imports. Indian exporters brace for a 40 to 50% drop in US shipments. Sending a strong message a day after US President Donald Trump escalates the tariff war against India, Prime Minister Narendra Modi emphasizes that India will never compromise the interests of its farmers and fishermen. The sharpest minds weighed in on US President Donald Trump's 25% tariff, which shook the markets today. Nilesh Shah of Kotak AMC said it is fatal to be America's friend. Markets expect a trade deal as US-India interests align. Tariffs effective August 27 target India's Russian oil trade. Shah predicts market volatility but hopes for negotiations. India's economy faces risks from global trade tensions. Trent delivered a strong Q1 FY26 with standalone net profit up 24% YOY, beating estimates of 405 crore. Revenue grew 20%, slightly below the 20% guidance, reflecting a multi-quarter low. EBITDA surged 37% with margins expanding to 17%, driven by inventory provision reversals, low employee costs, technology-driven efficiencies and reduced rental expenses. Fashion segment like-for-like growth slowed to low single digits from mid-single digits in Q4. Store additions were below expectations. Trent's Q1 FY26 results with a 23% YOY net profit rose and 20% revenue growth drew varied brokerage reactions. Citi maintained a buy rating but cut its target price to 7,150, citing moderated like-for-like growth and a 0 to 2% EBITDA estimate reduction. Morgan Stanley is overweight with a 6,359 rupee target, sees the slowdown as a strategic move, emphasizing margin gains. Jefferies holding at 6,000 notes flat unit EBITDA but questions a 7% staff cost drop despite 30% retail expansion. Bajaj Auto reported a 5% YOY increase in Q1 of FY26 standalone net profit, beating estimates of 2,050 crore rupees. Revenue grew 5%, driven by 14% export growth and double-digit gains in premium motorcycles, commercial vehicles and Chetak electric scooters. EBITDA rose 3%, but margins dipped to 20% due to lower dollar realization and rare earth magnet supply disruptions. Total sales edged up 1%, with domestic two-wheeler sales down 9% YOY, reflecting 8 months of flat to negative growth. Jefferies maintained a hold rating on Bajaj Auto with an 8,000 rupee target, implying an 18% downside post a subdued but in line